Come on, you know it, can you feel it? We got some things to talk about. Remarking, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Morning.
Good morning. Good morning to everyone. How's everybody doing this morning?
Good. Nikki, how's your bracket?
The brackets are good. I only did one bracket with my girlfriend's family, and I'm in first place, so I feel bad.
Ooh, rookie.
I did.
No.
I know. I told her, I was like, I don't want to be in this. I don't want to win this.
Rookie move.
It was not. It was
Wait,
not.
Why is it a rookie
You
move?
gotta let the dad win a little bit, or the brother win a little bit, or the sister win a little bit. You can't. You don't want to come in last, but you want in the middle.
I thought Batista didn't fall on their swords.
If it was a free, like if they didn't have any money on the line, I would do it. But it's a $10 entry, so like if I gotta collect, $100 from Michaela's sister, it would be a bad, that's just like I don't want that. I would rather. I've already paid her the buy-in, so I don't want it back. I just want it to be done. So that's the bracket. Our bets. I've been given mixed signals. So I thought the Robin Maria strategy included the unders for the first half. I've been told they don't. Over the last 2 years, they've been quite profitable.
Oh.
This year, not so much.
So you had a false assumption going into this.
Yes, but it was rooted in positive outcomes because of the last 2 years. So it was a false assumption with positive outcomes. So I don't know how to approach the situation now. What I've done is that for Friday, we're only going to do the game unders, which have been good.
So how many units did you cost us this year? Is basically what
I
need to know.
I will say, when I was providing my updates to my
partners,
I don't know. Partners is probably too generous of a word. I feel like it's
because you fronted the money.
Well, no. Time out. You can correct me if I'm wrong, Nikki. You can add anything. Important factor. You fronted the money. Important factor. You made the bets.
Yes.
Important factor. You shopped the bets to get the bet. Like you went to different exchanges,
yes,
in the blink of an eye to get the best fill for you. Did your fiduciary responsibility, to your customers, by going to multiple exchanges, and you keep us abreast of all the action that's happening and how we're doing.
So essentially, I do just about everything. It's like I'm held captive. Like I would not call you partners. I would call you like captors.
Okay.
But yes,
well, what you like.
Yeah, whatever.
I see you stare. I see you're kind of stumbling around for a very simple answer on a spreadsheet, which I know you have because I've seen the spreadsheet.
We're about a scratch.
It's not the question I asked you. God, all my kids don't answer my questions. How many units did you cost us by doing this morning?
No.
This half here.
Oh no, Nikki, what's wrong with your units?
No, the units are okay. We're a scratch. We're probably not down or up anything at this point.
And
which includes the juice.
And the half game unders didn't cost us anything?
Oh, they cost us.
That's the question I'm asking an answer for.
Here's Vanetta. I have no upside here. I will say when I text Tom and my dad and I give them the updates, Tom's response at one of them was, "Don't text me unless we're up money." And he said, "I only want the winning bets." So this is what I'm dealing with.
So how many units did it cost us?
You knew what you were dealing with.
I will have to run the numbers back. I went to sleep before the last games ended.
Just give me a guesstimate. I mean, seriously, if you were you should be on the witness stand too. You and the other guy are amazing.
I think the first half unders, I think, went about 35%, which is bad.
Yeah. So the Rob Maria strategy that if we had done it
would have been profitable.
Thank you, Yaron. I have no more questions.
So the whole takeaway is that Rob and Maria are right. You misinterpreted some things, and it had worked in the past, but this year it's costing you.
Yes.
Okay.
Thank you for digesting that for us.
I can't blame him. It's not the first time Batista has done something like this. I told a story a long time ago. I'll make it quick. We went to a racetrack with R.N. Delicious. May he rest in peace. Your uncle.
Wait, there's no more R.N. Delicious? Oh no.
Yeah, R.N. Delicious passed about 2 years ago.
Oh, I'm so sorry. Yeah. I hope he's in delicious heaven.
Me too. He deserved it. A kind gentleman. Your uncle.
Yes.
And another individual. I forget who else. It was usually just the three of us. I don't know. Well, we all went up to the ticket counter, and we had this 4-horse parlay that Louis Gold had given us, and it was a lock. You know,
the fix was in. The fix was in. You can say it.
And it hits. And, we all win, about 4,000 or 5,000. It was great. It paid 30 something to 1. It was a great day. We're all happy. And I was the last guy. They cashed all their bets. Barry cashes his bets. R.N. Delicious cashes his. I go up there and the guy goes, "What do you want me to do with this?" I go, "I want you to cash it. Because you don't have a winner here." I go, "What do you mean?"
What happened?
So
I don't know. I threw a horse in there, wrong number or whatever. I wasn't paying attention. You know how it is.
What do you want me to do with this?
So I turned around to the guy. So I turned around to the guys. I go, "We're partners, right?"
Aww.
Oh, that's funny.
Of the two guys, who do you think said, "Sure, Bat, we're partners"?
Barry.
Definitely not Barry.
Not Barry.
Oh, no.
Barry was like, "No, you owe me that. You owe me that. You messed that up. You owe me that money." Uncle Barry will put you out to pasture. He
still got that money. You kidding me? It's like to his underwear.
It's true.
I got the horse right here. His name is Paul Revere.
It was like we had all day long. It was like we took off from work. We drove up. There was a beautiful day. I mean, we had been talking about this, forever. It was great. It would have been a good day. But
that's pretty funny.
Yeah. So you cost us. I cost me in the past. So it's
but we hit. I mean, it was a good day. We hit the High Point upset, which was great. That was a big one. That was our biggest.
Oh, you had High Point.
I have all the underdogs.
Oh, that's right. Yeah. Okay. That's exciting.
But so you're always rooting for the underdog. It's
except for the chalk games, which Duke didn't do that well. Your brother had Siena for a little while.
Really?
Yeah, he picked that. I don't know. He picked it because it was something like
because he could win a lot.
Yeah. It was like for $20, you won like $80 or something like that, or $70 or something like that.
And I'm sorry, how does Vinny have access to this gambling app?
And did he trade out of it?
That he's underage?
So that's what I started to explain to him. So he did the exact opposite. So when Siena was...
it's just like his mother. Got it.
That's right. I tried to explain to him, what the odds mean, and that you picked a great game.
You made a great trade.
Now you got to manage that winner. But no, he snowballed it. When it went the other direction, he started putting more money on Siena again. He fell in love. Classic.
Well, no,
new trader.
Well, Siena was a 16 seed. And so they were probably major dogs to start.
Yeah, and then they were up by like 5 or 6.
So he probably put money in at the worst time. It was like he bought the stock at 20, it went to 100, and he bought 5 times the size at 100.
No, the stock was 20. it went to 100, and then when it went back down to 10, he bought.
No.
Like when Duke was ahead, he started, buying some more with 5-6 minutes to go. I'm like, no. You see, you're supposed to, when it goes from 20 to 60 on its way to 100.
Yeah.
You take a little bit off the table. You put $10, $15 on Duke if you got $20, $25 on the other team.
Okay, that's a better. I feel better about that.
Yeah,
that's a learning process.
Oh, wait, can I ask you a stupid question?
Sure.
Can you get out, like, when the stock is at 100 in basketball or whatever? Can you get out and get your money?
Yeah. So the great thing about those markets versus sports betting, you can do it. It's just not as and by sports betting I mean like DraftKings, FanDuel. You can cash out. It's just not as easy or clean, and the tick second by second is different. It's just not as the interface isn't as intuitive. But yeah, so like if you were to bet Siena at the beginning of the game, it's probably like 10 to win 100, that sort of thing. As Siena starts winning and the game starts moving along, that might go to 20
right,
to win 100. So you're up 100% on your money. You could take the other side and close that position or close a portion of it. And because the spreads, the probabilities in the spreads are dynamic. So it's kind of a cool. It is the use case for prediction markets, is the fact that you could bet something right now, and then in 5 minutes, if the odds change, you can realize that value if you want to.
Right.
See, I didn't know that. Okay, that's interesting.
It's almost like scalping, Vanetta. It's like if you bought the Nasdaq and the Nasdaq goes up and you sell the Nasdaq, you realize that spread. That's exactly what the sports betting is, but it's along the lines of the progression of the game. So as Siena starts winning, the odds of them winning the overall game get better, and so you can like manage that trade. It's pretty cool.
Right. No, but it's not your fault for not knowing that, because it wasn't always that way when older people like myself, or you might have been watching your dad, because I know you don't bet or stuff like that, or friends,
or even a year ago. Like with DraftKings, you couldn't cash out after, and you still can't. You can't cash out after 10 minutes of the game if Siena's up money. It's usually like around halftime, and then or right in between each half, 10 or 15 minutes into the game. So it's pretty cool.
No, I do not gamble, and I come by that honestly. My dad doesn't gamble at all. Like, he's in a senior golf league, and he's like, man, these fellas, they gambling a lot every couple. And my dad, he's just so cute. Like, he's just at home playing like Microsoft Flight Simulator.
That's a simpler way to live, like this way you get a little gray too fast.
Yeah. It's true.
Yeah.
Oh, well.
So any big plans for you for this weekend, Nikki, if you can, shake off your losses?
Yeah, I might have to, because also part of the arrangement that I have with my captors is that I have to deliver the money as well.
Oh, yes, me too.
So I might have to also, like gas money, time. I might have to deliver some money if we do win. If we lose, they probably won't answer my phone calls.
There's nothing better than watching a guy scramble or outlay money. I mean, we're good for it eventually. It's there's a little bit of fun in watching you.
Yeah, it's just wondering if I'll be able to pay the credit cards and the the mortgage.
You just pay the minimum on the credit card. You'll be fine.
Yeah.
No, don't do that. Yikes. Bat, where are you headed? You are off next week. When are you leaving for your adventures? And are you worried about getting through TSA? Are you driving?
Yeah, no, I'm not driving. No. Definitely flying. And
that's what you think.
No, my wife has been keeping me abreast of all the TikToks and things that she sees from O'Hare and other places like that. And when she shows them to me, I go online on my phone very easily, carrying a computer in your hand. And I go to the TSA site and I ask them, what's the wait time for, 5 minutes? to 27 minutes every time she shows me a picture of hours of wait line. So I'm hoping that the TSA site is correct.
Do you have pre-check?
I do.
So make sure you have enabled the no touch ID, because there's like a side little line, and you can get through even faster if you have no touch ID enabled, but you have to enable it in your TSA profile.
No.
Yeah, I don't know. Do you have to do that online? Because I
don't know. I have it on mine, and I always get sent through like the shortest line.
Yeah,
but it's basically like I give them permission to use my face forever. What I was like, I don't care. Get me on this plane.
Yeah, yeah. You give the government your facial features.
Sure,
and,
fine. This
stuff.
face card never declined.
That's good.
No, but where are you going, Bat? What are your plans? Are you going to take the boat out? Vinny going to take his boat out?
Yeah, and we're bringing a friend down. Tom is coming with us, his buddy. So and unbeknownst to us, when we made these plans, we're going to Florida, Cape Coral area there. Unbeknownst to us, hopefully the weather's going to be great, which it looks great, which I want to get out on the water. I can't wait to go fishing and have a good time. But unbeknownst to us, his about 4 of his friends are going to be in the Fort Myers area too, and one of them has access to a car. So I have a feeling that, and one of the other families has like a small child, like a 6 or 7 year old girl with them. So there's like a 6 and 7 year old girl, and then 2 16-year-old boys that he's bringing down there. Divorced dad, you know how it is. So I have a feeling they're going to be all coming over my house and staying with me, because it's just my wife and I and Vinny and his friends. So I think we're going to have a little bit of a frat house.
Yeah, but that's good. At least they're under your roof, and like where all the kids are. So.
Well, he has his own little 13-footer that he's going to take out, and he's got his own little cooler, and you know how it goes. And
I don't know how it goes. Yeah. I had strict parents. All of this is new to me. Go ahead, regale me with these tales of buying your kid a boat and sending him afloat with a cooler full of hard cider. Go ahead. I'll wait.
It's not hard cider. It's what's that?
Apples.
Snap. Yeah, the apple.
Bush apples.
Right.
It couldn't be the more disgusting thing. Oh. Oh. It tastes like those lollipops that they have around like Thanksgiving, the ones with that are green.
Whoa! He's not a meth addict.
No, with the caramel.
Those are good.
Oh yeah,
I don't like those.
I don't like them either, but everybody does.
It's like beer with that flavoring.
Yeah,
in it. It's very.
He's not drinking beer. Come on, but you're not going to sneak 1 or 2. Probably they'll get it through there through TSA.
Yeah. Yeah, you be careful if he doesn't bring one of those vape pens on the plane. Get the entire family arrested.
Yeah, you're right.
I know. And you be careful in Florida. Florida, red state, they don't mess around. Speeding, drinking, all that stuff. You get caught, you're gonna get.
Yep.
Then he's gonna end up in Guantanamo.
And let me tell you, an out-of-state ticket for a 16-year-old, that insurance ding that you would get, ooh.
So true.
I hope you guys are safe and have a wonderful time and a wonderful
I plan on it. You guys got me going down you got me like music playing in the background, kids drinking, throwing bottles of beer into the canals and the oceans, and flipping over boats.
You be careful.
He's a very risk-averse child for the most part.
Yeah. Not
the brightest. But he's risk adverse. Oh, I got to tell you one more thing before we continue the show. I'm so sorry. So yesterday was DQ free cone day, Vanetta.
Oh.
I didn't know. I would have told you. And it was his first day working. And he usually makes about $10-15 in tips, just to tell you how busy it was. He made $45 in tips.
Does he have to split that?
That's his half.
Oh, wow.
Wow.
They had a line. I drove by twice. One time on my way to EJ's for a nice romantic dinner with my wife, and one time back from EJ's from the nice romantic dinner with my wife. But the line was 25 deep out the door.
Wow.
So I texted him and I said, you having fun? Because this is what he wanted to do. He's done this for the past few years. I wanted to do something else. But he's been wanting, he goes, not one bit. And then when he told me,
that's nice that people were generous. They're like, "Hey, we're getting free ice cream, but we're gonna tip." So that's wonderful.
Yeah. But it was very, very busy for just the two little guys, two 16-year-olds. Kind of rough for them. But he said after he got the tips, it was all worth it.
Oh, that's good.
Yeah. I'm sorry to interrupt your show.
No, you're good. I was just gonna say what was gonna be on the show, but we can talk more about your child.
I'm all done. But.
We got a great show for you today. It's a fantastic Friday. Happy first day of spring. Yeah, we're doing it. We got a great show for you today. At the top of the 8 o'clock hour, we're just gonna go to opening bell.
Yeah,
we got some tasty extra for you. Obviously, we got confirm and sends. We got some tasty extra for you.
And then at 8:40, we do have fast market, so that is not changing. There's viewer submitted trades. What a crazy week it has been with the Fed and Micron earnings and just the war stuff. So hopefully our viewers have found some interesting takes on the market and some trade ideas for the bats. The bats are going to try to put on as many trades as possible. That's at 8:40. Then at 9 o'clock, our market measures 0 DTE ATM put spreads. That's a lot of acronyms.
Yeah, it's a refresh. So we're looking at just put spreads, just the put side for 0-day trading, and we're refreshing that with the last 5 or 6 months since the last time we did that series there. Obviously, it's been good. It's gotten a little bit lesser here with the volatility that we've seen over the last couple months.
Okay. And then we have live from the trade desk. We have Quentin in the house at around that 9:30 time frame. Q counting down all the top trending tickers over at Tasty Trade. So don't want to miss that. And that is our run of show for today. Stay tuned next week. A whole array of special guests.
A parade.
A cavalcade of stars.
Yes, like a fashion show.
That's right. Yeah, that's right. Since Batman is going on spring break, we're bringing in some guest hosts to help Nikki out all week. So stay tuned for that next week. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah. Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Off the wire.
Leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's March the 20th. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. Are you ready for the news?
Ready for the news.
Just real fast, because I couldn't get into this before, but I am shook. Major development for the first time ever. ABC, which is owned by Disney, it had to cancel their entire season of The Bachelorette because things got out of control. And we are still dealing with the fallout.
I saw that the lady who was coming from my wife showed me.
Yes, Taylor Frankie Paul from Secret Lives of Mormon Wives. For the first time ever, she was not in the Bachelor cinematic universe. And she was asked to be the Bachelorette. And we were excited to see, how is this going to integrate? What's going to happen? Because she has no filter. She says what she thinks. She's out of control. And
she was out of control. She beat the crap out of her husband. I saw a video.
Oh, she's tiny. He could have done. He's very jealous, and they both need help and therapy. And the first thing is those kids. The first thing is, I will say, I feel so.
Yeah, but you don't want them to get help and therapy because then you don't have the Bachelor.
No,
I know, but he was very not wanting her to go on the show, and him selling the footage to TMZ was his way of sabotaging. Obviously, no excuse for her behavior. You shouldn't, no matter your gender, lay hands on a person.
Is what I kept asking my wife. How?
He set her up. She'd been locked in the garage before that. No, because they showed it on season 1. You can see the aftermath, when the cops come, because the cops are filming with their body cam. So that's not biased footage. So,
so what do? They just don't have the show? Are they going to have?
Yeah, so Disney's going to lose tens of millions of dollars because they filmed the whole thing. It's like all in the can. She supposedly had met someone, some guy, got engaged, and like we're not going to see any of it now.
Wow.
So it stems from, for people that don't know, it stems from domestic violence allegations, not allegations, but she got arrested. She had to go to rehab. She served time, but then the video came out.
Female to male. Right? I mean, the female was the aggressor.
They both got charged. They both actually.
Okay, I didn't know. Yeah. The video I saw, it looked like she had a Mayweather right on her. That was
sure, and she was throwing chairs at him and stuff. But that was yeah. But you're seeing like the middle to end.
Does that give you flashbacks, Dad? I feel like
no. Come on, now. Like, you can say a lot of things about me, but I never had that. I saw
that little twinkle in your eye because you kind of looked and you were like, you had like this moment back to like the mid, like
no,
early '90s.
Not me, never ever with anybody.
I am surprised you haven't been slapped more.
I've been slapped. No, but never like I just turn and walk away. I take my 2 suitcases and I go. I don't stick around.
Yeah.
But no,
anyway, it's never happened. I'm not sure what Disney's stock is doing, but it's
good idea. Let's take a look.
It's crazy. It's crazy. And then I'll get into the news. So
it is. It's down about $1 today. Near the lows.
But the market's a little weaker too. But yes, you're right. On its butt, by the way.
Yeah. All right. Getting to the first headline of the day.
22. You may have done something.
Oh, hey, there you go. Maybe for your trade today.
Trades today. I'm going to write it down.
Write it down. The S&P 500 just flashed a bearish sign, but more damage is lurking beneath the surface. The S&P ended 0.3% lower at 6606. That's below its 200-day moving average, and the S&P is at its lowest level since late November. Last night's close marked the first close below that key technical level since May 9th of 2025, and any slip below that trend could be a bearish sign for equity markets. This is the first triple witching of 2026 that coincides with the Iranian conflict. What are you guys anticipating for the market moves today?
Was it a death cross?
Death cross!
Death cross!
I mean, listen, we've had a little bit of weakness. We had a nice rally yesterday. Volatility really came in nicely yesterday. I think Nick and I were both encouraged by the volatility movement. If you looked yesterday, we were off the show, but I'm just going with that same number that we picked from yesterday. Even the S&Ps were down around 35. Volatility was around 25, 40 or higher when we were talking about it on the show. It was actually under 25 with even the S&Ps down 35 before they ended up rallying. So volatility was a good little metrics yesterday. It worked very nicely. I mean, doesn't always work, but it worked this time. You got volatility now around 24 and change. It's rallied over 23. It got to 23 and a half. I actually thought we were out of the woods, and I still think we might be out of the woods. I mean, it looked like end of war coming this weekend, right? That's Stradamus.
It did have, I was looking at oil volatility and
you were looking at OVX, right?
OVX. And volatility came in really big into the end of the day, and you had oil down.
It's like a massive ramp up into the close, a reversal.
Yeah, the oil. Well, we ramped up on equities, and oil saw volatility get smashed and a little bit of a pullback. And I was talking about it with Vecchio. I was like, and by war being over, I don't mean that like it's done and we shake hands and move on and be friends again. I just mean from like a trader perspective and fear in the market. It felt like it was like, okay, we've kind of figured out that oil is going to be higher for a little bit longer, higher for longer. There's a J-Power reference, forever and ever. It kind of felt like we had figured it out that, this was kind of the range, 80 to 90, mid to high 90s being the higher end of the range, because volatility was coming in and oil was kind of staying right there. So it felt like, the oil fear, the fear of 200 a barrel was being taken to the woodshed. Like, it's just not going to happen.
It's again, stay with some conviction, son. The war is over this weekend. Oil volatility contracted. Volatility has come well off of its highs. It's selling off. You had mentioned, you got a lot of the SMH, the memory stocks were doing quite strong all day long.
Yeah.
Anecdotally, though, I will say passed a gas station on Ashland, gas $5.49.
Oh, yeah. It moves very, very quick to the upside. You'll notice that when we start talking about oil back at like 75, 80-ish, you'll be like, yeah, but the pumps are still the same. Yeah, they're a little slower. They're a little slower to adjust it down.
Yeah, true.
I might need to borrow that electric bicycle that you bought for Vinny and he doesn't use anymore.
Ooh, that's a good call.
There you go.
Yeah, it's getting warm. Just it's free.
Yeah, I might have to take that thing.
Yeah, take it. Don't hurt yourself. Hey, shifting gears here.
It might be for sale. It's a Ciron or something like that.
Shifting gears to the metals. The gold and silver sell-off accelerated yesterday as the metals shed around 5 and 10%, 5% for gold, 10% for silver, around fears around the Iranian war and inflation. I think it was gold's worst week in like 6 years or something. What are you guys doing in the metals?
I'm long both of them, painfully so. My man Vecchio on last call yesterday.
Man, it's Vecchio getting a lot of love.
Well, I was with him
on the show
last time I was on the show, and I'll have him. Yeah, I'm gonna have him on Friday next week. But he felt I felt sad because I could see the pain inside from the gold and silver move. It feels a little overdone. I mean, it's been a huge move to the downside, a lot of volatility. Volatility is actually kind of expanding. It feels like kind of the capitulation, at least, that we saw the last time gold and silver went just parabolic and had the 20 or 30% down move in that one day. It was kind of like a reset and then grind back to like a more, reasonable price. I feel like you're kind of in that zone right here. But it did feel a lot better when I was looking at markets before I went to bed, and gold was up 120 and silver was up, $7.40, or
and even $2.30, 25 handles.
Yeah. So it doesn't feel as good right now.
Got up to 68 yesterday. It's back to 60, just under 65.
Yeah.
As an addendum, copper also making a massive move yesterday. I don't know if you wanted to get into that or not.
No, I will say I'm sorry, Frankie.
You're talking about /HG, right?
I put Frankie in the short put spread in copper. Frankie, I owe you a couple bucks. I'm sorry.
I'll put the chart up there for you. It rallied off of the low, but it's really sitting at a low that it hasn't seen since December of last year.
Yeah.
Very hard product to trade, very big product to trade. Mm-hmm. You can go to the option side of it. Not the most liquid product. It really is a directional play. You got to have some love or hate for copper to trade it.
You'll never get me, copper. No.
That's right. That was from Bugs Bunny.
I don't know what that's from, but I think you're right. I think it was
Bugs Bunny. But I could remember it was one of my favorite Bugs Bunny cartoons. It's when Bugs is hiding this gangster, and the cops are coming, and it's so satirical.
Yeah, you got it.
The cop is like a big fat Irish guy with an Irish accent. The mafia guy has got the hat, big shoulders, skinny little waist, talks like an imbecile, and you got Bugs Bunny sitting there. Goes, what I he's trying to hide the guy, and he sticks him in the oven, and he's like, if my buddy was in there, would I turn on the gas and light a match? And the whole thing blows up. He just keeps getting the guy in trouble, which is good. Anyway. That's where it comes from, Bugs Bunny. You brought a good memory.
No, that is good. All right. I love bugs. Hey, in crypto news, crypto.com announced yesterday they are laying off 12% of their employees as the company embraces AI. I just hate everything about this. The CEO said the cuts were to roles that do not adapt to our new world. Awesome. Not callous at all. Oh. A growing number of companies have cited AI for mass layoffs as CEOs rethink what kinds of jobs their firms need. Do you really think that this is AI, or it's just a talking point that CEOs can get away with? It just goes down easier.
Both. I think a little bit of both.
That's a down the middle answer. I'll give you that.
Yeah. Well, I think going back to, because we've talked about a little bit of like some of the hiring bloat that was accumulated during COVID. I don't think that has gone away. I don't think that really ever goes away. I think there's, just so I think that's part of it. But I will say I use AI in a multitude of ways, and it has made me way more efficient.
Are you auditioning to keep your job right now?
No, but I can see businesses and parts of businesses that can almost entirely be erased.
I can see things
with one or two people, and a couple AI bots.
Sure.
It doesn't seem like it's a stretch. Like I don't think it's a lie to say that it is a replacement, but I think a lot of it is just, you had a little bit of bloating in some of these.
Sure.
areas.
What is going on in the crypto space?
This is what happens. I mean, they overhire, they underhire, they reach. It's just like I'll take it to the markets for a quick second. Remember when there was going to be no more lumber? And lumber went through the roof. And what happened to lumber? It comes right back down to, 2018 levels. Housing market, and I get it, the housing market.
Silver. We just talked about,
silver, gold.
2 months ago, there was not enough silver. It was all paper. It was all, this and that and this and that.
Aluminum is doing it now. Like this is just the cycle. You can't get caught up in the minutia of it. You just got to trade the price in front of you and be intelligent about it.
I agree with that.
What is crypto doing?
Can I say it's been relatively strong compared to the market? I mean, it's been choppy around 70K here on Bitcoin. We got up to just under 75 at one point,
and just down to around 67.
Yeah,
I mean, that's the whole year so far, right? I mean, basically, 67 to 74, and we're sitting at 70 and change.
Yeah. The crypto stocks they've been okay. I mean, Coinbase is sitting at 200. It bounced from like kind of the lower end of where it's been trading, but
140 or so it got down to. It really got
Bitcoin itself and crypto seems to be.
Nobody talks about MSTR anymore.
Yeah, it just moves with Bitcoin.
Yeah, it's meh.
Supermicro. U.S. prosecutors are charging Supermicro computer employees with smuggling NVIDIA chips to China. The U.S. Attorney's Office for the Southern District of New York has charged associates of an unidentified U.S. server maker with diverting billions of dollars in NVIDIA-powered servers to China. The government's been trying to figure out how these high-powered chips reach China without authorization, and now we've figured out why the indictment got unsealed. Whoops, but no takebacks. So
I'm not just employees. I heard like this ex-CEO and stuff. I mean,
sure, yeah.
I mean, this is not.
Yeah, the co-founder and the member and its board of directors and
and let's also include that this stock was added to the S&P 500. I think at the beginning of last year.
It'll be taken out shortly.
Well, but it's like. Come on.
Shares of the company did fall 12% in extended trading when the news came out.
It's down $7 from 30 and change to 23 and change. This is a debacle. And you could start. I mean, I know other people have said it. I have never said it because I don't know that much about super micro computers, SMCI, but they've called it a scam for quite some time.
Yeah.
And they might be right.
Yeah, but there's so many of these, like their APP is in that bucket, Carvana is in that bucket.
There, I might have some Delta and APP.
Yeah, but those are like stocks that like have been questionable, and they're just but there's no like real answer there.
It's not the 10 multiplier that MU is, right?
Yeah,
which you nailed yesterday. I got to give you a lot of props on that. One of your best calls. Very good.
Sometimes I get it.
Jeff Bezos is reportedly seeking $100 billion for a new fund, not for more plastic surgery for his wife, but to help companies in industrial sectors use AI to modernize and automate. The effort is related to Bezos's AI startup Project Prometheus. His involvement with the company was reportedly originally reported in November. Prometheus launched with $6.2 billion in funding.
Wow, Vanetta. I know I'm a pig, and I like a good enhancement like the next guy, but I didn't think you were going to throw some shade on his wife. I tend to agree. It's too much.
At some point, you have to say stop. Like Anne Hathaway, perfect, beautiful, just so elegant. The right amount of surgery.
Well, it could be a mental illness, just like throwing chairs.
It is body dysmorphia. Yeah.
Yeah. So
those are actual facts. No cap.
Gotta be a little kind there. We never know what the future holds for all of us, by the way.
Honey, I'm aging like a fine wine over here, but you speak for yourself.
You are. You could have been on that age of
attraction.
Yeah, for sure. I would like to have gone into that room with you just to see what your age was.
I don't think
I do not want a 22-year-old man. Let me be clear.
Come on, for a long weekend, maybe something.
You say that now.
You don't know how old he is, but he's calling his mom to find out how to do it and stuff.
No, I'm sorry, I can't.
All right.
What are you guys doing in Amazon?
207 is where it's trading. Closed at 208, down $1. Even the S&Ps are down 27. Nasdaq's down 130. So you got a little weakness in the market. You got a little weakness across the board right now.
Neutral delta. We sold some premium yesterday in Amazon.
IB rank at 23. It's been going sideways. It's sideways at the lower middle of its most recent range.
Yeah.
I don't know if you guys actually put on the trade, but didn't Baby Shark bring you a trade from the research team in Rivian yesterday?
He did. I did not put it on, even though I've traded Rivian a couple times and it's been pretty good. Selling puts, and then I think we did sold a put, took stock, and then the stock rallied $2, so we closed out the put or closed out the stock there too. But I do not have a position currently.
Well, Uber plans to invest $1.25 billion in Rivian as part of a deal to deploy 50,000 robo-taxis through 2031. I know you hate the 2030s, Nikki, but the company announced the deal yesterday. Uber is expected to invest an initial $300 million after the deal signing, subject to regulatory approval.
Maybe it's the regulatory approval that's holding it up, but it hasn't helped either stock. Both stocks unchanged. Uber near its lows. I guess you could say Rivian has caught a little bit of a bid, not today, but as of late, the way you just explained your trading. It traded down most recently at about 14. It's sitting at 16. You caught all the move. You're good.
Mm-hmm.
If NVIDIA couldn't help Uber, then what can?
Right.
That's true. That's true.
Hey, congratulations, though. This is maybe where all the money that was supposed to be going into Uber is going. Kalshi has doubled its valuation in a shockingly short amount of time. The prediction market has doubled its valuation in 3 months as trading volumes surge. They are now raising a new round of funding at $1 billion. They were valued just at $11 billion in December. What is the takeaway from this?
Nick, you're my gambling expert. I'm going to default.
Gambling, being the house is a good business, I think is what it is. I think there's a little bit of speculation built into this and just kind of trying to price the upside in the future.
I thought they were actually going to go public this year. It looks like they're not doing that after they raised this money.
I don't think they ever had plans, not for this year, but maybe I could be wrong.
If the market rallies significantly into the middle of the year, they'll come public, just like everything else. All these are going to have to at some point. But I think maybe it is that valuable.
Yeah.
That's the price right
on
now,
the other side of the prediction market coin, Polymarket has been on a partnership spree, and they announced they are partnering with Major League Baseball. Polymarket would be the official prediction market partner of Major League Baseball. They would gain access to official league data as well as the ability to use MLB logos in its products.
Well, both these headlines are problems for Flutter, for DraftKings. If you look at either of those stocks, Flutter has gone from which is FanDuel. FLUT is the ticker, but it's not very tradable. But it's gone from 300 to 100 in 6 months.
And,
sure. and I'd throw like a Caesars in there too.
Yeah. Sure. Caesars win. I mean, those stocks have a little bit you have hotels and
the hospitality part.
Part is a little bit of a buffer, but yeah, those have been.
You also got the whole Cuban thing there have been lifting. I've been getting the emails from people trying to go like a Vecchio route here, like if Cuba were to be liberated and we start putting money into the infrastructure, that they're going to have gambling again, and then all of these might catch a little bit of a bid. Other stocks like FLR might catch a little bit of a bid. Again, you've really got to go down a rabbit hole. I mean, this is what people do. I mean, they try to find things. Floor's on its butt relative, and these gambling stocks are on their butts relative, but I think you got to think a little longer term on these than just the month time frame.
Mm-hmm.
It is hard to believe, but it is already, not only is today the first day of spring, but baseball season is just around the corner. I was talking to my friend in the office, Jessica, and she and her husband, they're going to a Cubs game next week. And I was like, wow, that seems early.
Yeah.
Bring your snow. It
could be snowing. Yeah.
I know.
Bring a jacket.
Hopefully it's nice weather for her and her husband. But that did get me interested on my For You page on social media. So I'll be rolling these out over the next couple of Fridays, but I'm going to start with my team on the South Side, and this is coming to Guaranteed. I don't even know what the name of the field is. I still call it Comiskey. Yeah. But this is the new offerings for 2026 on the South Side. Let me know which one of these you like the best. Watch this.
Put me in cold. I'm ready to play today. Put me in cold. I'm ready to play today. Look at me. I can be Cynthia.
Ooh, that was interesting.
Well, I spent some time in the mudfield mine.
Yeah.
They put this kind of money into the team. They didn't get the people in the
I mean, the funny part about that whole thing is, like, if you did one of those for Wrigley, it would be like hot dog. It would be
no, they're gonna have new offerings. I'm gonna try to do Wrigley next like
week. Home run in personal pizza. Like there's no like special thing at Wrigley. Wrigley has like popcorn, hot dog, little personal pizza, and like a large Coke. That's your
that's all you get.
Decision there. Yeah, I would go with the pizza there, the jardiniere and the
I was going to say the home run pizza. It looked like a home run pizza. I hope it's not made by Home Run Pizza, but it might be. We don't.
I like a home run pizza. Don't hate on Home Run. It's a Chicago brand.
Wait a minute. That looked like a thick pizza, right?
Yeah, that wasn't a home run pizza.
It wasn't a home run pizza because home run pizza is thin.
Yeah,
and they use a cornmeal crust.
Yeah, cool.
Yeah.
It's good.
Good.
That last one looked good too, but I gotta tell you something. The wings, that's gonna be real messy. People are gonna have to wipe their hands and stuff.
Gross.
No bueno.
All right. Bats, what's coming up next?
We're gonna take a quick 90-second break and come back. We got much more Tasty Live.
So much more.
After this, we'll be back in 90 seconds.
Safe travels to you, Bat.
Thank you very much.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live, where we do a little Tasty Extra. We go back and take a look at what's going on in the market. You want to do that, or you want to do Confirm and Send first?
No, let's go back and look. We can do that.
Let's do that, because yesterday was a very interesting day. I tweeted it out the night before that we had an underwater close Wednesday on the close. Going into Wednesday night, meaning that the market had closed, the SPY and such, and even the S&Ps continue trading. Even the S&Ps continue to go lower. That's an underwater close relative to the SPY and the rest of the market closing, which usually signals a reversal which means,
capitulation. It's kind of a capitulation. It's get me out. Market's closed. I want to get out. It's usually kind of the spook.
We had multiple down days in a row. I mean, it seemed like it was setting up. It seemed like volatility had expanded nicely. Now you got to take it with a grain of salt, because it's just usually. Now it ended up being a phenomenal call. But besides that fact, I was waiting for your reaction.
I mean, I'll give.
No, I'm just.
I'll give you that. I mean, you've started. No. I'm proud of you, Dad, because
thank you. You put that in the back of your head, and then you watch how the market trades the following day. We opened around our lows. Volatility was kind of bid. Even the S&Ps, and we talked about it on the show, didn't really rally. Volatility, continued to go get softer. We talked about how the relationship moved all day long, and then you try to make a play. So maybe if you were sitting with a little bit too much long delta that you were comfortable with, maybe you waited a little bit because you had that in the back of your head. Maybe if you were looking to get long and you hadn't done anything, maybe you were a little bit more aggressive because you had that in the back of your head as you were watching everything else. That's all you try. Sometimes you get it right. Sometimes you get it wrong. You never know when it's going to be. I was teasing when I said it was a great call, even if it was a great call in hindsight. But you do have to put it with a grain of salt. And now this morning, you had a big move in the market of 60 handles already, but we've had 100-point moves in the market, top to bottom, all week long.
No, I will say and not to bring my man Vecchio back into the fold here, but one of the things that I was talking about yesterday.
This Gumata you have, he just sent me his.
He's my side piece. Okay, he's my side piece. He's my side piece. He just sent me
his macro view of his inside look. He sent it to the whole company.
Yeah.
I couldn't even read it because it.
Hey, but that's good info. You poo. You're getting better. I will say. I mean,
it messes with my head. I don't want to hear why.
I know, but I will say I'm proud of you because a year ago at this time, you and the prior administration would have no clue of anything that's going on. It was just, big dollars. This one's down, this one's up too much. Boom, boom, boom. Now you're like a little bit. You've come back to the world a little bit. You're kind of out there. You're learning. You're learning new tricks. I'm really proud of you. It's good.
I'm a homer with my buddy who writes into us. I'm not going to say his name because it hasn't worked yet. But usually we have an up opening Thursday into Friday of this triple witching expiration.
Oh, yes. But the main thing that I said yesterday on the close, after a move like that, so we were down, 80, 90 handles, you're at lows. It looks like the world is ending. The news is horrible. Everything is horrible. And you have that volatility contraction from 27 down to 24. It was 27 in the morning, or around there in the VIX, volatility futures 26 and change, whatever the number was, 26 to 24. You have
we had spiked up to 30
last week. Yeah. Yep. And you have the rally, back to basically unchanged as well throughout the day. If you had taken advantage of volatility over the last week in oil, in gold, in equities, you got paid 2 to 3x what you should have into yesterday's rally. That was basically it. I took off puts.
But in fairness, you weren't getting paid. Actually, it was hurting you on existing positions.
Yes, but if you got into stuff yesterday, the point being is I was saying, I don't know what's going to happen. I'm not the Batstradamus. But, if you've been playing this trade, you just right now is decision time. Do you take off some puts that you sold? Like I took off my puts in the Qs and SPY. I took a couple $100 out of those intraday. I closed out of the short delta, the naked short delta that I had in oil futures on the upside. Can I put that back on? Certainly. But that was kind of what yesterday and I think today is going to be a little bit like, is like, you're going to have to, this is decision day. Like, do you want to be a little bit heavier on the short side? Do you want to be a little bit more, short vol, long delta, something like that?
You want to help Nicky with his gold position, like all types of things that you can do.
Yesterday, you got paid for taking risk. And at the end of the day, it was decision time. It wasn't, you sold puts or you did the, butterfly that we did in SPX or whatever. You're up money and it's decision time. You took the risk, you made money, and it was decision time. And today, I think you're going to get another one of those days into next week where, things can go one way or the other. But
they can always go one way or the other, but sure.
Yeah, it's like you gotta make it's decision time.
Yep, totally agree. All right, let's take a look more back with some slides on yesterday.
Yes. So this doesn't tell much of the story because the range was quite significant. E-minis down 52 basis points, I should say. They were not down 52. They were basically unchanged at the end of the day compared to the rest of the market there. You actually had the Russell rally into the close, which was a pretty wild move there. Just to give everybody kind of a look here. The next slide.
The Russell actually rallied pretty significantly too. I mean, it's bad. I mean, when you take a look at IWM, I'm gonna put it up here in just take a look at it just a second here. IWM is where it was closing and trading on March 12th or so. You take a look at SPY, and it's nowhere near March 12th numbers. March 12th or so. Just if you're looking at the whole market, even SPY, I'm sorry, was around let's just call it 665, 668. It's about $10 lower than that, which is 100 points on the E-mini S&Ps.
In terms of the Mag 7, a little bit of weakness there, but again, we had a nice little rally into the close. Everything looks pretty status quo here. Volatility coming in pretty significantly. You can see that 5-day IV change over this week. You're going to see that number negative for a lot of stocks here with volatility futures at 24 and change. If you sold premium, you're getting paid.
Yeah. And volatility right now up 15 cents, and E-mini S&P is down 16. So you basically have volatility unchanged, and E-mini S&P is unchanged after having a bullish a green night for most of the night.
Yeah. Volatility is something I'm going to be keying on through the end of the day today, and both crude
You're
and
Batista, son. This is what we do.
Next slide here. When we look at the sectors, you had the energy sector making a little bit of a move to the upside. The semiconductors ended the day in the green. It was kind of a crazy move there. You got biotech moving to the upside, a little bit of a bounce in financials. What this really is showing you is that this was a pretty 50-50 split. The day ends basically unchanged. It was kind of a nothing day. The metals and mining stocks, those are the ones that kind of took it on the chin there the most, with gold down. I want to say it was down, 250 at the close, around that?
Yeah, right around.
Silver down like $7 or $8, but silver was down like $10 or $11 at one point. So certainly a big move in the metals. I think that was kind of the story yesterday, or at least one of the bigger ones.
Good.
When we look at some of the biggest movers to the upside here, you've got Sienna, STX, talking about some of the semiconductor adjacent stocks in that list. You got Dell in there, LRCX, WDC. Those are all kind of in that space. SLB in there. You got a couple energy names, BKR. But it was mostly energy and semiconductors. Those were the things that were kind of the strong point in the market yesterday, which I think is good, so to speak. I mean, you get, Yeah,
I mean, it can't be. I don't think it's bad.
No, not bad.
Right. I mean, at recent lows.
I don't know. Everybody always says semiconductors. When semiconductors are going up, it's bullish. Markets are bullish. That's it.
And just to put in perspective, QQQ, which has a lot of semiconductors obviously in there, as the NASDAQ stocks. And then just going back to March 12th, because we looked at IWM there, you got about $7 or so. Q is under where IWM was in the same time frame, just about 8 days ago or so.
Yeah.
So I'm just saying, SPUs, SPY, Qs have been weak relative to IWM. I'm throwing the Dow out.
Good. To the downside, some of the biggest movers that we had there, a lot of the mining stocks. So Newmont is there, down 7% and change. MOS, which is Mosaic, it's gotten tied into the kind of energy trade, the agricultural chemical companies, CF, Mosaic. They've had some whippiness to them, down 5% there. Some of the healthcare names, you had Micron.
Wait. We don't need fertilizer stocks anymore?
We're trying to figure it out. We're monitoring the situation as has been the meme for quite some time. So
you kids,
a mixed bag there across the board, and you'll see that mixed bag when you look at this heat map that we have, because this does a better job of visually giving you kind of what we felt yesterday. So if we get onto the next slide here, you'll see across the board, there's not much to take out of it. Like this is as choppy a market as I think I've ever seen. I mean, the stocks that are and the sectors that are closer to like a white are basically unchanged on the session. So you're seeing you see some real green parts, some real red parts, and then you got a lot of kind of in the middle. So it seems like, it's been it was one or the other. It was like you're either long energy and then short kind of the big tech stocks. That's been the things that are working. Everything else is just kind of chopping in the middle.
Well. Let's talk about the energy product for a quick second. That's been moving everything, and I think it really has been weighing on the market. And that's /CL oil, $95. And I always talk about it having resistance around 98. We've gotten over that, of course. We just been hanging out here for the last week or so. But if you're going to say 98 is resistance, then you got to say somewhere around 91-ish has been support, and we're right in the middle of that range. When you look at OVX CGI, which you've turned me on to now as one of my most important things to look at, even though I look at IV rank a lot easier. You can see here that volatility has been coming down as we've been going in this sideways action. I think volatility will actually preemptively tell you what direction oil is going to go in. If volatility continues to go lower here, maybe you get a little bit lower oil. I don't know, going into the weekend with all the news and subject to change, I would think that volatility is going to stay bid in /CL. But IV rank is 68 for those who would rather just look at the IV rank. You can look there just to give you a point of reference before the day starts on all of this. So good job out of you, son. Even the S&Ps just went down 20 and change. We'll be back in 90 seconds. They've been oscillating around high end down 16, low end down around 26. Just looking at the E-mini S&Ps between friends here. We'll take a quick 90-second break. We'll come back. We got confirm and send and a whole lot more with you. Back in 90 seconds. Tasty Live.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live with confirm and send. But before we do, let's take a quick look at the market. Even the S&P is down 21. When you take a look at this really close-up view of the market, you can see that it has been doing, stair-stepping down. Lower lows, lower highs. Zoom out a little bit here. You'll notice that we're in a precarious precarious little situation here, right at or below futures numbers that we've traded at multiple times and bounced. So we'll see if we get that. NASDAQ down 101 or so. Russell down 11. They're all down around 1/4 of a percentage point. You can see the Russell kind of hanging in there a lot more than the rest of the market, meaning the E-mini S&Ps and NASDAQ. Dow down 100 and change. It too has been more weak like the E-mini S&Ps. Volatility up 23 cents to 24 and change, hanging in there. When you look at the last time markets were here, we were closer to 21, 22 volatility. We're now 24 volatility. Volatility is definitely elevated, definitely bid. Plenty of time for putting on positions, both sides, whatever it may be, if you're not looking to be directional. Bonds down 16 again, son. 113.28.
I just put in an order to sell the 112 puts again because we scalped out of them yesterday. We sold them at like 55.
Yeah, you're looking to sell them around 50 or so with bonds around the same price, right?
Yeah, we sold them at 55, bought them back at 43. So I'm kind of going in the middle of that range here, just kind of playing this move. I mean, we're back in the 113 handle. We haven't spent a lot of time here. It's usually bounced from the spot. So I think a good little spot.
Yeah, it's a trade that has a 65-ish probability of success, and you're playing direction.
Yeah.
It's worked numerous times. We'll try it again, see what happens.
Yeah.
You could go into the notes too. Notes have been weaker.
Forgot about that.
And a little bit higher volatility in there. You can take a look at what the notes are trading. Maybe you can do something in there. Bitcoin, I'm going to go to the future just to show you the overnight move, basically unchanged, although the cash is basically the same, unchanged. 70,000, 600 or 700. Ethereum hanging out. It too is unchanged for the night, 2130 and change. Oil down 28 cents to 95.30, but you can see here it was under 93 to 92.5. It was up to 96.5, hanging out unchanged. I think that's what's putting a damper on the market right now. When it was weaker last night, market was much stronger. This is definitely oil is definitely the big dog in the house right now. Gold up $56. Sounds good, up 1.25% after getting hit yesterday. And I guess for those who are playing a little bit of volatility and direction, need a little bit of a move up. But it too was about 100 and
bonds.
Your bonds at 50. Very nice.
Yeah, I didn't do the notes. I was looking at the notes, but
that's okay.
One with the bonds.
Beautiful, perfect, good. Do I
same but different?
It is the same but different. Dare I say good job out of you?
Thank you.
You're welcome. Silver up 16 cents. It too well off its highs of 74.60. It's trading 71.30. Low about 70 cents below where it is right now. Net gas down 9.5 cents. Net gas is a mover. If you have a sizable account and you're not for the faint of heart, it's been in a huge wide range of net gas. Not for everybody. Corn, wheat, and soybeans all lower. Son, that's all I have for you when we get to confirm and send.
Yeah, let's do it.
I'm ready.
Do a couple of them. I know we have a couple extra in there because we were going to film for Jamal, who's recovering from the horrific loss of the Wisconsin Badgers yesterday.
Did he take a personal day because Wisconsin lost?
I don't know. No. He had this on the docket for the last couple of weeks, but I imagine today he's, sulking in the corner here. But
he gets off all triple witching is what he does. Or quadruple witching, whatever you want, whatever you kids want to call it these days.
Yes, but we'll so for the team, we'll just go through the first four we'll call it from there. So I keep hearing this headline driven market, or I keep hearing this, a headline driven market. Does that mean our traditional markers such as IVR, expected move, are less reliable because of the market sensitivity to the news?
Great question. I'm almost going to say yes. I'm going to yes with an asterisk next to it. IVR is what it is. I mean, it's a math model. Expected move is what it is. It's a tradable math model. So they are just as reliable as anything else. You can say that they're reliable to 100%. IVR is absolute. The expected move is 100%. It's absolute. But it's only correct, 65 to 75 to 85% of the time. You got those 1 and 2 standard moves sometimes. So the majority of the time, 80+% of the time, expected move is spot on. And then when you get movement like a headline-driven market or something like that, where it kind of skews those numbers. That's why out-of-the-money puts and calls trade for value as opposed to trading zero. Because if the expected move was absolute and all the time, well, nobody would buy those. Nobody would look to hedge risk with them either.
Yeah, I think just the sustained volatility that we've had and the realized volatility too, to some degree, because we've had these big moves in both directions. I think it kind of it changes it speeds everything up a little bit. Like when you sell a put, you don't expect 45 days out you sell the put and you sell it for a couple dollars or whatever you sell it at. You don't expect the next day or the next couple days to be thinking about managing that trade. It's just not like a usual occurrence. But when you have volatility in the market and things are moving, there's a lot of realized volatility as well. Trades are moving at a way faster pace than normal. Yeah. And I think that kind of skews everybody's perception. I don't think anything really changes with volatility or the expected move, or all those things are what they are, but things are moving and you gotta kind of, you gotta take it as it goes. Like it's a little bit different market than what we were used to for the last 4 or 5 months of the year last year.
Yeah. You're 100% correct.
And different things are in play too, like oil and gold and silver. I think people had not kind of been trading those things, and now those are like the headlines.
Well, oil for sure. Gold and silver was kind of was in the news
prior to the massive move.
Yeah.
Nobody was really. It wasn't that interesting, but yes.
Does VIX have a theoretical floor ceiling? Can it actually get as low as zero or as high as a few hundred?
So it can't be zero because that would imply that there's no fear or speculation that the market's just going to just stay exactly where it is, and that's not possible. We have seen it in my trading career. I think 812 was the low, or 912, something like that. We had one day where we got into the 8 handle or something like that, and I wish that on nobody, not even my worst enemy. You do not want volatility like that. You don't want volatility below 14 or 15. It's about as bad as it gets. So there is a floor to some degree. Ceiling wise, I mean, I guess there's really no ceiling when you think about volatility getting to 100. That would implies that the market can essentially go to zero. So I would say that's probably an extreme mark, but I don't know what the highest VIX print is ever. Do you know offhand?
80s, I believe, in VIX, if I remember correctly.
In the 80s, yeah.
The 80s, yeah. If I remember,
100 would be there would be real big problems.
Yeah, I think before we had VIX, we may have had volatility over 100. But I'm not 100% sure, to be honest with you.
So I'm going to say that there's probably not a ceiling on VIX, but conceptually, I would think 100 would be about as bad as it could get.
Yeah, I'll stick with that answer. Very good. Next one, please.
I've seen 3 different videos talking about capital allocation depending on what price the VIX is at, but all 3 videos had different answers. Can you tell me what is the right capital allocation depending on the VIX?
This is a tough one. We kind of. I'm going to give you an obscure answer because I don't think that there's a great metric for just throwing out there. Like we could say that implied volatility is high relative because the IV rank is 80 on a scale of 0 to 100, or IV rank is 60. It's high. You could put into this. We just talked about volatility. Where can it go? Volatility right now at 24. If it can go to 80, is that high? I mean, if we were looking at it as IV rank, you would say no. But we know that volatility doesn't usually get much higher than, well, right about where we are here. Under 30. So I would say that this is high implied volatility, subject to change. I think a better way of looking at it is through buying power. Like if I was talking to my best friend's son, daughter, or anybody else like that, I would say you don't want to, in most cases, in account sizes, except very small accounts where you're always going to use more buying power. So let's just talk about accounts that are over $25,000 that have margin. You don't want to get over 50% of your buying power. No. That's a lot. So
it's enough. It's enough for sure.
Yeah.
I think that's a good way to put it.
More the 25 to 30% range, most of the time. Volatility gets elevated, you get close to that 50. And don't get me wrong, if you're at 60% and you're comfortable with it, okay,
do it.
You'd be looking to be nimble, maybe take something off when you have a profit so you can redeploy. I don't have a problem with that.
Yeah, I think obviously in smaller sized accounts, cash accounts, margin accounts that are in the smaller side, it gets really hard. Like you have to kind of look at this a little bit more.
Yeah.
From a risk perspective, those accounts have more tail risk, so to speak, because if you're trading spreads, there's a much higher probability that you lose that max loss than somebody that's trading a naked put that's further out of the money. That uses a lot more capital and has quote unquote a lot more risk. The kind of reasonable amount of risk associated with that trade is much higher with the spread trade, even though it's defined risk. And that's where you kind of run into problems, I think, more so than the person that's in a little bit larger size account that has portfolio margin and, has some static delta and has a little bit flexibility with taking positions off or adding. I think that's kind of the point here is that, overall, you want to make sure your risk is in line. When volatility is in this range, it's a good spot to have risk on, but you're always in a margin account, whether or a margin or a portfolio margin account, you're always going to be whatever you're using is going to be leveraged to about 2 or 3 or 4x, depending on the products you're trading, the account type, portfolio margin versus margin. And so you're, going above 50%, you're getting into kind of the dicey territory.
Yep. Good one. Next one, please. Suddenly, there's talk about rates being not being cut, but actually being raised.
Oh.
How do higher rates affect the price of metals like gold and silver?
So just generally speaking, higher rates means that you get paid more for cash, which means that intuitively things that don't have a yield become less valuable. So if you could have $100 in cash that yields 5%, why would you have $100 in whatever asset that doesn't yield anything? Stocks have an upside potential yield to them via dividends, speculation, all those things. So that there's like a yield value there that you can price yourself. But gold and silver intuitively don't have any of that. It's just kind of sentiment or price of that asset, inflation. You can kind of factor that in. So that's why gold and silver intuitively would go down when rates go up. I don't know if I'm calling this 7 or 8%, 9%, 10% move from 2 days ago in gold and silver. I don't know if I'm calling that because of the speculation that rates might go up. I mean, I think that's kind of the trade. That's how markets trade. But yeah, I mean, intuitively speaking, higher rates would mean that gold and silver would probably be less valuable. I think the whole story here is that, you can build your long-term thesis about rates a year out in time. Like this goes to like the Amazon headline that in 2036, they're going to do $600 billion in revenue. What do you do with that information now? Like, how do you know, how is the market moving? Is what are you looking at volatility? Like I look at this news and I say, okay, well, volatility in bonds are high. They're at lows. You know, I think maybe it's a little bit overstated. Like if you like the rate hikes are not on the table right now. The headline is there. The bonds have moved as if this is happening, but it's not on the curve. Right. Do I want to trade that? I do, and that's why I'm long bonds here. I think that's the whole point here is like you got to kind of look past the projection for a year out, or you can be that type of trader. Like you can trade for a year out, but I can't do that because I don't even know if the world's going to be here in a year.
Let's take a quick 90-second break and see how that world is going to open up with the E-mini S&P sitting down 17 at the high end of the range since we've been open meaning since the show has been on for the last almost hour. We'll be back in 90 seconds. Tasty Live.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Diggy, we are back, son, and the opening bell is imminent here in about a minute and a half as the E-mini S&Ps are down 17. It looks like you're going to have a slightly lower, maybe slightly lower to unchanged opening in SPX, which you'll be able to find when you look at SET to find out where are those options. I could put a different view here so you can see it. There you go. Where the SPX closed.
Look at you. These are, look at this, changing the chart.
On the fly.
My God, look at
right?
Who is this guy?
What have I become?
Who is this guy?
Which will be the closing price for SPX. When you take a look at that from the settlement price, we'll take a look at that. Usually comes out about 15, 20 minutes after the market opens, sometimes a lot quicker than that as of late. But let's go across the board here. NASDAQ down 69, Russell down 8 or so, Dow down 140, and volatility up by 12 cents. Bonds in by 22. They're just one tick off of their lows. We sold some puts and bonds pre-market here before the market opens. Less than a minute now. Bitcoin sitting right where everything's right where it was the last time I quoted it just a few minutes ago before we took that break.
Yeah, FedEx had earnings after the close yesterday. Stock is up. Let's call it 30
it looks
bucks.
Like it's trading 385, let's say. So it's
about 2 times the expected move. So big move to the upside.
Yeah, 30.
I did not have a position on there. So
I should mention all your X's have dividends today, and that's not your ex-wives or ex-husbands or anything like that.
You don't get dividends from those. Are you kidding me? Those have drag. Those have drag, brother.
and the Qs, even the S&P is down 20, and the Qs have a dividend also, call it around 40 cents. But XLE, XLF, XLI, XLP, XRT, all your X's, check them. They all have around a 30 to 60 cent dividend if you have any positions in those. And the Qs, yesterday's dividend was an SPY. I think it was closer to $2. We'll figure out what that was later on today. Even the S&P's down 20, where we've been sitting for most of the morning. I think we're going to have an I think we have a lower, I should say, SET than the time before, which goes a little counterintuitive and well inside the expected move. Although $14 to the downside has been where it's kind of been its average. We'll see how that goes from here.
Yeah, I don't have. I took off a lot of risk yesterday, which was nice.
Yes, better than I did. I will give you that.
The gold silver position is still my biggest pain point.
Yeah, you don't have a gold silver ratio on. You just have gold and silver long deltas in there, right?
Yeah, that's what I meant. Just gold and silver in general.
Gold up 46 with long delta. It's 1% you think would be good, but I know you had that lofty 47 plus handle, which was 50 handles higher than this in your sights from last night. Silver's actually down after trading up to 74.60, $3.50 higher than where it is unchanged right now. Even the S&P is down 29, not going to make this easy for the bulls or anybody else or those with existing positions so far going into the weekend. Market lower, volatility higher. You're not getting paid for the weekend. This is not an easy premium selling market here. Even though it feels like you've had two-sided action, it hasn't been that way unless you're in the Russell, which has been more of two-sided and maybe unchanged-ish over the week. If you're
I don't know if I agree with that. I feel like it's been a good market to trade premium if you're trading it. Like you're out.
Yeah, if you're nimble. If you're
nimble. Yeah, I think that goes to what we were kind of talking about on Confirm and Send, where it's like, this is a different game than the 45 days, 21 exit. You got to be a little bit more aggressive than that. It's stuff that's moving 10, 20%. You got to kind of take the money and run. Yeah.
I agree with you. And my buddy Andre just put in here, he said, the VIX traded up to 150. That was VIX, not /VX. I don't think they had.
Oh, it did.
Yeah, I don't think they had VIX futures at that time.
Oh, was that 87 or when was that? Like,
I can. All right, well, hold on. He sends me charts and everything, but I have to take a better look at it.
Man, you got some good sources.
Yeah. It was 87,
and so that I don't even think the VIX was around at that time. So that was probably
it would be the implied volatility of the OEX we didn't even have we had SPX. It would be SPX options.
You had OEX.
And SPX. We had both.
Oh, you did.
We had both, yeah.
But that's why you were able to, because you were, when you've told this story before, because when volatility gets to 100% or over 100%, it projects that the market can go to zero or double within whatever that time frame is, within a year. VIX itself is 30 days, so it's telling you 30-day implied volatility. So you were able to sell puts at values that were you couldn't lose money, and that's
those prices got adjusted. Okay, I had to get taken to the arbitration committee, but those prices got adjusted.
I know, but that's what I'm saying is why I would feel in the modern age 100 VIX would be about as high as you could get, because you can't sell the 100 strike SPY put for $100. You just can't.
The good old days. The good old days.
But the only way you could do that is if volatility was at like 200%, which it's just not going to do that. It's not.
Volatility did get to 80 in 08, and I said around 8 or so. So in 08, it got to about 80. Really, the highs after that, maybe. And I got to thank Andre for doing this for me. I really appreciate it. So cool of you. Looks like we like 1, 2, 3, 4, 5, maybe a dozen times got up to around 50. You got some clustering between 40 and 20. Was that?
Just some FCX puts. I think we sold those on Wednesday for fast market.
Yeah, you sold the 40.
What's your assumption?
Yeah.
So I just took. I don't have anything really that's like pressing right now. I mean, I took off the puts that we sold.
You did this yesterday. You sold them at 205, and you just bought them back at 155. Great trade.
Then where did that come from? I don't know. Oh no, that was trades from the research team.
Trades from the research team. Give the guy some.
Yeah, that was Kai. Kai gave me that one.
Yep. Good work out of Kai.
Yeah, so I just took those off the board. I don't have a ton percolating here. I'm keeping my eye on oil because I closed out of the 120 call that we had as part of a strangle. I closed out of that yesterday into the close. If we get a little bit of a bounce in oil and volatility kind of stays here and doesn't expand as much as it has in the past, I would look to maybe sell out some another call there. A little higher this time.
Completely understand. Even the S&P is down 32, nowhere near the levels that we got up to last night of flirting with 6,700. We're 6,727, about 75 handles below that. Even the S&Ps are a little bit weak. Let's take a look at the rest of the market here, what's going on. APP, you mentioned it, down 13 and change. SanDisk down around 11 and change. SMCI, that's the dog in this whole thing, bringing down a lot of the other stocks with it, down $8. Huge move, almost 27, almost 28%. 22.21 down $8.60.
Send it to zero.
A dog with fleas. Carvana down 7. Tesla down 6 and change. I got a little bit of omni-directional, a little bit long delta in there. Meta down around 6. MU, your buddy, down 4. Buy the dip.
I think I did.
Kidding.
Yes.
I'm just
did
kidding.
I not do it yet? I thought I did. Yeah, I did. I did buy the dip yesterday.
Yesterday you did, yes.
Yesterday I did.
Yeah. At prices lower than this, I believe.
Volatility's coming in a little bit there. I'm long the 500 in May, short the 530 in April. I'm out a couple bucks on that. I'm out like $60.
Oracle down 4. That pig is back down around 151 or so. Google down 3. What you got going on now?
I just close. I'm closing out of some of the short premium that I've had against some of these call diagonal spreads, stuff that sold into up moves. Just closing them out, taking some short delta off the table here.
But
like that Microsoft option I sold at $3. It's at $1.37. I can sell it out again.
Yes. If Microsoft
rallies,
what you just covered?
I covered the short call.
The short call, got it. Microsoft down $4 $1.95. I'll put it there. Microsoft showing very little love to everyone right now. Microsoft well off of its highs, back down to 385. I shouldn't say back down to 385. I think it's about as low as it's been. Pretty close. 381 was as low as it's been. Even the S&P is down 36. NASDAQ down 195. Russell down 16, and the Dow down 100 and change. Volatility up by 50 cents. Volatility is bid so far this morning 24.44.
Yeah.
In volatility.
What are you thinking here for the rest of the day? You think we just kind of chop around here?
Well, I mean, I think it's
the option expiration, triple witching, yada yada yada. The weekend, oil, gold, all that, all the headlines.
Yeah, I'm not really seeing any. Well, listen, we've been a couple of minutes into the show.
I've made 2 trades. I got nothing to do.
Let's look at an SPX trade. Let's see what the let's see what the expected move in even the S&Ps is as we get to that. When you're looking at it, you're looking at around $41 or so. We'd be looking at the 0 days. That would be right here. Not the AM, which are untradeable, and on there you'll be looking at the ones that trade. They've got it marked as like weeklies.
Mm-hmm.
So if you go to SPX, let's take a look at that. You got that $41 expected move. There you go. And you'll notice that these 0 day options won't be trading.
So I'm in the 65.30 and the 66.20 are my short strikes. I went 15 points wide. So we're doing kind of in the middle of our risk. Usually it's either 10 or 20, 15 right in the middle there. We're actually doing I don't know if we'll have it ready for Monday, but Kai has been working on kind of a managing 0 day kind of study. Does it make sense to leg out of one side at X amount? Like, I said that if the spread goes to 50 cents, that's probably about as low as it goes in a short period of time. So we're going to look at kind of legging out and see if there's any positive or negative to it. I don't know. I don't know if there will be. I don't think there's going to be that much of a change. Like, I think it would just be better to close the position overall because it's probably a winning trade. I would
tend to agree with you. You were asking me about this market. It seems quite orderly for the down move, no capitulation, back and forth. So I'm not going to make a prediction on what I think the market's going to do, but I'm encouraged by the lower opening because I think it scares the children a little bit. Now watch volatility. Volatility got up to 24.95 last night. I would imagine we don't get anywhere near that. But going into a weekend, I think we see volatility possibly slightly green, which is only a 35 cent move from here. So you would expect it to have a much bigger move here. And even the S&Ps slightly green. I think we get a kind of no movement kind of trade here. Now, if you get oil to go, below 92 or
if oil's down over $1, the market rips 40.
Market rips. I agree with you there.
And I feel like that, and just to go on a tangent, because I think that's what I'm watching is oil, obviously.
Sure, I think everybody is.
I think the asymmetry of risk of a big move is to the upside right now, because I think if you have a 1 day, like if we,
but I have those deltas and I haven't been paid. So
sure.
I mean, sure. I might be talking my book a little bit.
But what I'm kind of saying is, I think if you had a $10 move in oil on Monday, I think E-minis are down 50.
Yeah.
Like that's the sort of move. If you had a $10 downside move in oil come into Monday, I think E-minis are up 150.
Yeah.
Like that's what it feels like to me. Like there's the $10 move in oil is more risky from a market move if it's happening to the downside. I think that's kind of where, because I think the market is kind of playing for the higher oil, the risk off type narrative. And if that switch comes, it's gonna be a wild one. That's just my opinion.
Let me give your market awareness some math. Are you ready for this? Because I think this will be compelling, and somebody can have a different opinion than you or anything else like that. But look at the volatility skew in SPY for 28 days. Let's just say amongst friends we're 656. You go $10 higher to 666, and those calls are trading around $10.75. You go down from 656 to 46, and those puts are trading around $11.50. So you've got about an 80-cent put skew in here. You typically, on a down move like this with volatility elevated, that put skew would be a lot more elevated.
You'll see that more if you go 50 points out of the money. You're going to see those puts are jacked. I mean,
the tail risk is there. Yeah. Tail risk is definitely there. But you've got a $30 expected move, which implies top or bottom. You look at volatility skew, you should be going around $15. The tails are going to be elevated
for sure
by volatility there, because nobody wants to sell tail risk here. And that's why I talked a lot about, maybe even just a vertical spread is especially with the amount of buying power you're using and the environment, is almost wide vertical spread is almost better than at the expected move, is almost better than just a naked put.
Yeah.
All right, let's take a quick 90-second break and come back. We got more Tasty Live. We got Fast Market. You're going to find trades.
That's what I need, because, I'm just looking at my positions. Nothing's really... it's not a good or a bad day. It's just kind of nothing's happening for me. I need something. I need some juice. I wish I held those FCX puts.
Let's hope that the audience give you a little something here. We'll take a quick 90-second break. Even the S&P down 18. Dow just went up 4 or 1. We'll be back in 90 seconds. Let's Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80-plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nikki, we are back, my son, but we got to Kembe. Even the S&Ps we're trying to...
Oh.
ASTS? Got you into that.
I did that. We did that little short video with Gus. It was you did.
Oh, sure. When we do our 2 trades, yes.
Yeah. Well, you'll notice the Rocket Lab puts aren't there either. I closed that for you, no problem, too.
Oh, good job.
Took like $100 out of that, but I did a call diagonal spread there. I mean, I was putting in orders above the market, meaning I was trying to sell it for higher than where the market was trading at. And I was just like, you know what? If I get this ding, it's great. I take a little risk off, take some profits, move on. So call diagonal spread, took $100 out of it.
Very nice. Proud of you.
I got long a little NASDAQ here. I was actually lower, but I was using the big boy NASDAQ and fat fingered that. It usually happens when we're remote because I'm not, it's a little bit different. It's not as smooth for me here as an operator, but took that one off. But I got in a...
You fat fingered buying the NASDAQ at 419. You sold it at 433, and then you bought the smaller ones at 434 or so. So you've got a better cost basis than what you did. It never happens to me that way. If I fat finger something, I lose money because I'm fortunate and lucky. The world has a way of evening things out. And people like you, when you fat finger something, you don't do something you really want to do, you make money on it. And others like you.
Okay. All right.
Even the S&P is down 35, NASDAQ down 200, Russell down 17, Dow down 100 and change. If you notice, the Russell, when it went unchanged, actually green for a quick second, volatility really hadn't moved. It was really up around 30 cents, now up 60 cents to 24.59. I'm taking a key on volatility to see what's going on in this market. Right now, it looks a little bit weak.
Doesn't look great. You got oil rallying a little bit, volatility futures at the highs, gold and silver giving it up a little bit. I don't like.
So far you are 100% correct. Volatility in oil down to under 90 now, 89.99 on volatility futures. Not on implied volatility in oil. They're going to scare the children here again.
You think so?
Yeah. Looks like it. We'll see.
All right, let's get to it.
Let's do it. Fast market. Oh, my God.
I was a little off. I had one of my monitors.
I know, you're remote. You're remote. Everything, blame it on whatever you want.
But look, technology these days, man.
It's called being able to adapt, son.
I'm trying.
Do better.
Let's do it.
I'm ready. /GC. They try to mess with you. I almost said a curse word.
Yeah. Today's downside. Yeah, go. I'm sorry.
It does make sense though, right? Volatility is elevated. IB rank of 53.
All right, so they're looking at neutral to slight. This Jake in Omaha, neutral to slightly bullish iron condor. 4250 and 5100 for the April 27th. Let's see that. Okay, that's 42. Man, I had to scroll quite a bit. I mean, there's some volatility here.
Yep.
42 and then 51. I got no problem with this because if I could test on the upside, ooh boy, would this be a good trade for me. And not this trade itself, but the move would be quite beneficial for my overall positions here. All right, I'm gonna try and get filled here at like 7. Markets are moving. You got to be careful here. I mean, this is you got gold.
Watch your pricing for sure.
Yeah, so I just put it in like a little bit above 7.
Okay.
$7.
Okay.
I'm gonna put it at 7. I'm gonna move it to 7 and just let it sit for a second because you got You got volatility expanding. You have oil or gold.
Oil backing off here, right? It was up 28. It's up 17 right now.
But you got gold kind of whippy here. So I'm gonna let it sit, see if they come to me. Hopefully we get filled on this before the end of this show. And if not, I'll look at the prices. But I've got it working for $7 right now. I like it.
All right.
About 1/4 of the width, a little bit less, a little bit more. Oh no. USO. Okay, looking at USO, May 16th options. The 60 Delta call sits around 180. Am I reading that right? You are. If I sell a 90, 180 strangle, the upside risk seems manageable relative to the rest of the portfolio. Dave, yes. There's certainly risk, of course. I like this sort of setup. I have been doing, instead of both sides, I have been doing 1/2, 1/3 type ratios in USO. I'm pretty locked and loaded. I'm long like the 120 and the 125 calls. I'm short like the 135 and the 150s in more units. I think that's a more interesting play, in my opinion. We've been doing this in MCL and CL as well. I think doing that sort of trade as opposed to just the short strangle, I think is a little bit more interesting, just so you can sell some units on the upside. So I have this on. I'm going to stay with what I have. So I'm going to pass on this one. But if we do get a little bit of a rally in oil, I'm going to look at the oil futures and maybe sell out that call again.
Okay. I like it. SPX, we did one. Go.
SPX Friday, 0-day Iron Condor. Let's run it. Fingers crossed. No surprise announcement before noon. I do have to put in an order to close that.
I can do that for you. Where do you want to close it?
What do you think?
Well, you sold it at 470. It's sitting right there, maybe 455 or so. I don't know. $4. You want to go 390? $4?
$395. $75.
$395. There you go. How did you base that on? Anything?
Because we went. You said $4 first, and then you said $390. I was like, you know what? $395, right in the middle. You know, kind of meet everybody halfway. This is
perfect.
Yeah, it's compromise.
Yeah.
So we're in on this. I'm hoping for the best.
Yep. Next one, SanDisk. These don't have the greatest markets, but they saw Jim Cramer discussing it. Keep going.
Okay. Keep an eye on SanDisk. If everyone's watching it, I might sell some premium. Putting up an Iron Condor in May, the 605.80 put spread and the 1110, 1130 call spread for about 850. Chad and Fargo. I'm interested to see if this is actually what we will trade at.
So $20.
I guess this is probably
Condor. I don't know. SanDisk markets are high, are wide. So Chad, we might not be able to get filled there. But if you're getting $8.50 for a $20 wide Iron Condor, when you're trying to collect 1/3 with the strikes closer to $6-ish, this one's going to have a lot less probability of profit, lower probability of profit, I'll say in English this time, than what we would normally like.
Yes.
SanDisk just a skosh off its highs, but it is down $23. Ivy rank of 60 in there. So you look at, are they going into April or are they going into May? May options here are
so the put. Wide. You're really just selling the put spread here.
You're really not going to trade this because you can't trade something that has $7 wide markets.
Yeah, but
even with defined risk,
if you did get filled on this and you traded this already, your put spread is probably somewhere between $6 and $7.
Yeah,
and your call spread is like $1 to $1.50, and so you're really just. I would almost rather just do the put spread, and if you get the bounce, you could close the trade. I think that call spread is really going to be kind of a thorn in your side when you're trying to manage and trade around this position.
Okay.
So we're gonna pass. Ooh, not a great day for us, Dad.
No, even
trade wise
down 49, trading at 66.10.
LRCX, so this is Adam in Charlotte. LRCX has strong support around 200, selling a strangle with the 200 put and roughly 300 call in May.
Yeah. What do you think here in LRCX?
I think, so let's see what the delta is on this. So 200, 300. Man, there's a lot of call skew here. And these options are like $2 wide as well.
Yeah. Here comes the scare of the children. Volatility making new highs or back to 24.95. Something that I really didn't want to see. Volatility 24.95 or so. Even the S&P is down 54, trading 66 and change. Now at or below the low that we made. Lower than the lows that we made yesterday. 66.11.
These options are not super liquid. I was going to make this a little bit more neutral because I have some long delta in SMH.
Yeah.
And so I don't need to load the boat here. I'd rather be short the volatility. I don't know where I'm going to get filled here.
Yeah, it's a tough one. You really are supporting Adam in North Carolina.
Ugh. I was selling just like a 1 standard deviation, actually a little bit past that. I'm going to put it in at 950, and if I don't get filled there, I'm going to just go up.
All right.
951, they price improved me. All right.
Oh, that should make you feel even worse.
183.10.
You did.
Strangle.
950, 183.10.
Vol up $1.
Oof. Vol up a full $1. I told you they're going to scare the children today.
Yeah, you got to scare them.
Yeah. Yeah. I just hope they don't try to scare me through the whole weekend. They're doing a really good job of it right now. I'm not going to lie.
Oh, yeah.
Uncle.
All right. AI. Oof. The ticker, not the I don't know, new technology. This is the ticker AI. AI is getting close to its lows, either picking up shares or selling an in the money put. Emily, I guess
AI. Let's take a look at the markets in AI. She is, it's an $8 stock, so $8.50 stock. Hasn't had an uptick. I mean, I know it was as low as $7.50 or so earlier in the month of March, maybe end of February. IB rank of 58 is pretty good. Let's take a look at the markets here in May. I don't know. I almost think it is a share thing. I agree with you, Emily, in Vancouver.
I think if you wanted,
you could sell in the money puts, but let's take a look at it for a quick second.
You're only gonna get like 20 cents, 25
I was gonna
cents.
say she makes a good point. I mean, it's something to look at. I mean, if you sell the 10 puts, look at the market here, 182, 206. You may get 35-ish cents more. I really just think you buy the stock.
I agree. I over the last 2 weeks have gotten rid of some of these stock positions that I've just kind of been holding. Rivian, DraftKings. I've had some stuff that I've cleaned up, so I don't want to add to this. I agree with what my dad is saying. I think if you're bullish here, you just buy the stock, or maybe if you don't want the downside risk, you buy leap calls or something like that, in the money calls to reduce if you're a cash or IRA type account, maybe you do that. But I'm going to pass on this one.
Open interest on those puts is 7 with 25, 30-cent wide markets. Stock is 1 penny wide.
Yeah.
848, 849. That's where you go.
Yeah.
Next one, please. Love.
It's a rough day for the Bats performance.
Yes. Well, you have a little bit of long delta in your portfolio. I'm certainly picking up long delta in mine.
I don't mean market-wise. I mean fast market-wise.
Oh, and fast market too. But I'm picking up long delta in my portfolio.
Yeah.
Put on some trades with long delta. Short volatility. None of that is working.
40 puts. Are we going into this with your sister? I have the 37s in April.
Love
the
well
37 and a half. So.
Off of its highs just made in early February of 53, now down to 40, where it was kind of hanging out for all of last year, all of this year until it made that big run up. Ivy rank of 55 is pretty good. It has earnings April 22nd.
Oh God. These are not very liquid options, and I went at a price that I did not think I would get filled at, and I did.
Market's 197, 240. You went in at 220, which is really kind of around mid-price. It's not like, you got to go in at,
Yeah, but I'm the only volume. I made that market. That moved to 197 because I put in the mid price at 220. That was 141, 170. Okay. And I said, okay, come get me at 220. And now market's at 220. Because I'm there. I just made that market.
Okay. So I'll tell you what happened. And this is a great example. You said when you went in for this option right here, it was 170, 241, right?
Yeah.
So you see that market and you figure that the bid is much lower because the mid price is going to be what, $2 or so.
Yeah.
So you go in at 220 and you get filled right away. Now, if you go back in time when we didn't have the great disseminated markets like we do now, and somebody like me was making a market who needed to buy puts and fair value was, let's say,
$2.
What's that?
It would probably be at $2 is fair value.
No, if I needed to buy puts, I want fair value is close to probably, let's say 230 or 220.
Yeah, sure.
Whatever. I make that bid so much lower and that offer so much tighter because I'll still sell them at 240. I'd rather sell them at 260 because I already have too many of them. But I'll sell them at 240 if I can get a couple of fishes to sell me some 10 or 15 cents under theoretical.
You call me a fish. That's pretty. If that's
your takeaway, if that's what it has to be.
I hear you. Oh, I'm in with Ellie. I sold the 37 and a halves. Now it's mid price at 220. I'm a market maker. And I got another fish swimming with me. There's two of us. I can see it in the volume. Two of us with an open interest of 10. We got a whole gang of fish.
Look, the offer's 220 now.
Oh, so I'm up 10, 15 cents on this already.
You're like the shark now. You're not the little pilot fish anymore. You're the shark.
Citadel quivers when I come knocking. Kenny G, he doesn't want any piece of my orders. Wait, sorry, we missed that last one. Sorry,
I'm sorry.
Or are we on? Okay, I bet. All right.
iBit. All right. Yeah. Vanetta mentioned this the other day.
Okay. Likely heats up once the situation clears. Fundamentals still look intact. What fundamentals? We're just buying.
That's right.
I don't see any fundamentals.
iBit down 15 cents, 39 and change. What do you think? Good IV rank of 52, not great, but good IV rank. I mean, this has had a higher implied volatility. Volatility has been pretty steady here at 52.
I am long stock, so I'm going to put on a strangle that's covered to the upside, more and more painful to the downside.
Yep. Mm-hmm.
For my position as a whole.
Okay.
Oh my God, come on. The market makers are really mad at me for
picking them off.
For picking them off on the love put. All right. Delta neutral strangle, 30 delta. I did the 37.43 strangle in April. I'm covered on the upside via shares. Downside becomes even more painful than it already is, which is fairly painful.
But your cost basis is so much lower now.
Yes. I'm reducing cost basis.
Even the S&P down 54, just about 4 handles off of their lows of 66 even.
Yeah, volatility same bid. You got oil basically unchanged. Bonds moving 113.06.
Yeah, bonds going big lower move here and going lower in a big way. Look at this big move here.
Why'd you make me sell those puts?
Sometimes you gotta stop going to the well.
I know, seriously, you gotta take your money and run.
Times. Do we have one more?
Yeah, we got 2 more.
All right, let's take a look at it.
Adobe, okay.
Oof. ADBE.
225, 205 put spread in May, trading near multi-year lows. Okay. All right. 225, 205, $3. Do I just sell the 210 puts?
Oof. I mean, Adobe doesn't have the greatest markets. I think you have to trade. I think vertical spreads are probably the best call here in Adobe. I mean, do you want this kind of a million shares have traded so far today? Oh, just over 1 million shares. I mean, markets are okay for a $200 stock. They're not amazing at 30 cents wide. I do a vertical spread.
Ooh.
Got filled right away. Got filled right away selling puts, right? I mean, put spread.
I did the 225, 205.
You did it for 330 with a mid price of 319.
Yeah, I don't like that fill either. I'm getting filled. Maybe it's a sign the volatility is expanding, but these markets are.
No, what it is markets are wide, and you're selling risk.
Yes. So you're getting filled at
going higher. So, ladies and gentlemen at home, when you have markets like this a little wider, heed my son's warning here and go in above the mid price and work the order down.
Yeah, and sometimes you'll just get 10, 15 cents out of your love puts. If you look at those now, they're 192 at 222.
You the man.
That's a mid price of 210.
You the man.
205, something like that. Amazing. All right, last one here. DIA, okay. Long term, I'm still bullish on the overall market. Feels like a good spot to add some delta. Selling the 30 delta put spreads, maybe $50 wide. Diamond's gotten whacked over the last couple weeks here.
Yep.
I'm going to do a lesser. I like this trade. If you're looking for new positions, you're trying to buy the dip, doing it strategically, short some volatility. I've got that kind of already. So I'm going to go with what I did in SPY yesterday, selling some units on the upside, playing for a little bit of a bounce, but not as heavy on the risk to the downside.
Okie dokie.
So I'm going to do the 1x2 crab trade.
All right, my friend.
All right, we're in. I bought the 470 in May, sold 2 of the 480s in April. I did have $5 and change debit.
$5.35. The more you pay for that, the worse it is for you, even though you have positive theta decay in there of almost $9 or $10. So
yeah,
it is and it gives you one long delta, not a huge amount of long.
Yeah, you're short vol.
That is correct. You're short vol. There's your there's your report card. What do you give yourself as a report card? If you had a
it was pretty good. It was okay. On a day like today, it was okay.
Yeah, for a day like today is right. Even the S&Ps without a downtick all morning, all the upticks were last night when we traded up to 66.85. We are on our lows down 1% now. NASDAQ down 317 on its lows. Russell down 35 on its lows. Volatility down 270 and change. I'm sorry. Dow down 270 change is actually the strongest of the group by a 2-to-1 margin or more, but you can see the Dow has been quite weak, weaker than most over this time frame. Volatility 25.15 does not want to die, putting a lot of egg on my face for sure. 25.20, I did say we were going to kind of scare the children to the downside. This is a scare. Maybe 10 more handles on the EM and the S&Ps. And we have the scare in place. But you know what? Don't take my word for it. Take a look at volatility. Make sure volatility comes off of its highs before you think that we get a little footing into this market. Because right now, even with oil basically unchanged, up 33 cents, 34 cents, we haven't had a big move in volatility. We haven't had a big move in oil to the upside. It's definitely been going sideways. Let's not say it's been selling off. The one thing that has been selling off has been volatility. But again, still lofty, right? At 89 now, down $3. Still lofty relative. It's not, back into the 40s, 50s, or 60s. It's still in the flirting with 90 here. So you still have volatility bid, although coming in encouraging for maybe some oil capitulation to the oil capitulation of the upside being over, but we'll see. Gold down $16. I guess last night when gold rallied, they probably sold all that, a lot that they needed to raise capital for everything else. And
that was when the smelters liquidated.
Got it. Right. Those are the no. Totally understand. Silver's been weak all day. It's weak by a big margin to gold, down 2.5%+, down almost $2. Let's take a look at the market itself here. Market itself not looking good. SanDisk down 35. You just traded. AppLovin down 12. Meta down 12. TSM down 9. MU even down 10. Trading about $2 off of its lows. That never goes down. BE down $7. It's a big move there. Earnings are coming on 429. Ivy rank of 51. Starting to percolate a little bit there. Here's your SPY volatility, flirting with 40, a number you don't usually see in a ETF. So maybe if you want the less volatile product that's even down 1% today, but not down 4, 5, 6% like some of these stocks might be, and you want to go so that has a large implied volatility, SPY, Qs, NASDAQ, the rest of them might be your play to go. Let's see what's moving to the upside before we take a quick break. Not a lot. FedEx for earnings up $6, but it is off of its highs, trade up to $3.80. Now $18 below that. What was once outside the expected move, quickly inside the expected move. And then you got volatility products, which you would imagine the evil empire Goldman Sachs up $1.50 or so, OKLO up $1.50, Qualcomm up. Really few and far in between. Some of the oil related stocks, which have been getting hit as of late, are higher also. All right, son, give me some words of encouragement. What do you think?
We got a break. We got a market measure coming up.
Let's do it. We'll take a quick 90-second break and come back. We got a market measure coming up. Tight-lipped from Nick Batista. Sad.
I need more coffee. We got to get the market measure.
Sad. Market measure next.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies. Covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Nikki, we are back, my son. And you know what that means? Time for a little bit more Tasty Live as we take a look at this market with a market measure. Let's first take a look at the market. Even the S&P is down 63 and change. A NASDAQ down 300. Russell down 41, Dow down 300 and change, and volatility just about 15 cents off of its highs of 25.30. We're 25.20. There you go right now. Let's take a look, because I think this is a precarious place for the market to catch a bid. It has to catch a bid here a little bit, in my opinion, as volatility was just selling off a second ago, as even the S&Ps were doing basically nothing, not going higher, not going lower. Key on volatility, I think.
You don't like it now. You
bought some EMI. I just bought some EMI S&Ps. I did not sell the futures. I think the futures are probably a better trade at this moment.
Vol futures I
bought some E-mini S&Ps at 65.95 right here.
Ooh.
I think vol futures are probably a better sale at 25.20 if you can get it.
You think so?
But I screwed up. I mean, I think so.
All right. Well, market measure. Let's do it.
All right, we'll see.
Yeah, I don't know. Doesn't look good.
Listen. As of right now, let me backtrack here for everybody.
Yeah.
I'm on tilt. Even the S&Ps have not.
See, which is I will say
have not rallied, and volatility has not come in that much.
That's what I was about to say, and I
really should be waiting for volatility to come in by 30, 40, 50 cents before doing anything in volatility or E-mini S&Ps. I'm just trying to be machismo right now. I'll tell you exactly who I am. I don't know if you remember the boxer. I think he was from Panama. No Mas. Who said no Mas? Roberto Duran. Phenomenal boxer, amazing boxer, tough as nails. One of his last fights, he got hit once or twice, and he just said no mas. This was a guy who could take and walked away, turned around and was out of the fight. I mean, this was a guy who would run through brick walls. He was an amazing champion. He just had enough, and I think I capitulated right there.
So that's how you feel. You feel like you're walking away. That was it.
That's correct.
Ooh, that's scary. Yeah,
I know. I too, because it's my money.
I've been looking at the VIX. The VIX has obviously been perky the whole day. It doesn't look good.
It doesn't. There's not one encouraging thing here. Bitcoin is weak. Bonds are weak. bonds just flirted with 113. I know that's what everybody will talking about. Rates will be increasing, bonds at 113. Now, if they rally, point and a half, that news will go away, right? But I mean, that's what they're going to say now. They're going to say that oil, basically unchanged is bearish for the market at, lofty levels of 95 and change, especially with bonds going down to 113 and change again. Gold is weak. Everybody's selling assets. Silver's weak. There's no argument with that, because that is what you can see across the board. But, every once in a while, you got to say to yourself, I got an opinion that might be the opposite of everybody else.
They always say markets don't bottom on Fridays. So you got to be careful.
You're right. You're 100% correct. You're 100% correct. I have my 96 offer in.
There you go.
I'm just kidding. Go ahead.
All right. Market measure.
Mm-hmm.
Let's do it. Oil volatility, though, has not expanded.
No, it hasn't.
Interesting.
Yeah.
Which is interesting. All right. The zero DTE option markets, and this is sponsored by the SIBO, of course. The zero DTE option market gives traders access to rapid results and liquid prices. So far, our research has avoided making directional assumptions and focused on delta neutral approaches to selling zero DTE. But as the market has climbed higher and higher, it is natural to wonder what happens if we decide to pick a side.
Yeah.
Today, let's crunch some data on how different approaches to selling zero DTE SPX puts have performed.
Okie dokie.
Let's do it. Certainly been good outside of the last couple weeks here, months. So we've got 2.5 years of data here. We consider the results of selling one put spread every day with an at-the-money short strike. Consider a range of widths. So that's what we're going to be looking at here. Trades were closed if they reached 10% of the max profit. And then examine the total number of winning trades and total profits and losses and the maximum drawdowns, the largest amount someone could have lost, which is the largest amount someone could have lost if they did this every day starting at the unluckiest time. So when you look at the max drawdown, it's going to be more than the width of the spread because it's cumulative. It's like a period of time where you had the biggest drawdown before getting to a winning stretch.
Yeah.
So it's your max drawdown through this period. And we looked at this looking for 25% of the max profit instead of 10%. So those are the two metrics that we're going to look at here.
All right, let's take a look at it.
Cool.
And we all hate max drawdowns, right?
Of course. I would like to avoid those, generally speaking. And so the way you can kind of read the max drawdowns is like looking at the 30-point wide. Mm-hmm. Essentially, you had 3 in a row that were probably close to 4, actually, because you're collecting some premium here. But you had 4 in a row was your max drawdown. That was like kind of your worst case scenario. That's why the risk is $9,000 in terms of your max drawdown, as opposed to a 30-point wide spread that can only go to $30 minus the credit. So it tells you that 3 to 4 occurrences in a row is basically your worst one. In terms of your win percentage, 90 to 91% of the time you're taking profits on these. That's a function of this data set. Again, going to the question that we've gotten a couple times now. Why is Thursday a bad day to do zero DT? I don't know. It just happened to be a small data set, and that's the worst day. Same thing here. We could redo this study in 5 years, and this could be a totally different story. It's just the way that the market has moved. You can see across the board positive P&Ls, and your max drawdown was a handful of days in a row here.
Yeah. Okay. Well, right now, let's put it in perspective with how you're doing. You're down around 70 cents on your trade.
Damn.
Not max yet, but you're trying.
Yeah, but if you did, so like just looking at the markets here over the last couple of weeks, you probably had 2 occurrences last week, and then maybe 3 occurrences this week that you probably lost on. So it just kind of gives you an idea of like when these are not working. It's when volatility is super high and that, you have kind of the downside move.
Mm-hmm. Mm-hmm. Yeah.
So here we're looking at opening at 9 a.m. and then closing at a 10% profit. Again, across the board profitable here on your max drawdowns. You're looking at about 4 to 5 occurrences. So, just keep that in mind is 4 or 5 occurrences. If you can't withstand that, you probably got to adjust what you're doing here with these trades.
Yep. I don't know what to say here.
No, there's nothing more. It's just, that's just the stats. So now we're looking at opened at the open, closing for 25% of the max profit. So again, very high probability. Your P&L is increasing, your average P&L, because you are taking more profits. But again, max drawdowns, they're staying pretty high here. I think across the board, just from my experience with SPX trades, I've been happy that in general that I'm taking smaller profits.
Yeah.
10, 15%, that's good for me. Unless this is like your core trade, maybe you can do this a little bit differently. But for me, that's kind of what I'm looking at.
Okie dokie. I agree.
And then here, so opened at 9 a.m. So we've looked at the open and then 30 minutes after the open. This is closed at 25% of the max profit. Again, value is going up for P&L. Max drawdown actually tightens up a little bit because you're taking a little bit more profit. And again, these trade like 10 when you're doing one side, the 10% versus 15% versus 20 to 25% of the max profit, they're all going to be basically the same because you're probably having that same, like the 10% probably closes you out at 9 a.m. and then the 20% close you out at 9:15. It's kind of that same sort of move when you're talking about those smaller differences. So again, got to be careful with the max drawdowns.
Totally agree, son. Totally agree. But how do you watch out for the max draw? I mean, you set that on entry, right?
I don't mean you can control that. I just mean that if you are...
What you have to think is it's not as easy as what sometimes we show on the show, taking a quick dollar in 15, 20 minutes or holding something that goes to almost a full loss and the market, with high implied volatility like you have now, 25-20, we're going to have a little bit of two-sided action, although it doesn't seem like so far.
Not today.
So far today, right? I mean, we were down only 15 on the E-mini S&Ps near the opening there, or right after the opening. We're down 60 right now. Volatility 25.15, so about 15 points, 15 cents off of its highs. How do you do this? You got to set it on entry. What you should be taking away from this whole thing is you got to expect it sometimes. Now, you should only expect it a handful of times. So if you see it happening more than a handful of times, you got to think about one or two things. Volatility was low and expanding and continuing to expand, or your strikes are too tight.
Yes.
That's the two. That's the two.
Yeah.
Because the math is the math. Go ahead.
Good point. So over the duration of the study, SPX has gone from 3,800 to 6,600. Can you believe that's the range that we've had over the last 2.5 years?
No, I would not have. I could remember if I think about it, but no, I would not.
I know, it's pretty incredible.
It is. It really is. And where are we sitting? It's 6,600 or so. SPX is going to be lower. SPX is sitting at 6,550.
Right there. Sticking to defined risk helps traders manage some of these, even though you will have large drawdowns, higher profit targets. We're able to take home more profit overall, but that results in more exposure to drawdowns. Obviously, if you're trying to take more profit, you're going to have more risk in general. So that's especially the case with wider spreads. There are not clear differences in results for traders who sold their puts between the open and 9 a.m. I think this is kind of concurrent with what Kai has been doing on Mondays. There's not a huge difference between that 30-minute window. Sometimes one is better than the other, but the times where the other is better than the other evens out. You're going to have one, if you have 10 occurrences, one day it would be, 5 of those, it would be better to do at 8:30. 5 of those, it would be better to do at 9. It evens out over the long run. So you would have to be a pick and choosing better than a coin flip, which is probably
correct.
hard.
That is correct.
So even narrowing our trading all the way down to SPX 0-day credit put spreads leaves a wide range to explore. In coming weeks, we will experiment with short strike placement, trade management, and rolling. We got more coming your way with 0DT.
We do. So
Today, Junior.
Like I told you, I'm on tilt, son.
I know, it's okay. Well, you got 10 handles. 15 handles, maybe.
10 handles right now. I was down around 5 handles on them, so you would well inside the range. Volatility 25.05, a lot more encouraging as it backed off a little bit off its highs of 25.30. Mini S&Ps really haven't moved that much. 5 handles from a vol contraction of around 15 to 20 cents. Bonds are 112.31. Bonds continue to go lower. Let's see if bonds going lower has still the negative effect on the E-mini S&Ps. Oil /CL up 30 cents. 25 and change. IV rank of 66 continues to go lower as volatility goes lower. Oil has not contracted. It's been staying sideways. Let's paint the obvious picture here. We can think that oil is going lower because volatility is going lower, but so far it's been going absolutely sideways. You say markets don't make lows on Fridays.
That's what they say. I can't take credit for that.
That is what they say in a bull market. If we had a 5-year, 10-year, 1-year bear market, they'd be saying they don't make highs.
Yeah, Friday. That's true.
It's just the way it is. Let's take a quick 90-second break. I had a good statistic here on how.
Oh, you got your Taiwanese sources sending us some good stuff. I love it.
Yeah, I can't find it. Maybe I'll find it on this break for you.
Yeah.
About the amount of volume that's been trading. But anyway, we'll take.
It doesn't seem like it's that high.
You know what? I haven't looked at E-mini S&Ps volume on the close. We should look at that. If you look at the E-mini S&Ps, and again, it's just more banter, right? E-mini S&Ps 600,000 have traded, and it's the first hour between friends that Yeah, you need your little
395. We got it.
Are only down 51. I say only down.
Look at that.
Because I'm long them. You got filled at 395. You need a little bit of a rally on your 0-day trade to book that profit. I like your 0-day trade better than my scalp. So I haven't scalped them yet. Of my buy of E-mini S&Ps, even though my E-mini S&Ps have had less movement in them and more positive right now. Your trade was better. My Taiwanese sources just told me 1.7 million SPUs traded yesterday. We're on a pace right now to be at that or more, but that's decent sized volume.
Yeah, but you got it's expiration. I mean,
yep.
You got to expect to have a little bit more volatility here.
You got to expect the unexpected.
Yeah. Yes.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming? We got my man Q from Tasty
in the house.
World headquarters in the house. We'll be back in 90 seconds with Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. We got more Tasty Live, but before we get there, even the S&P has just traded back down to 66.95, a number I did not want them to get to. Haven't done anything with them. They traded up to about 15 or so. Didn't do anything with them there. Volatility, oil now up 90 cents. Forget about volatility for a quick second, but volatility is 25.15. Oil is now up about 95 cents, about as high as it's been. So oil catching a bid, helping the market to you would think help the market to go lower. Bonds 112.28. It does look like there's a fire sale across the board in the market and everywhere. Volatility has not made a new high as we get back down to these lows and higher highs in oil. I think it's just a drowning man reaching for a straw here. I'm destined to take about a 30-handle loss because I am not staying mechanical.
You didn't take your 10, 15 tips?
I'm becoming an investor, son. I am the world's worst. I'm not the world's worst investor. I'm not putting that out there. I'm an amazing investor.
What did I say? There's
Can we, before I bring in Q, can I get to some sad news?
Yeah.
My Taiwanese sources, Peter, and others have told me, my man Richard, Chuck Norris, may he rest in peace, died.
So sad. So sad.
It is sad. Did you, I mean, I grew up with Chuck Norris. You couldn't have grown up with Chuck Norris. He was probably more of like a meme for you guys.
Yeah, it was more of a meme. It was more of a meme. But I knew, of course you know Chuck Norris.
You were either a Chuck Norris or a Van Damme fan. It was like Mets, Yankees, Cubs, Sox.
Couldn't be both.
Could not be both. You could not be both. Claude Van Damme or Chuck Norris. And then they worked together for a little while. They mended ways. I was a Chuck Norris guy. To be truthful, I was a Billy Jack guy, but that's another story.
Okay. All right.
Yeah. Anyway, you ready to bring in our next guest?
Of course.
Well, our first guest of the day.
Our only guest.
Yeah, our only guest.
Nobody else wants to hang out with us, but Q. Q loves us. So
Take the Trade World headquarters, my man Q from the Trade Desk. How are you, brother?
Fellas, how's it going? Doing well. How are you?
We're doing well. Man, you are like an even keel breath of fresh air every day. You are wise beyond your age. I didn't want to say it a different way, but you are wise beyond your age.
Which is kind of a shock because if you know Mark the trainer,
Because we're not.
We're not. But the apple usually doesn't fall far from the tree. So I feel like my dad and I, share the same sentimentality of our personalities here. You and Mark, quite the deviation.
Yeah, I'm a pretty even-keeled individual.
Yeah.
You know.
And your dad's a little excitable.
Yeah.
Yeah.
He's got that more like Brooklyn, a little jumpy kind of thing.
Yeah. Which we know and love.
Yes.
Yeah.
Hey, fun fact here. Do you know the movie Billy Jack? Neither one of you know the movie Billy Jack, right?
No.
I don't think it stands the test of time, but you can go and search probably YouTube, Billy Jack, and then just fight scene. Probably fight scene.
Okay.
And he says something to the effect when he's talking to the cop. He says, "I'm gonna take my right foot," and they're standing real close to each other. "I'm gonna take my right foot, and I'm gonna put it on the left side of your face."
I think I know this. Yeah. I think I know that. I think I've seen this. Yeah.
Fun fact from my Taiwanese source, so you can figure out who it is. Billy Jack filmed in Prescott, Arizona.
Oh, Frankie knows that. Frankie, I think, would be a good tour guide.
No. Frankie would be a good guy to win drinks at a bar with, because I don't think he drinks anymore, so you can win his drink too. Like when they do like trivia night. Like
but Frankie, I think between Prescott and Rhinelander, I think Frankie could be like the perfect tour guide for those two places. I think he would know all the spots.
I agree with you. I agree.
That's the shuffle zone. Frankie's shuffle zone. He's very familiar with
it. He's right.
Yes.
You are right. All right, Q, what do you got for us today?
Yeah.
How's the trade desk?
Yeah, trade desk. I mean, expiration Friday, pretty busy. Got some people. We had some people trading the AMs a little bit more recently, because I feel like the volatility was there overnight for people to try and take that in. Some people trading the AMs this expiration more than typical, I saw, and then also lots and lots of positions expiring, how to manage those and what to do, because sometimes customers will ask about what are their options on the day of expiration, and a lot of the time I'm sort of like, you're at where you're at. The options are almost trading at parity because it is expiration. I mean, if it's like something like SPX, that's a little different. But if it's just like a regular stock position that you have on options on stock, things like that, it's pretty much like, your options are almost at parity. If you want to roll them, you can just close it and open something new if you would like. And then, always pay attention to that assignment risk. We didn't have too much overnight assignment this expiration, because I feel like honestly a lot of the assignment happened yesterday based on some of the moves earlier this week. And
if you're short calls into a 300-point move in the E-minis, I mean, SPY and Qs. Did the Qs have the Qs are on Monday, right? Don't they? The Qs.
Ooh, honestly, I'm not sure.
Dividend? Yeah. Dividend you talking about?
Yeah, one of them. It's either the Q.
Yeah, Qs are Monday. It's the it's the most horrible thing, I think, for retail. It should be adjust. I mean, they're not going to adjust it, so let's not even talk about it. But they should never have a dividend Friday into a Monday on a product like an ETF, in my opinion. The SPYs do it right. Thursday into Friday. I get it.
Yeah.
Okay. Cool. I get it. Q, talking a little bit about that. Because SPY did have a big dividend yesterday. It's too late to do anything about it now. We talked about it on the show all the time yesterday. People are pretty aware of this that trade options nowadays, right? And I know the brokerage firm Tasty Trade sends out an email to anyone who has a SPY position, whether it's in jeopardy or not, just like a heads up, ringing a bell. If you have a SPY position, even if it's in puts, which you'd be fortunate if you got put stock on puts. It's not going to happen, but it'll be a windfall for you of almost $2 on the SPY, which is a big dividend.
Yeah, so I would say a lot of people are aware of it. Some newer traders will get that email for like the short calls and stuff like that, and say like, hey, like, am I at risk? How do I tell? And things like that. And that's actually one of my favorite things to talk about, is if like your short call strike that you're looking at, you look at that same strike but on the put side, and if it's less than the dividend amount to be paid or thereabouts, because with SPY you never know exactly what it's going to be right? But if it's like pretty much about that, price of what the last dividend was, you might want to consider closing it out, or you might get assigned early.
Totally agree.
Ooh. I'm looking at oil here, and I feel like I'm about to put myself in a bad position.
Well, join the club, son. Oil. I don't have a bad oil position. To be honest with you, I don't have much of any oil position out there. But oil up $1 and change. What he's talking about is kind of. You would think if oil goes higher, we're going to get weakness in the market. You've got metals getting, 1% down. It isn't killed necessarily, but as you can see here from the last week or so, gold getting killed, down 32. Silver getting killed even more on a percentage basis, down almost 2.5%. Bonds going lower, rates going higher, not good for the markets. Even the S&Ps got a low of 65.90, but they've been sitting right here just around 6,600. Volatility 25.10. I actually would call that hanging at this moment. What stupid thing did you just do?
I'm going to add another one of the smart thing I did was I didn't do it in CL, because I was gonna get into CL, but I was like, you know what? I'm gonna keep it a little small. If we have something crazy happen over the weekend, I got the units ready to roll. We can add some to it. So I did a closer at the money call spread in MCL. We've been trading this back and forth, and scalping out of the tail call, but this is kind of adding. I already have the call spread on the 95-100, but I did the 98-102, so it's $4 wide, and then I sold the 130 calls against it. I did the whole package at like 30 some odd cents. Again, selling the units on the upside.
I did get one encouraging thing, Q. I'm sorry to take this time away from you. Do you have a second?
Yeah.
I did get the one. Let me find it here. There it is. We have an internal chat in the in the office here to kind of help us, and sometimes people take the liberty. I've been one to do this too. Throw a little jab at somebody. So I did get a jab from your boyfriend, Chris Vecchio over there.
Yeah, I think that was a jab at me.
Yeah, it was a jab at all of us. And he's quoting Ilya, kind of jabbing us in a group chat, not just to me, which would be, a little bit more of a manly thing to do, kind of facing all of us, kind of taking the old dog down here a little bit, and just asking why aren't we a little bit more aggressive with our bullishness in the market right now. And I told him I'm long ES, about 5 handles away from here. As I said, when they traded down there, he hasn't responded back yet, but that looks like a reverse Jones to me.
That's like bottom is in when you start getting when everybody starts jabbing you a little bit.
Shark has sent me a couple of
Shark's getting to the bunker. If I know anything about Shark, he's going to Costco to stock up on white rice.
We'll never have another uptick. Just sell every opening. Bad words about golden oil and so. We could. I don't know if it's you don't make lows on Friday. I don't know if we're there yet.
Yeah, I don't think so.
This is just me capitulating. I'm just a drowning man looking for a straw right now.
All right, it's all right. All
right. Let's get to your list, Q. You've been so kind and quiet. I'll get you the hell out of here.
Bonds at 112. Sorry, Q.
All good. Top 20 symbols going through the system, and their IVR at number 1. Tesla with a 7, Microsoft 31, Amazon 24, Nvidia 11. Silver 54, Micron 57, GLD 59, IBIT 55, Netflix 41, Google 16, TQQQ 42, TLT 35, AMD 28, Palantir 16, Meta 23, DDOG 46, Spotify 28, SNDK 60, Oracle 48, and SoFi 21.
Beautiful, beautiful job out of you. All we need right now is a CNBC tweet. Shark in turmoil. And then we'll know that the bottom is in. Good job out of you, Q. Let's take a quick look at the market before we say goodbye. Finally say goodbye to everybody, because I don't think we helped anyone today. Except you did get filled on your SPX, which is trading about...
Hey, we didn't put on a lot today. I mean, we did the fast market trades.
No. You've been trading nimble, but we didn't get any short delta really.
And we took a lot off yesterday, and
took a lot of bullish delta off.
Yes. So we're good. We're in a good spot. All right. Don't lose confidence. Okay.
Even the
you've been here. Act like you've been here before, as you used to say.
Even the S&P 65.95 down 65 handles, NASDAQ down 320 and change, Russell down 37, Dow down about 300. Volatility up by $1.20, 5% move at 25.15. Bonds are down 118 to 112.26, big red line there. Notes now doing the same. Notes have been weaker relative to bonds, and they'll continue their weakness here today. Bitcoin, I guess, hanging in there, down around 500 from the close. Bitcoin Cash down around 1,000, just under 70 at 69.70. Ethereum flirting with 2,100, 2140-ish or so. Oil up $1.20, just a skosh off of its highs. Gold down 33. Silver even weaker than gold. Weakness across the whole market. The only thing that's higher is the Dell of the world, up 7. I don't think that's going to help anybody. FedEx only up 4 after being up 25. Then some oil-related markets. But here you'll see it's really all-out sell on many of the stocks that we watch. As E-mini S&Ps flirt with new lows, we'll take a quick 90-second break. I'm going to get in the fetal position. My son will have more Tasty Live for you. Q's going to be back to the trade desk. I appreciate your time. E-mini S&P down 70. Peace.
Peace. See you next week.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expiration, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Golf putt, normal distribution, reduce speed, increase standard deviation for a wider angular strike. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
everybody, and welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette left of me in her Miami of Ohio sweatshirt is Jenny Andrews.
I've got to represent. They play at 3:25 today, so it's an early game today for me. I'm just watching basketball games at night.
Look at me. I am representing both. UK plays at 11, then Miami plays after, and they're not playing each other.
Oh, wait, they play right now? They're starting
at 11, so it's the first game of the day, 11 our time. It's
so
the first
in
game
1 hour. As soon as our show ends, they're starting.
Yeah. And I'm heading down there. So I'm flying to Lexington immediately after this for my daughter's orientation. So yeah, I'll be down. I'll miss the whole thing because I'll be in the car. But I couldn't not wear red today for the Miami, Ohio, because I'm so proud of those boys. It was amazing.
Well, I wish I would. I didn't even realize Kentucky was playing. I would have thrown some blue on too. I will be rooting for Kentucky after the show. So you're missing it because you'll be traveling. My son is missing the Miami game because he'll be in the air. He's flying down to Florida for spring break.
Yeah, it's gonna be crazy.
I feel bad, but it was too late to change his. It's like too late to change the flight now.
You don't know when you're gonna. Okay, number one, when you're booking a flight, you don't know that your college is gonna go 32-0, and they're gonna play. You can't plan for that.
So I don't know if you know this, but the finals, the NCAA finals are actually here at United Center in Chicago. And I don't know if it's like the final game or I think it might be the final game. I don't know if it's the Final Four or the final game, because back in January, I was going to buy tickets to it for my husband's birthday. And at the time, he's like, we don't even know who's going to be in it. Let's not buy those tickets yet. But I kind of wish I would have, because what if it is some team of ours?
You will pay a lot of money, is my guess.
They weren't that bad back in January for the United Center tickets. Maybe 200. Maybe they were more. Maybe they were more. I'm making that up. Maybe they were like 400 or 500 each. But it wasn't. Maybe it was 800 for a couple tickets.
But it wasn't too bad.
And that was suite level. But what I read was if you buy suite level tickets for that United Center NCAA tournament, those suites aren't open. Like, you don't have access to that. It's not like the regular.
In United Center, the second floor is considered suite level. So you're still in regular seats.
Yeah, so you're on the second floor, but those suites aren't running because it's run by the NCAA. It's not like Bulls or Blackhawks or it's different. So you don't have those suites, the suite restaurants.
Yeah. Well, there's the one on the second floor that you can go to.
No, I don't think that's open for this.
Oh.
Yeah, because I was like, I'll pay that price if I get access to the suite, but if I don't...
No, you're not. It's not access to the suite. There's just a restaurant that's there on the second floor.
Yeah, well, there was questions of like what's actually open for the NCAA tournament, because it's not like a regular season game.
Can you... I'm sorry if I'm asking you this, and you would know, but I don't know if you've been to a Miami of Ohio basketball game, right? You haven't.
Well, I've been to Millet where they play their games, but that there, not here.
Okay, but my question is, can you drink at college basketball games?
At Miami, Ohio, you can drink at their games. Now, I don't know. So I know at their football games you can drink, but I know at Notre Dame you can't. So it's like different for the different schools.
Well, that's what I'm saying. Well, I wonder what they'll do for the final if it's at United Center.
Oh gosh, well that's different because that's at United Center.
Yeah.
These are at. I don't know about the Dayton game, and I think Notre Dame was changing their rules as far as allowing drinking at games. But at Miami, Ohio, it's one of the biggest party schools. It's always ranked towards the top, and there are beer truck after beer truck parked at the football games.
Beer truck after beer truck, is there really?
Yeah. What about the Kentucky games?
I've never been to a Kentucky basketball game.
No, but they're football. Yeah, so I don't know. I don't know what they allow in Millet inside for the basketball game.
Yeah, I've never been to a Kentucky basketball game yet. Notice I said yet, because there's going to be a lot in my future.
Yeah, right, for sure. Okay, we have the Spoozer. Let's jump in the platform. Talk about what's going on.
We've got a lot of stuff to do today. It is a Friday. We've got the weekly recap of market measures. We are taking live tweets. Put the hashtag LIZJNY. We've got a lot of people, and we're going to answer some things that Fabio sent us in an email.
Oh yeah, and then we've got tweets coming in. Again, include that hashtag LIZJNY if you want us to answer a question. Now, SPOOs are down 63. What do you think? And in the morning, okay. So when I look at, honestly, in the morning now, look at percentages, and whatever's down the biggest percent minus the Dow, whatever's down the biggest percent, that's where I sell my put spreads. So this morning, by a decent amount, NASDAQ was down the largest percent. So I started with selling my put spreads in NDX because that was down the biggest percentage. What about you?
Oh, no, I do all three.
Yeah.
I do all three. So honestly, I try to get in as fast as I can, and that would be something that would stop me from being fast. So I just do all three.
Okay. So I look at that, and that's where I start. And so I sold, and I think this is interesting. I sold a $20 wide on the open in NDX, and I ended up just selling a $10 wide in SPX, both at the expected move, put in GTCs for 50%. The NDX 50% came off. The SPX 50% never came off. So I feel like the wider the spread is, the quicker you could get out.
I think sometimes you can get fills on NDX too, because it's wide market by wide market by wide market.
Yeah. So I don't know. This is going to be something interesting to look at. I never got out of my SPX, and it was maybe only down 0.6% this morning, 0.5% this morning on the open, where NQ was down. Probably not that far from where it is now.
Okay, it is triple witching. Do we have anything to manage?
Oh my gosh, that's so funny, because this morning in my house, people heard it on the news and they're like, "Oh my gosh, Mom, today's triple witching."
It is.
Yes, it is. Yes.
Lots of options expire today, but it's pretty. I mean, expiration has become weekly. Daily, so it is definitely different. But the regular monthly option contracts, which a lot of times we're in, I had a lot of red in the money symbols in my account today, like a lot. But I've been doing downside ratio spreads, and I had to close all of them.
We have 1, 2, 3, you, Tilray, and SoFi. Three red in the money. So we will address those today.
Let's open them up.
Okay. All right. SoFi, we're short the 19 put. It's down to 17. So the market's been kind of ugly. Here's a perfect, this actually can segue into a question we had about what are we looking for when we look at the chart?
Nothing. Honestly, it's just it's a visual that we look at to see where it's been. We have no charting abilities. Jenny and I shouldn't say that. I have no charting abilities. Maybe you're a sage. I have no idea.
I have never taken a class in technical analysis or Bollinger Bands or what are some other technical?
No idea. I mean, honestly, I look at the chart just because it's on the platform and some people want to look at the chart. I look at the implied volatility more than I look at the chart.
Right. But why do I look at the chart? I kind of like to see where it's been, because for me, I'm a big put seller, and it's usually hard for me to sell puts. If I look at a chart and it looks like this, it's harder for me to sell puts than if I look at a chart and it looks like that.
But we've been in it. So honestly, when I looked at mine today, and I had so many in the money signs, I didn't open up any charts. I just rolled. So like if I'm short a 19 put in SoFi and it's still a low price product and it's obviously down from where it is, I would just take that and roll it out to the monthly. And hey, not roll it to the 19. You could roll it to something else, but just it's SoFi. I don't mind keeping the dream alive.
So we do so many videos talking about we're selling it out of the money put. As long as it stays out of the money, we keep that money. And in SoFi, we would have said, hey, we're selling the 17 put for 90 cents, or the 19 put for 90 cents. As long as it stays above 19, we keep that 90 cents. If it ends up below 19, then we're long the stock. It's kind of like, for those of you not familiar with the naked put dance, here's your P&L graph. Here's the credit you take in. Stock goes down. So what? Now you're long the stock.
You know what? This is pretty interesting when you look at this, Jenny, because so we collected 90 cents. If SoFi, I'm back at the napkin math. If SoFi was 19 and it was an out of the money put, great. It's down to 17. I'm just using round numbers. And we're down $100 because we get what we collected. So we're not down nearly as much as if you just went out and bought 100 shares.
So for people wondering, how do you manage a losing naked put? Okay, it's below 19 and we could close it, take the $100 loss. We could let this expire and come in Monday long 100 shares of stock, or we can roll it. And when we say with a naked put, so what? Now we're long the stock. Synthetically, we're long the stock. We buy the stock at 19. We took in 90 cents. So our cost basis is $18.10.
Yep.
So if you're long the stock at $18.10 and you look at those options out in
Go to April.
April, and you say, if I'm long the stock at 18.10, what call would I sell?
I'm selling the 19.
Sell the 19. I sell the 19 call.
So we're going to just roll the put out in time. So, and rolling the put out in time, we synthetically have the 19 covered call, but it's going to use less capital. Owning the stock and selling the call against it is the same trade synthetically as selling that put, but it does require more capital held up.
If you're long the stock, right? And in my mind, if you've got a lot of capital sitting on the sidelines, I don't mind taking the stock and selling calls. But
it's the same trade.
Is this right? Right. But if you've got something that's paying a dividend and you want to, get those dividends, then I don't mind it. But if you're using all your capital and you're going into the negative territory where you're paying interest on the using extra capital, then I would always have just this short put instead of ever thinking, I'm going to take that stock.
Yeah, for sure. Unless it's in my IRA, when I would never have a short put, I do something against it, it'd be spread off. I will always roll my put. I want to get to these. I want to get to these 3 in the money signs because we have to take action or we will take ownership. But I also want to look at bonds today, Jenny.
Oh my gosh, bonds are. I think if it were me, I would think that's the big news story.
It is the big news story, but we do have to kind of address the little in the money signs first.
Okay, so SoFi were rolled out in time. Tilray, similar situation. We sold the 9. Now similar, but we're trading down to 650. I'm surprised this must have already been a roll.
To get $1. We took in 175.
Here's a situation where I might say, let us put the stock and let that stock just sit there.
Sure.
If we can get, I don't know if there's any premium.
Close it and buy the stock. You're going to save yourself some money.
Oh, you know what? There is actually premium. I didn't expect any premium in Tilray. I didn't really. Like, if we go all the way out to May, can we roll? You can roll to the 9 and take in 37 cents, roll to May.
That's perfect. Do it. You've got the 9 covered call. You're doing something instead of nothing.
Yeah, and then we just kind of forget about it.
Which we have for the last 36 days in Tilray anyway. 28 days, sorry.
Now, 19 put. This could be SoFi. You could cover this. That could be SoFi or same situation. 19 put, stock's trading 17.
We've had them on for 22 days. You're just going to roll this out in time. Now, your only decision is, do you want to go to April or do you want to go to May?
Now, April. Here, okay, if we were short the 19 put, synthetically long the stock, probably around 18. In SoFi, we said, if we were long the stock, we'd sell the 19 call. Here, I don't know. If I'm long the stock, I'd probably go out to the 20 or 21.
I would too. Let's go to the 20 and split the difference only so we're not paying too much for it.
So you'll see we'll get a much larger credit because we're moving up a strike.
Yeah.
Which seems crazy, but if I had the stock, that's the call I would sell.
That's how we assess the situation because that is a synthetic covered call.
Right.
If you sell that 20 put, you are long the stock at the cost basis that you have. And I would sell the 20 or the 21 to your point.
Yeah, right. It's if you're thinking of, what put am I going to sell? You need to try to roll the same strike or maybe try to move it further out of the money. But if I think of it as I have this stock, what call would I sell to make this stock a covered call? I wouldn't sell that 19.
No.
So it's kind of like a mental hurdle to get over when you think of, now I'm long the stock, what call am I going to sell against my stock?
I mean, it's easy this is an easy one. That's not a mental hurdle. This is going to be, if I have a little bit of a loss, there's so much premium in the 20 and the 21.
Yeah, there's a lot of premium in you.
Oh, I love you.
Okay, so those are working. Bonds, we have a ZB position, which we're taking a hit on. We did a long call spread when we thought bonds weren't going to get any lower, and boy, have they gotten lower.
Look at that bar. Honestly, I would add to it now. I know that sounds crazy.
I know. And there was no vol before. Now there's a 36 rank.
What can I see our position? What do we have?
Bought a long call spread. I want to see how much is this to buy this one back. Oh, that's a lot. It's still a lot.
It's still a lot.
But it's 14 days. Anything can happen. This move in bonds is bonkers.
Well, let's add some premium. Let's add some out of the money premium with the puts.
Yeah. It's not that often you see these big moves in bonds like this.
Who's your first up next week? Oh,
well, you're here Monday. You're here.
I know. I was hoping
TP on Thursday.
TP's Thursday. Okay, so honestly, I want to put in the docket that you got TP talking about bonds on Thursday, but I mean, we have 4 days until we get there.
Okay. But I agree. Sell some premium. Now we have a choice. We don't have to sell premium in 14-day. We can sell premium in the 35-day.
When there is, we haven't talked about this in a while, Jenny. When you have something that has an Ivy rank in bonds, that's big. 36 rank in bonds is big. It is because it's bonds. I don't mind going a little bit farther out because you're locking in a farther out IVR.
So I went to the 35-day, and I'm just going to go. Whoever thought we'd be at the 110.
No, not me.
I kind of want to get aggressive.
Sure. Well, let's just can we only because it's in ticks. Can we price discovery? I want to see what the 110, 108 is.
Okay, so here I'm going to move them. So here's the 112, 110. We're getting $600.
609. You got to look at max profit because other than that, it confuses me.
Yeah, 609 risking 1,300.
Okay, it's 1,300. That's what I was going to say.
Versus, it's like a $20 wide.
That's a decent collection. So it went from 6 to 460. So that's what I wanted to see. Okay, then keep going.
460 or 300.
Yeah, I like the $6 better.
Yeah, and again, it's at the 112. So your break even is 112 minus 39 ticks. You do the math.
That's funny. I do not mind doing this. Now, do you want to, we have $1,300 in risk. You can make it $600 in risk.
I don't want to.
I don't either.
Let's just take the $1,300 and okay, let me look. $600 in risk, you're getting $340. I kind of like the $600.
I do too. And we're going to get, I would like to put a tight stop in for this, a tight GTC in.
Oh, it's not a tight stop, a tight
GTC.
Why? I would love to make $300 out of it. We needed to make the money back for the call spread we bought.
No, I know, but I want it in.
So
you know what I'm saying? If the bonds are moving, I want it in. I want the GTC in. I don't just want to look at it and be like, oh, maybe we missed it because they're moving.
Are we filled already?
Yep, we're filled. No, it's still working.
What did I see? Why did I see something pop up twice?
I think
40 ticks that's a lot for that. I'm going to move this down to 39 ticks. Okay.
I can't tell if it's wide markers or not.
There you go. There we go. Canceled the other one. Now I won't waste any time, Liz. I'm not going to waste any time and get this 50% GTC in.
Yeah, that's all I wanted. Is because if we're moving pretty quickly, it could pop with the bonds. You might get a pop up and get out. Do you know what I mean?
And so, if someone's not used to watching ZB and they're more used to watching TLT at 85.90
is low.
It's low, but we've seen lower, right? But I've never seen lower than like 80, 83. How low did we get here? 83.
Yeah, and we could get back there.
This could be back to TLT zebra territory.
Oh yeah.
But it makes sense to sell that premium in ZB, and I'm not going to double down because putting on a TLT zebra would be doubling down. I just want to price it out.
Sure.
Because what do we have here?
So what's crazy?
Oh, we've got a big lizard.
Yeah, we've got a big lizard.
That's fine.
How much is that down? It's going to be down. It's just a matter of how much.
$58.
Okay.
I'm not going to lie. I didn't listen to 1 second of news today. What the heck was the news?
I have no idea. I'm leaving on a jet plane after this.
I took I had to go to I had an early call at 5:45 a.m. picking up my dad at the rehab center because again, he broke his hip, had surgery. He's recovering. I was at the rehab center at 6:15 in the morning today.
I know. I love when Jenny calls me super early and I'm always like, what is happening?
I already dropped him off. He had to go to a doctor's appointment. So 5:45 in the morning, I'm on the road in the pitch dark. And this rehab center is surrounded by forests and deer. So I was driving in the pitch dark this morning and seeing deer everywhere. But I never listened to a second of news.
Were you listening to Joan Jett singing with your dad?
My dad, he's a musician. He's a drummer. He was in a band. All we listened to was like classic rock.
I know. I love your dad and I love you, but you guys are the biggest. You and your dad together are the biggest talkers I've ever met before in my entire life. So I can't imagine a single ounce of silence in that car.
No.
Like I said, I love it. I love it. But you guys are the biggest chatters I've ever met. Okay, so we've got all of our orders in. We want to make sure that we hit those in the money signs. And we are getting a lot of tweets. I'm just kind of trying to keep us in line. And we also have the market measure summary.
Oh, yeah, we've got a lot to do. Okay, so I'm going to just adjust this UE roll so we know we're out of all of our red in the money signs. Yeah. Okay, adjusting the UE roll. Build on that. And then I think there was one other roll, Tilray.
Yeah. I mean, you can take that down. It's a couple pennies.
Sure.
And once again, if we get put the stock, it's not the end of the world, and we can just talk about the capital of it on
Monday. Tilray. If we're stuck with 100 shares of Tilray, that's, like you said, not the end of the world.
No, it's not the end of the world.
Okay, Twitter. I'm gonna refresh and go top down.
Oh, I think you wanted the
we have a lot of tweets.
Okay.
If Miami, Ohio, and Kentucky wins 2, they will meet each other in Chicago on March 27th.
Wait, if they win 2, they each have to win 2 games, then they'll meet each other?
Yeah. In Chicago. So that's the Chicago game. That must be the Chicago game I was looking at. So it's not like
you even imagine. I think I'm out of town.
March 27th. You're gone. Wait, that's next week.
Yeah.
That's soon. So March 27th. March 27th, Fozzie is going to be joining me, and you're on a cruise.
Yeah, I'm going to be gone that day. So hopefully, I'm hoping let's just put it this way. I'm hoping they go head to head because that means they both continued winning, right?
I hope so. The sad thing is you'll be on a cruise and my son will be on his cruise because he leaves this today and gets on a cruise tomorrow. And
they play these games all over though. So I would tell him not to worry. Tell him to go to the Aquatheater.
Oh, on the cruise ship, you think they're going to play it?
They play it. So my son's a basketball player. I mean, not college. He played in high school, and every year on spring break, our spring break is always over March Madness. They play him.
Okay.
They play him on the big screen.
Okay, so hopefully on his cruise they'll be, if they're still in it, hopefully, fingers crossed, they're still in it, and the kids will be watching it on their cruise ship. And I know you've got a big Aquatheater on yours. He's also cruising Royal Caribbean, but I think he's on the oldest ship ever made.
But then they play it in there like, it's not a sports book. It's like a sports bar. Uh-huh. They'll have it, I promise.
Okay.
Well, I shouldn't promise. I can't promise anything. There is no promises in life.
Okay, so I see. United Centers Midwest Regional. Thanks, Scott Somer.
Part of the Sweet 16. So yes, thank you. Our international man of
mystery. Four is in Indy, which I am a big fan of the Lucas Oil Stadium. It is so easy. It's such a breeze to get in and out of there.
It's not too far away.
No, it's not too far away. It's a breeze to get in and out of there. That's where I saw Taylor Swift, and it was so easy. We were out. I was on the expressway 10 minutes after the concert ended.
I love it. I love it.
Yeah.
Okay, take a look at Punished Pixels. Good morning. I'm back home, and with a daylight savings change, I get to sleep early by an hour. For my crab trade, which was bullish yesterday, is still in the green despite the down move today. Let's take a look at our SPY.
Yeah, and I thought of you, Punished Pixels, because at the end of the day yesterday, that could have come off for a win. We had such a rally.
No, we have SPY. We have SPY. You did it in SPY.
Oh, yeah. I was like, where is it?
And we didn't get filled.
But we had that rally at the end of the day.
Yeah, it's not down near. It's not down to where it was when we put it on.
So
he was in ES.
Well, yeah, we're lower now. We're lower now than we ever were yesterday.
But he's still in the green. There's so much premium that's coming out of those short-term crabs. So when you're selling 2 in that front month, and that front month is just decaying. I mean,
VIX is up to almost 26.
We're back.
Mm-hmm. And where are SPOOs right now? SPOOs are down 64. Kind of been holding around here.
They've been in a holding pattern. They really have been.
NASDAQ down 314.
Yeah. All right, let's pop back into Twitter because like I said, I want to get to
we have a lot of tweets. Blue Wackadoo, unhappy Friday, worst timeline ever. IVR up to 41. I don't know, up to 41. What is this?
I don't know, IVR right now. right now.
Oh, right now. Put an iron condor on for 415, 135 points between the shorts. Puts getting tested. TradeBot has a slightly better but similar iron condor.
Oh, no.
Huh.
What is that? Oh, Chuck Norris. That was breaking news today. Chuck Norris died today.
Oh.
Yeah, R.I.P. Chuck Norris. That's why I was like, I didn't. He died. That was my break.
It says on Happy Friday.
Yes. Because Chuck Norris, 86 years old. That was one of my breaking news that I saw on my phone.
And 86 is young.
86 is young. I agree.
Yeah.
I agree.
That's sad.
Oh, I know it is sad.
I didn't know that. Well, Eric, thanks for sharing your trades with us. And it's interesting what you came up with versus the bots.
Right, I love it. Okay, then Fabio comes in. Hello, ladies. Happy Friday. What do you think about setting up an earnings trade in KO? Let's do it.
Sure. Let's take a look.
KO's Coke.
It's been down. Has Pepsi been doing this too, or are they moving in the opposite directions?
I don't know. And
no, it looks like the same chart.
I mean, I didn't think your chart updated.
I don't know. No, but it says
no, it did. I know it did, but it looks the same.
Yeah, I actually got a Coke yesterday.
I heard.
So now today is the first day of spring, and today's the equinox, and there is such a thing called the equinox flu, where people feel like yesterday I had so much head pressure, and our weather was changing from cold to hot, but I think it's called the equinox flu, and our friend says the only thing that makes you feel better is a McDonald's Coke.
Well, and you complied and went through the drive-through. I love it.
It didn't help.
I love a McDonald's. I love a McDonald's soft drink. I like their Diet Coke.
Okay, so Coke. What did they want? Did they have a directional assumption or just a trade in Coke?
No, just a trade in it.
Sure. I don't mind. The 72.5 puts for 82 cents. $1,200.
Well, you're in the durational. You don't want to, if it's an earnings trade, do you want to go nearer term?
Oh, did he want an earnings trade?
I think he said earnings. I don't know.
Earnings are until May 5th, unless he wanted an earnings setup calendar.
Yeah, it said, how about setting up an earnings trade in Coke? Let's do an earnings setup calendar.
Okay, so I'm just going to go here. 77.5 call in May and 77.5 call in April. So we're selling April, buying May, 87 cents.
Come on, you got to do a 2-lot.
From now on, whenever we do calendars, we're always doing a 2-lot.
We're always doing at least a 2-lot.
I'm going with 88 cents.
And the only reason we're doing this is because we would manage it differently if you do have two through earnings setup calendars. Not all calendars, earnings setup calendars.
This way, if it's making money, we can sell one. Like if we're paying here's the thing: if we're paying 88.90 cents for this, we could sell one and like make that 90 cents back on one, and then we've got an extra one.
Yeah, then you got it. Perfect.
Okay, so we're.
I love it, Fabio. Thank you so much, and I hope he's watching too, because we did address. I'm sorry, I know we both had the email. We've been going crazy about charts and what we look at, and we really don't. We glance at them just kind of to glance at them. We have no charting ability, but I do like to sell puts when things are down, and sell both sides when things are up.
I just wanted to look at yesterday's because the end of the day, and I don't know, were you watching the markets at the end of the day?
I was not.
And I mean, I was at the rehab center. I was at the rehab. Dad, if you're watching, love it there. Everyone's friendly. Everyone's very friendly. Okay, so you look at this, like our low yesterday was 65.57, but on the close up to 66.06. So I knew we had a big rally at the end of the day. Just because glancing at my account, I could see my P&L take the turn in the right direction at the end of the day. But it rallied quite a bit at the end of the day.
It did rally quite a bit at the end of the day. We'll see what today brings, because we seem to be sticking at this level. We seem to be sticking at down 64. It's between 60 and 65 right now.
If I were a chartist, I would think this looks like a level of support. Don't you think so?
Yep.
Doesn't it look like it?
It does a little bit.
I don't know what Tim Knight has been saying lately, but to me, now what are the metals doing today? Because they were a big mover yesterday.
That was crazy yesterday. I think they're down again, but not. Yeah, I mean, like yesterday was the big bar. Today's a little bar.
And today they're not even. They were down. They're not down as low as yesterday's low. Yesterday's low was 45.42.
Yeah, that's low. Does that look like support? Not yet.
Fabio,
Fabio, I hope you.
Fabio,
I hope you find the humor that Jenny and I find in each other trying to do the charting, because we are not chartists at all. We're quants. We look at the quants. This was kind of fun. We posted this today and talked a little bit about this. There is a Situation Room by Polymarket is coming to Washington, D.C., and Jenny and I are going to fly out there with Lily.
Oh, yeah, we definitely are. Hold on, I'm just doing some recon. Okay, so why don't you tell everyone what's going on in the Situation Room?
So the Situation Room, I'm very excited. It's going to be a bar where you can watch everything from the Bloomberg terminal to flight paths to weather to politics, and you can bet on anything. I think this sounds like the most fun room I've ever been in.
Okay, and I mean, look how much fun it would be to be at a bar and be betting. Sorry. That's the only person who could break through in my phone is my child. And
just one child, just your favorite.
Both my children could break through at any time. So he's getting on a flight today. I've been calling him for 2 days and he hasn't responded. So now he's decided to call in the middle of the show.
Of course. But so this, honestly, though, this poly market, I think, is going to be really fun. I think it's going to be a game changer when you're looking at these markets and being able to make a market on anything. And I think it's going to be very true to the story that Jenny and I have kind of lived through, right? So as options traders, you make a market, and you have to make a market on anything, meaning you're willing to buy it or sell it at whatever their market is. And the more players that got in the game as we were going, those markets got tighter and tighter and tighter and tighter. So I do think there's going to be a little bit of, in my opinion, maybe a little bit of a wide market in the beginning. But as we get more players in the game, when that liquidity comes to it, I think it could be fun. But there will be some obscure. It's kind of, when we look at markets and we say some of these you can drive a truck through, there are some that people aren't going to want to participate in, and then others where everybody wants to participate, where those markets will get tighter and tighter.
But it allows you to bet on things that you couldn't bet on before. So I think this
allows you to bet on anything.
Right. So if you think about it, like, what do we have? 10 minutes away from me, there's an OTB. People would go there to bet on horse racing. It's not quite as exciting as it might have been when they all started opening. I think this is like the next generation's OTB, but now you can bet on everything.
Yeah, I think it's a little bit bigger. I think it's a little bit bigger than that, but yes.
Like the next generation, you know what I'm saying? When I was growing up, we had the actual racetracks. That's what we would do. On a Sunday afternoon, we would drive to Arlington Racetrack. It was a lovely Sunday afternoon, and we'd bet on the horses. That's what my family did on Sunday afternoons, drive to Arlington Racetrack and bet on the horses.
I also think it can tell you a lot too, because with the technology, now don't get me wrong, I know you were in the 80s, so you didn't have a phone with you when you were betting on the horses, but it does show you something. So it's kind of like the CME FedWatch tool. When you're looking at this, it's the prediction markets. They're saying what people are putting their money on. And when being able to see that provides a certain level of clarity too. You can see what the masses are doing.
Well, and if on YouTube we pushed out a little clip today on this new, or maybe it's getting pushed out on this new poly market Situation Room, and in it I mentioned you watch the market more and you learn so much more about the market when you have skin in the game. So if people are going to start betting on world events, you're going to have a lot more knowledge of what's going on in the world. And people always say. And I spent 6 months living in Europe, and I think there's a very big difference in other countries, how people actually know, and kids and families sit there and talk about world events and what's going on, versus in the U.S., our kids at the dinner table are not usually talking about world events. There's a difference.
No, they're talking about their DraftKings accounts.
But maybe this is going to change that. Maybe the poly market is going to change that, where you're going to get more young people engaged in world events.
Or they're going to get engaged in really dumb things, because this allows you to bet on anything. So do you know what I'm saying? So it may bring a level of engagement, but either way, I hope it provides liquidity and some clarity, because it might. Because right now, in my limited understanding, a lot of it isn't regulated. So even the sports betting in here isn't regulated like what we have. So you could have people betting that actually know what's going to happen. Like, who was the other day? My son was like, at Kelshi, you can bet if somebody's going to streak across the field. And then so all these bets went up super, super high. And guess what? Somebody streaked across the field because they paid him. You know what I mean? But that's not
right. Okay.
They don't know how to regulate that yet.
Yeah.
Yeah.
So it'll be I'll be curious to see how long it takes before this really can it go everywhere? Can people use it everywhere, bet on it everywhere? Is it only in certain places? Because I know right now, DraftKings, if you're in a certain state, you can't bet, and the DraftKings app is like state by state.
Well, right now it looks like you got to be in Washington, D.C. at the Situation Room.
All right, I am going to just go back to the top to make sure we got to everyone. Hold on. Oh, Fabio, thanks for your explanation about the graphs. Fabio, again, we hope you realize we have no charting experience or knowledge. We just like to look at the chart.
We do like to look at the chart.
I like to say get a gauge for what's going on.
So I'm kind of glad we got to all the tweets. Can we go to the weekly summary?
Yes, and I will say Spoon's only down 56, so there's a little bit of a rally.
Ooh.
Get your rally cap.
There's rally.
Get your rally cap on for the weekly summary.
Get your rally cap on. I did not look through this yet, so this will be fun to kind of go through.
Okay, I'm going to fire it up. Weekly summary of market measures. Part 1. Rolling part 1. How it controls volatility.
Okay. Yes. Okay. I'm just going to take a gander here. Rolling smooths out your volatility, right? Because as you go farther out in time, it's going to smooth your volatility curve.
And you saw us roll today, right? So 3 different things. SoFi. What was the other one? Besides Tilray.
SoFi.
So you saw us roll those 3 puts today. How did it smooth out our volatility? Let's find out.
Yeah. Okay, at Tasty Live, we look at rolling as a defensive tactic and roll for duration to keep the dream alive and to adjust our deltas. We roll if our assumption is still the same. The new delta, directional exposure of a delta neutral trade, is the opposite of the stocks move. Let's see.
And when you look at delta, so today on expiration, an in the money put has a 100 delta. We say that you sell a put, it ends up in the money, you get long 100 shares of stock. That's a 100 delta. So 100 shares on expiration day, 100 delta. We rolled those puts out to April, and we still stayed in the money. Those puts probably now have a 65, 70 delta. That smoothed out our delta. If we would have rolled all the way to May, those would probably have a 55 delta. Again, smoothing out our delta.
And it's pretty interesting, and I'm glad you brought that up, because today they have 100. Today, they'll either have 100 or 0 by the end of the day. There is no in between.
Yeah. Next. Okay. Compared to holding till expiration, rolling not only increases profitability, but also significantly reduces volatility.
Okay, so a 1 standard deviation SPY strangle, the average monthly P&L. Okay, if you held it till expiration is $30, rolling it's $32. But this is, so the average monthly volatility, this is, I think, where they're trying to go with this. If you held it till expiration, the average monthly volatility is 3.55 versus rolling, it takes down your volatility of the trade to 2.
And then over time, it says you increase your average monthly P&L. So.
Yeah.
All right, with comparable volatility control, the rolling approach yields nearly 40% higher returns than the stop loss strategy.
Stop loss strategy is something that I know a lot of traders use. I just don't use it. So stop loss means when I get to X percent, like 2 times losers, meaning if I sold it for $1, if it's a $200 loser, I'm gonna close it. Well, options and markets move, and they move so much during the duration of an option that a lot of times you're gonna get stopped out pretty quickly.
Sometimes I like to, oftentimes, especially with a zebra, let's say I put on a zebra that's $2,000. I might say to myself, like, worst case scenario in my mind of the zebra is losing half of it. Is the zebra being worth $1,000? And in my mind, I might say, okay, if this $2,000 zebra is worth $1,000, that's when I'm going to close this and roll it. So it's maybe a mental stop loss, but I'm not just closing it and taking the loss. That's when I'm
the 2 times loss is selling premium. That's where they're getting the stop losses.
Yeah, but it's not. I mean, you could say same thing with spreads, like in SPX. In SPX, I sold a $20 wide, and I thought, well, maybe if this gets to be half the width in between the spread, and it's trading for 1,000, the market's right in the middle of this, maybe I will close it so it doesn't have full loss.
And that's your 2 times loser.
Yeah.
Yeah. So, but that comes from typically when they're talking about this from the research team, it's selling premium. The buying of it is a little bit trickier when you're talking about 2 times loss. I just don't want to confuse people with the zebra.
Right. I mean, the zebra is but I do in my mind have that when I put on a zebra.
But you don't put a stop loss in for it.
No, but that's what I'm watching for.
Yeah. Yeah.
Compared to holding till expiration, rolling not only increases profitability. Oh, we saw this one. Went backwards. Takeaway.
Okay. The
Rolling
takeaway.
rebalancing strategy can help reduce a position's volatility by keeping its delta within a narrow range.
Yes, and it outperforms traditional stop loss methods by generating a higher return on capital while still providing the similar volatility control. I do want to say, when you're rolling, when I'm selling premium, there are certain things that I will blindly, looking at SoFi, I don't mind being in it. Looking at you, I don't mind being in it. And I will just roll as long as, and it's very, I don't have to think about it. It's not something we talk about it because we do a live show. But if I'm in my own account, like today, I rolled 20 things. I was like, oh, whatever, here we go.
And it probably took you less than 5 minutes.
I don't even think it took me 5 minutes. It probably took me a minute. As long as I was getting credit by rolling out and either improving my strike or getting credit for the same strike, I didn't think about it because I had the capital to back it up. Unless there's something that my original intent has changed, and we talked about this before. If my intent has changed, or I'm like, oh my God, I don't know when this silver is going to stop going up. I got to stop rolling my short call. That's the only time I'll call uncle. If it's just rolling and extending duration, why not?
Right. And it's easy and it becomes very mechanical and you don't overthink it.
Yeah.
And honestly, I have 3 experts coming on next week. I have TP one day, Fazia one day, and Tony from Mexico one day. And I'm going to ask all 3 of them, do you ever use a stop loss? And just to see.
I think those 3, they are experts, are all cut from the tasty cloth. Because I'm going to bet and I'm a betting woman, so I'm going to put this in the poly market. I'm going to bet none of them use stop losses.
And I would place that same bet. So, but I'm going to ask them just to see, because everyone has their own strategy, and some people like that. I think when your father-in-law started, he did that, didn't he?
No. He's a straight up, what's it called? Covered call guy. So never stop loss.
Okay, I thought for some reason
he's a covered call naked put. He's a covered call naked put. But I got to tell you, so he's a covered call naked put guy. But we talk about this all the time, and I know we've talked about it with Mikey, and we've talked about it from Tony from Mexico. You and I are traders, and so are the people that you have coming on, meaning that we're doing it all day, every day. And I have no problem, like my father-in-law, who does it, a little bit during the day, but he'll just roll. He just mechanically will once a month get in and either roll the put or roll the call out in time. Okay. And I would much rather do something like that than have somebody do it pay somebody to manage their money.
Right, for sure, definitely. Yeah. Definitely. All right. The second market measures of the week, rolling part 2. How does rolling impact tail risk?
Smooths it out, in my opinion, right?
I bet there's like very little tail risk when you're rolling at the 21 day. And every back test I've ever done, results always seem better when you click the button close at 21 day. And it's just like rolling is nothing more than closing your position and reestablishing.
Yes.
It's not the same strike. Rolling does not mean rolling to the same strike. It's closing your position and reestablishing.
That's true. I mean, honestly, we should remove the term roll because it is essentially you're closing and making the decision on where you're going to put it again.
Right. It doesn't have to be the same strike.
Yeah.
All right. One way to measure the tail risk is to examine the BPR, or buying power reduction expansion rate over the course of a trading cycle. In the past 2 decades, the highest rate of BPR expansion was seen in the years 2008 and 2020, resulting in substantial losses for many traders. So we've seen buying power explode. We've seen it, right? You guys have all seen it.
Yes, and that is the hardest part about being an option trader, is watching your buying power explode. So, but in all these times, where the buying power? Oh, yeah, there we go.
One of the kids,
Lexington, Kentucky. I don't know how they got through. That's weird.
Huh?
Okay, but so one way to measure this, but we've all seen that buying power, and that kind of hurts when you're an option trader, watching your buying power expand. But we see it on a daily basis versus the people who are in their IRA. They don't see any expansion. They're getting their statements once a month.
Well, and so here, if you're very careful and cautious, and you're a very risk averse trader, you will look at your look at each position. You could say, oh, I have $100,000 in buying power, and you could sell your puts and figure out the notional if you had to buy that stock and never go over your buying power. Like, never go over 10,000 in notional in 10 different stocks. So your notional would never exceed your actual account value. That's a very conservative way to know that no matter how much your buying power expansion happens, you're never going to have that margin call. You're never going to have more at risk than you have in your account.
Yeah.
That's a conservative way to trade. If you never want to worry about buying power expansion, you can trade like that.
I mean, you'll still worry about it because it'll still hurt. Because that means things are going against you when it expands. So you will still look at it, but to your point, you'll live to trade another day.
You never have to. You don't have to worry about it though, because you've got enough money to cover all your positions.
Yeah.
I think when people get in trouble is when they over leverage themselves, and they have they're controlling a lot more notional than they have in their account.
Yeah, because take a look at 2020 and 2008. I mean, the buying power expansion was 200 and almost 300% in 2008 and 260% in 2020. But those were big, massive things that happened.
Right.
Massive things.
In 2022,
it was only, 2022 was only 100%. You look at this, 2021, 2018, and 2022, it went up by 100%. I mean, that's, to me, something I should be expected. 100% increase in buying power.
Right. And maybe everyone should prepare for that. So, that's why we always say you have to have some cash on the sidelines. You got to get ready for a big move.
Yeah. Okay. Let's keep moving forward. I'm keeping an eye on time only because we have 5 minutes left and I do want to get back to Twitter as well.
In the absence of position management, the BPR increases rapidly, especially when the delta goes above 80. So as you get near expiration, that buying power is going to increase. So going out in time and rolling out in time will help prevent such a rapid buying power expansion.
Well, and we've seen that in, the 0 DTE SPX. It holds up a lot sometimes as you get closer and closer and closer, even if you've got something that's farther out in time. So keep an eye on your buying power. I do think that makes a lot of sense.
Yeah. Rolling when the short strike is tested can significantly reduce the chance of a large BP expansion.
Yeah, because going out in time is going to stop the buying power from expanding. So that makes sense.
So takeaways. Oh, we're not even at takeaways yet. Even better results can be achieved by rolling when the delta is constantly controlled at a smaller target. So if you have puts, if you sold 30 delta puts or 20 delta puts and they become 50 delta puts, you could roll back to the 30 delta puts and they become 50 delta puts, and then you roll back out to the 30. But in that situation, you're going to be, if you don't want to pay to roll, you've got to keep going further and further and further out of time.
You got it. It's out in time, if correct, to keep that delta the same. But a lot of people do trade like that. Okay, takeaways. Tail risk can be measured by buying power expansion rate.
Rolling can help minimize the tail risk.
Yes, it can. And the smaller the delta we aim to control in our position, the smaller the tail risk. So I like it.
I think that's just a good reminder, especially on a day when SPOOs are down 60. A good reminder, keep your risk in check. If you've got so many weeklies or short-term trades, and if you want to smooth out some risk or roll them further out in time. I mean, you see when we go to those December positions how far down we can get with those strikes by going out in time. So if you're nervous about some positions or some short options, you can go far out in time, and that will really take some risk off the table.
I mean, we do that with the Bob on Fire trades. It does take risk off the table because you're not going to lose as much as rapidly.
I wanted to see what we did this yesterday. Got back into app 11. I wanted to see if it was gone, but it's still here.
Oh, it's still there. All right. Only because we have about 4 minutes left. Let's pop into Twitter and go top down, please, Jenny.
Okay. I 100% will. I just didn't know if we want anything else.
EWY? No, it's only 14%. That's fine.
I know. I didn't, but we've gotten, this is our second time in EWY. I think we've gotten in and out. Yes.
$90 isn't bad.
No, because I think, and the rank was like 80 or 90, and now it's so yeah, we sold it for $510, bought it back for $430, now sold it for $630, and could buy it back for $540. I don't mind taking $90 out of EWY.
I would take it in this economy, in the words of we're getting back $1,200. It's not bad. If we decide to put it back on, we can.
Okay, so that's EWY, and I know we have both of these on, but would you ever want to take $225 out of MCL?
Sure.
I think so.
It's 47%. It's 47. So the interesting part about this is we did it only 4 days and 2 days ago. We just put it on because it's wide. So we've got the downside ratio spreads. We just put on the upside.
And this 225 is coming from both. We're making money on the call ratio spread. We're making money on the put ratio spread. So getting $474 was a decent collection. So getting just about 50% of that, I think it's worth taking that off.
Sure.
I mean, for a 2-day and 4-day trade.
Sure, go for it.
So if we took in 474 and we buy it back for 248, 250, I think that's.
You're not filled in EWY, right? No.
No, am I not?
I don't think so.
Let's see.
You can close. Yeah, you can close that as one.
EWY, where did it go?
Oh, is it gone?
It's gone. Let me go. It's gone.
Huh.
There it is. Yeah, we're filled on that.
Okay.
And I'll pay $250 for this. It's tricky. These are so far and it's both. But I want to take the profits out of both sides. And I think it's okay to put it in as one trade.
You can put it in as one, for sure.
Okay, Twitter, did you say we didn't get to everyone?
No, go top down.
Okay, MKSA, UPWK, April 17th put, assigned, rolled before 21 DTE.
Sometimes you can just get assigned. We never want to say you can't because sometimes the wheel gets hit and you're the unlucky recipient of getting hit by the wheel, right?
But again, if you're assigned on a put, fine, you get all the premium sucked out of it. It's not a dividend. It's not a dividend risk assignment. The only dividend risk assignment are calls. So you got assigned on a put and you bought the stock. You can go right out and sell your stock, or you can sell a call against your stock. You can keep your stock and sell a call, or you can just close your stock if you don't want it.
Close the stock and start over again. There's nothing wrong with that either. So Thank you very much for that one.
I will place a bet with Polymark that there will be an increase in Gamblers Anonymous chapters.
I second that.
And the Swede, real monkey for rally time. Yeah,
rally time. We need a rally monkey. And then one more tweet, and then we are out of time for today.
So new tweeter, I think. Welcome.
I think so too.
At 8:30 Central Time, expected move on SPX was 50.56. SPX is close to the expected move to downside at around 65.36. Buyers currently defending this area.
I like it. The Swede. Thank you very much for posting that. And then we got it. We did it. And it's time.
I guess we're done. Liz, I want to say have a wonderful, wonderful time in Kentucky. I know you're on your way out of town.
Yep, we're leaving right now. I'll be back on Monday. I'm a short jaunt away. But everybody have a wonderful weekend, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you both on Monday. Bye, everybody.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live, where we do a little Tasty Extra. We go back and take a look at what's going on in the market. You want to do that, or you want to do confirm and send first?
No, let's go back and look. We can do that.
Let's do that, because yesterday was a very interesting day. I tweeted it out the night before that we had an underwater close Wednesday on the close. Going into Wednesday night, meaning that the market had closed, the SPY and such, and even the S&Ps continue trading. Even the S&Ps continue to go lower. That's an underwater close relative to the SPY and the rest of the market closing, which usually signals a reversal which means,
capitulation. It's kind of a capitulation. It's get me out. Market's closed. I want to get out. It's usually kind of the spook.
We had multiple down days in a row. I mean, it seemed like it was setting up. It seemed like volatility had expanded nicely. Now you got to take it with a grain of salt, because it's just usually. Now it ended up being a phenomenal call. But besides that fact, I was waiting for your reaction.
I mean, Yeah, I'll give.
No,
you
I'm just.
I'll give you that. I mean, you've started.
No.
I'm proud of you, Dad. Because
no. Thank you. You put that in the back of your head, and then you watch how the market trades the following day. We opened around our lows. Volatility was kind of bid. Even the S&Ps, and we talked about it on the show, didn't really rally. Volatility, continued to go get softer. We talked about how the relationship moved all day long, and then you try to make a play. So maybe if you were sitting with a little bit too much long delta that you were comfortable with, maybe you waited a little bit because you had that in the back of your head. Maybe if you were looking to get long and you hadn't done anything, maybe you were a little bit more aggressive because you had that in the back of your head as you were watching everything else. That's all you try. Sometimes you get it right. Sometimes you get it wrong. You never know when it's going to be. I was teasing when I said it was a great call, even if it was a great call in hindsight. But you do have to put it with a grain of salt. And now this morning, you had a big move in the market of 60 handles already, but we've had 100-point moves in the market top to bottom all week long.
No, I will say and not to bring my man Vecchio back into the fold here, but one of the things that I was talking about yesterday.
This Gumata you have, he just sent me his.
He's my side piece. Okay, he's my side piece. He's my side piece.
Macro view of his inside look. He sent it to the whole company.
Yeah.
I couldn't even read it because it.
Hey, but that's good info. You poo. You're getting better. I will say. I mean,
it messes with my head. I don't want to hear why.
I know, but I will say I'm proud of you because a year ago at this time, you and the prior administration would have no clue of anything that's going on. It was just, big dollars, this one's down, this one's up too much, boom, boom, boom. Now you're like a little bit, you've come back to the world a little bit. You're kind of out there, you're learning new tricks. I'm really proud of you. It's good.
I'm a homer with my buddy who writes into us. I'm not going to say his name because it hasn't worked yet, but usually we have an up opening Thursday into Friday of this triple witching expiration.
Oh, yes. But the main thing that I said yesterday on the close, after a move like that, so we were down, 80, 90 handles, you're at lows. It looks like the world is ending. The news is horrible. Everything is horrible. And you have that volatility contraction from 27 down to 24. It was 27 in the morning, or around there in the VIX, volatility futures 26 and change, whatever the number was, 26 to 24. You have
we had spiked up to 30
last week. Yeah. Yep. And you have the rally, back to basically unchanged as well throughout the day. If you had taken advantage of volatility over the last week in oil, in gold, in equities, you got paid 2 to 3x what you should have into yesterday's rally. That was basically it. I took off.
But in fairness, you weren't getting paid. Actually, it was hurting you on existing positions.
Yes, but if you got into stuff yesterday, the point being is I was saying, I don't know what's going to happen. I'm not the Stradamus. But, if you've been playing this trade, you just right now is decision time. Do you take off some puts that you sold? Like I took off my puts in the Qs and SPY. I took a couple $100 out of those intraday. I closed out of the short delta, the naked short delta that I had in oil futures on the upside. Can I put that back on? Certainly. But that was kind of what yesterday, and I think today is going to be a little bit you're going to have to, this is decision day. Do you want to be a little bit heavier on the short side? Do you want to be a little bit more, short vol, long delta, something like that?
You want to help Mickey with his gold position, all types of things that you can do.
Yesterday, you got paid for taking risk. And at the end of the day, it was decision time. It wasn't, you sold puts or you did the, butterfly that we did in SPX or whatever. You're up money and it's decision time. You took the risk, you made money, and it was decision time. And today I think you're going to get another one of those days into next week where, things can go one way or the other. But
they can always go one way or the other, for sure.
Yeah, it's you gotta make it's decision time.
Yep, totally agree. All right, let's take a look more back with some slides on yesterday.
Yes. So this doesn't tell much of the story because the range was quite significant. E-minis down 52 basis points, I should say. They were not down 52. They were basically unchanged at the end of the day compared to the rest of the market there. You actually had the Russell rally into the close, which was a pretty wild move there. Just to give everybody kind of a look here. The next slide.
The Russell actually rallied pretty significantly too. I mean, it's bad. I mean, when you take a look at IWM, I'm gonna put it up here and just take a look at it just a second here. You know, IWM is where it was closing and trading on March 12th or so. You take a look at SPY, and it's nowhere near March 12th numbers. March 12th or so. Just if you're looking at the whole market, even SPY, I'm sorry, was around let's just call it 665, 668. It's about $10 lower than that, which is 100 points on the E-mini SPs.
In terms of the Mag 7, a little bit of weakness there, but again, we had a nice little rally into the close. Everything looks pretty status quo here. Volatility coming in pretty significantly. You can see that 5-day IV change over this week. You're going to see that number negative for a lot of stocks here with volatility futures at 24 and change. If you sold premium, you're getting paid.
Yeah. And volatility right now up 15 cents, and E-mini S&P is down 16. So you basically have volatility unchanged, and E-mini S&P is unchanged after having a bullish a green night for most of the night.
Yeah, volatility is something I'm going to be keying on through the end of the day today, and both crude
You're
and
Batista, son. This is what we do.
Next slide here. When we look at the sectors, you had the energy sector making a little bit of a move to the upside. The semiconductors ended the day in the green. It was kind of a crazy move there. You got biotech moving to the upside, a little bit of a bounce in financials. What this really is showing you is that this was a pretty 50-50 split. The day ends basically unchanged. It was kind of a nothing day. The metals and mining stocks, those are the ones that kind of took it on the chin there the most, with gold down. I want to say it was down, $250 at the close, around that?
Yeah, right.
Silver down like $7 or $8, but silver was down like $10 or $11 at one point. So certainly a big move in the metals. I think that was kind of the story yesterday, or at least one of the bigger ones.
Good.
When we look at some of the biggest movers to the upside here, you've got Sienna, STX, talking about some of the semiconductor adjacent stocks in that list. You got Dell in there, LRCX, WDC. Those are all kind of in that space. SLB in there. You got a couple energy names, BKR. But it was mostly energy and semiconductors. Those were the things that were kind of the strong point in the market yesterday, which I think is good, so to speak. I mean, you get, Yeah,
I mean, it can't be. I don't think it's bad.
No, not bad.
Right. I mean, at recent lows.
I don't know. Everybody always says semiconductors. When semiconductors are going up, it's bullish. Markets are bullish. That's it.
And just to put in perspective, QQQ, which has a lot of semiconductors obviously in there, as it's the NASDAQ stocks. And then just going back to March 12th, because we looked at IWM there, you got about $7 or so. Q is under where IWM was in the same time frame, just about 8 days ago or so.
Yeah.
So I'm just saying, SPUs, SPY, Qs have been weak relative to IWM. I'm throwing the Dow out.
Good. To the downside, some of the biggest movers that we had there, a lot of the mining stocks. So Newmont is there, down 7% and change. MOS, which is Mosaic, it's gotten tied into the kind of energy trade, the agricultural chemical companies, CF, Mosaic. They've had some whippiness to them, down 5% there. Some of the healthcare names, you had Micron.
Wait. We don't need fertilizer stocks anymore?
We're trying to figure it out. We're monitoring the situation as has been the meme. for quite some time. So
you kids.
A mixed bag there across the board. And you'll see that mixed bag when you look at this heat map that we have, because this does a better job of visually giving you kind of what we felt yesterday. So if we get onto the next slide here, you'll see across the board, there's not much to take out of it. Like this is as choppy a market as I think I've ever seen. I mean, the stocks that are and the sectors that are closer to like a white are basically unchanged on the session. So you're seeing you see some real green parts, some real red parts, and then you got a lot of like kind of in the middle. So it seems like, it was one or the other. It was like you're either long energy and then short kind of the big tech stocks. That's been the things that are working. Everything else is just kind of chopping in the middle.
Well, let's talk about the energy product for a quick second that's been moving everything, and I think it really has been weighing on the market, and that's /CL oil, $95. And I always talk about it having resistance around 98. We've gotten over that, of course. We've just been hanging out here for the last week or so. But if you're going to say 98 is resistance, then you got to say somewhere around 91-ish has been support, and we're right in the middle of that range. When you look at OVX CGI, which you turned me on to now as one of my most important things to look at, even though I look at IV rank a lot easier. You can see here that volatility has been coming down as we've been going in this sideways action. I think volatility will actually preemptively tell you what direction oil is going to go in. If volatility continues to go lower here, maybe you get a little bit lower oil. I don't know, going into the weekend with all the news and subject to change, I would think that volatility is going to stay bid in /CL. But IV rank is 68 for those who would rather just look at the IV rank. You can look there just to give you a point of reference before the day starts on all of this. So good job out of you, son. Even the S&Ps just went down 20 and change. We'll be back in 90 seconds. They've been oscillating around high end down 16, low end down around 26. Just looking at the E-mini S&Ps between friends here. We'll take a quick 90-second break. We'll come back. We got confirm and send and a whole lot more with you. Back in 90 seconds. Tasty Live. Nikki, we are back, my son, but we got to Kembe. Even the S&Ps, we're trying to...
Oh.
ASTS? Got you into that.
I did that. We did that little short video with Gus. It was you did.
Oh, sure. When we do our two trades, yes.
Yeah. Well, you'll notice the Rocket Lab puts aren't there either. I closed that for you, no problem, too.
Oh, good job.
Like $100 out of that, but I did a call diagonal spread there. I mean, I was putting in orders above the market, meaning I was trying to sell it for higher than where the market was trading at. And I was just like, you know what? If I get this ding, it's great. I take a little risk off, take some profits, move on. So call diagonal spread, took $100 out of it.
Very nice. Proud of you.
I got long a little NASDAQ here. I was actually lower, but I was using the big boy NASDAQ and fat fingered that. It usually happens when we're remote because I'm not, it's a little bit different. It's not as smooth for me here as an operator, but took that one off. But I got in a...
You fat fingered buying the NASDAQ at 419. You sold it at 433, and then you bought the smaller ones at 434 or so. So you've got a better cost basis than what you did. It never happens to me that way. If I fat finger something, I lose money because I'm fortunate and lucky. The world has a way of evening things out. And people like you, when you fat finger something, you don't do something that you really want to do, you make money on it. And others like you.
Okay. All right.
Even the S&P is down 35, NASDAQ down 200, Russell down 17, Dow down 100 and change. If you notice, the Russell, when it went unchanged, actually green for a quick second, volatility really hadn't moved. It was really up around 30 cents, now up 60 cents to 24.59. I'm taking a key on volatility to see what's going on in this market. Right now, it looks a little bit weak.
Doesn't look great. You got oil rallying a little bit, volatility futures at the highs, gold and silver giving it up a little bit. I don't like.
So far you are 100% correct. Volatility in oil down to under 90 now, 89.99 on volatility futures. Not on implied volatility in oil. They're going to scare the children here again.
You think so?
Yeah. Looks like it. We'll see.
All right, let's get to it.
Let's do it. Fast market. Oh, my God.
I was a little off. I had one of my monitors.
I know, you're remote. Everything, blame it on whatever you want.
But look, technology these days, man.
It's called being able to adapt, son.
I'm trying.
Do better.
Let's do it.
I'm ready. /GC. They try to mess with you. I almost said a curse word.
Yeah. Today's downside. Yeah,
I'm sorry. It does make sense though, right? Volatility is elevated. IB rank of 53.
All right, so they're looking at neutral to slight. This Jake in Omaha, neutral to slightly bullish iron condor. 4250 and 5100 for the April 27th. Let's see that. Okay, that's 42. Man, I had to scroll quite a bit. I mean, there's some volatility here.
Yep.
42 and then 51. I got no problem with this because if I could test on the upside, ooh boy, would this be a good trade for me. And not this trade itself, but the move would be quite beneficial for my overall positions here. All right, I'm gonna try and get filled here at like some. Markets are moving. You got to be careful here. I mean, this is. You got gold.
Watch your pricing for sure.
Yeah, so I just put it in at like a little bit above $7.
Okay.
$7.
Okay.
I'm gonna put it at 7. I'm gonna move it to 7 and just let it sit for a second because you got volatility expanding. You have oil or gold.
Oil backing off here, right? It was up 28. It's up 17 right now.
But you got gold kind of whippy here, so I'm gonna let it sit. See if they come to me. Hopefully, we get filled on this before the end of this show. And if not, I'll look at the prices. But I've got it working for $7 right now. I like it.
All right.
About 1/4 of the width, a little bit less, a little bit more. Oh no, USO. Okay, looking at USO, May 16th options. The 60 delta call sits around 180. Am I reading that right? You are. If I sell at 90, 180 strangle, the upside risk seems manageable relative to the rest of the portfolio. Dave, yes, there's certainly risk, of course. I like this sort of setup. I have been doing, instead of both sides, I've been doing 1/2, 1/3 type ratios in USO. I'm pretty locked and loaded. I'm long like the 120 and the 125 calls. I'm short like the 135 and the 150s in more units. I think that's a more interesting play in my opinion. We've been doing this in MCL and CL as well. I think doing that sort of trade as opposed to just the short strangle, I think is a little bit more interesting, just so you can sell some units on the upside. So I have this on. I'm going to stay with what I have. So I'm going to pass on this one. But if we do get a little bit of a rally in oil, I'm going to look at the oil futures and maybe sell out that call again.
Okay. I like it. SPX, we did one. Go.
SPX Friday, 0-day Iron Condor. Let's run it. Fingers crossed. No surprise announcement before noon. I do have to put in an order to close that.
I can do that for you. Where do you want to close it?
What do you think?
Well, you sold it at $470. It's sitting right there, maybe $455 or so. I don't know, $4. You want to go $390? $4?
$395. $75.
$395. There you go. How did you base that on? Anything?
Because we went. You said $4 first, and then you said $390. I was like, you know what? $395, right in the middle. You know, kind of meet everybody halfway. This is
perfect.
Yeah, it's compromise.
Yeah.
So we're in on this. I'm hoping for the best.
Yep. Next one, SanDisk. These don't have the greatest markets, but they saw Jim Cramer discussing it. Keep going.
Okay. Keep an eye on SanDisk. If everyone's watching it, I might sell some premium. Putting up an Iron Condor in May, the 600 580 put spread and the 1110 1130 call spread for about 850. Chad and Fargo. I'm interested to see if this is actually what we will trade at.
So $20.
I guess this is probably
Condor. I don't know. SanDisk markets are high, are wide. So Chad, we might not be able to get filled in. But if you're getting $8.50 for a $20 wide Iron Condor, when you're trying to collect 1/3 with the strikes, closer to $6-ish, this one's going to have a lot less probability of profit, lower probability of profit. I'll say in English this time than what we would normally like.
Yes.
SanDisk just a skosh off its highs, but it is down $23. Ivy rank of 60 in there. So you look at, are they going into April or are they going into May? May options here are
so the put. Wide. You're really just selling the put spread here.
You're really not going to trade this because you can't trade something that has $7 wide market.
Yeah, but
even with defined risk,
if you did get filled on this and you traded this already, your put spread is probably somewhere between $6 and $7.
Yeah,
and your call spread is like $1 to $1.50, and so you're really just. I would almost rather just do the put spread, and if you get the bounce, you could close the trade. I think that call spread is really going to be kind of a thorn in your side when you're trying to manage and trade around this position.
Okay.
So we're gonna pass. Ooh, not a great day for us, Dad.
No, even
trade wise.
Down 49, trading at 66.10.
LRCX, so this is Adam in Charlotte. LRCX has strong support around 200, selling a strangle with the 200 put and roughly 300 call in May.
Yeah. What do you think here in LRCX?
I think, so let's see what the delta is on this. So 200, 300. Man, there's a lot of call skew here. And these options are like $2 wide as well.
Yeah. Here comes the scare of the children. Volatility making new highs or back to 24.95. Something that I really didn't want to see. Volatility 24.95 or so. Even the S&P is down 54, trading 66 and change. Now at or below the low that we made. Lower than the lows that we made yesterday. 66.11.
These options are not super liquid. I was going to make this a little bit more neutral because I have some long delta in SMH.
Yeah.
And so I don't need to load the boat here. I'd rather be short the volatility. I don't know where I'm going to get filled here.
Yeah, it's a tough one. You really are supporting Adam in North Carolina.
Ugh. I was selling just like a 1 standard deviation, actually a little bit past that. I'm going to put it in at 950, and if I don't get filled there, I'm just going to stop.
All right.
951, they price improved me. All right.
Oh, that should make you feel even worse.
183.10.
You did.
Strangle.
950, 183, 10.
Vol up $1.
Vol up a full $1. I told you they're going to scare the children today.
Yeah, you got to scare them.
Yeah. Yeah. I just hope they don't try to scare me through the whole weekend. They're doing a really good job of it right now. I'm not going to lie.
Oh, yeah.
Uncle.
All right. AI. Ooh. The ticker, not the I don't know, new technology. This is the ticker AI. AI is getting close to its lows, either picking up shares or selling an in-the-money put. Emily, I guess.
AI, let's take a look at the markets in AI. She is, it's an $8 stock, so $8.50 stock. Hasn't had an uptick. I know it was as low as $7.50 or so earlier in the month of March, maybe end of February. IB rank of 58 is pretty good. Let's take a look at the markets here in May. I don't know. I almost think it is a share thing. I agree with you, Emily, in Vancouver.
I think if you wanted,
you could sell in the money puts, but let's take a look at it for a quick second.
You're only gonna get like 20 cents, 25
I was gonna
cents.
Say, she makes a good point. It's something to look at. If you sell the 10 puts, look at the market here, 182, 206. You may get 35-ish cents more. I really just think you buy the stock.
I agree. I over the last 2 weeks have gotten rid of some of these stock positions that I've just kind of been holding. Rivian, DraftKings. I've had some stuff that I've cleaned up, so I don't want to add to this. I agree with what my dad is saying. I think if you're bullish here, you just buy the stock, or maybe if you don't want the downside risk, you buy leap calls or something like that, in the money calls to reduce if you're a cash or IRA type account, maybe you do that. But I'm going to pass on this one.
Open interest on those puts is 7 with 25, 30-cent wide markets. Stock is 1 penny wide.
Yeah.
848, 849. That's where you go.
Yeah.
Next one, please. Love.
It's a rough day for the Bats performance.
Yes. Well, you have a little bit of long delta in your portfolio. I'm certainly picking up long delta in mine.
I don't mean market-wise. I mean fast market-wise.
Oh, and fast market too. But I'm picking up long delta in my portfolio.
Yeah.
Put on some trades with long delta. Short volatility. None of that is working.
40 puts. Are we going into this with your sister? I have the 37s in April.
Love
the
well
37 and a half
off of its highs just made in early February of 53, now down to 40, where it was kind of hanging out for all of last year, all of this year, until it made that big run up. IB rank of 55 is pretty good. It has earnings April 22nd.
Oh God. These are not very liquid options, and I went at a price that I did not think I would get filled at, and I did.
Market's 197, 240. You went in at 220, which is really kind of around mid-price. It's not like, you got to go in at,
Yeah, but I'm the only volume. I made that market. That moved to 197 because I put in the mid-price at 220. That was 141, 170. Okay. And I said, okay, come get me at 220. And now market's at 220. Because I'm there. I just made that market.
Okay. So I'll tell you what happened. And this is a great example. You said when you went in for this option right here, it was 170, 241, right?
Yeah.
So you see that market and you figure that the bid is much lower because the mid price is going to be what, $2 or so.
Yeah.
So you go in at 220 and you get filled right away. Now, if you go back in time when we didn't have the great disseminated markets like we do now, and somebody like me was making a market who needed to buy puts, and fair value was, let's say,
$2.
What's that?
It would probably be at $2 is fair value.
No, if I needed to buy puts, I want fair value is close to probably, let's say 230 or 220.
Yeah, sure.
Whatever. I make that bid so much lower and that offer so much tighter because I'll still sell them at 240. I'd rather sell them at 260 because I already have too many of them. But I'll sell them at 240 if I can get a couple of fishes to sell me some 10 or 15 cents under theoretical.
You calling me a fish? That's pretty. If that's
your takeaway, if that's what it has to be.
I hear you. Oh, I'm in with Ellie. I sold the 37 and a halves. Now it's mid price at 220. I'm a market maker. And I got another fish swimming with me. There's two of us. I can see it in the volume. Two of us with an open interest of 10. We got a whole gang of fish.
Look, the offer's 220 now.
Oh, so I'm up 10, 15 cents on this already.
You're like the shark now. You're not the little pilot fish anymore. You're the shark.
Citadel quivers when I come knocking. Kenny G, he doesn't want any piece of my orders. Sorry, we missed that last one. Sorry.
I'm sorry.
Or are we on? Okay, I bet. All right.
I bet. All right. Yeah. Vanetta mentioned this the other day.
Okay. Likely heats up once the situation clears. Fundamentals still look intact. What fundamentals? We're just buying.
That's right.
I don't see any fundamentals.
I bet down 15 cents, 39 and change. What do you think? Good IV rank of 52. Not great, but good IV rank. I mean, this has had a higher implied volatility. Volatility has been pretty steady here at 52.
I am long stock, so I'm going to put on a strangle that's covered to the upside, more and more painful to the downside.
Yep. Mm-hmm.
For my position as a whole.
Okay.
Oh my God! Come on. The market makers are really mad at me for
picking them off.
For picking them off on the love put. All right. Delta neutral strangle 30 delta. I did the 37.43 strangle in April. I'm covered on the upside via shares. Downside becomes even more painful than it already is, which is fairly painful.
But your cost basis is so much lower now.
Yes. I'm reducing cost basis.
Even the S&P down 54, just about 4 handles off of their lows of 66 even.
Yeah, volatility same bid. You got oil basically unchanged. Bonds moving 113.06.
Yeah, bonds going lower here and going lower in a big way. Look at this big move here.
Why'd you make me sell those puts?
Sometimes you gotta stop going to the well.
I know, seriously, you gotta take your money and run.
Times. Do we have one more?
Yeah, we got 2 more.
All right, let's take a look at it.
Adobe, okay.
Oof. ADBE.
225, 205 put spread in May, trading near multi-year lows. Okay. All right. 225, 205, $3. Mm-hmm. Do I just sell the 210 puts?
Oof. I mean, Adobe doesn't have the greatest markets. I think you have to trade. I think vertical spreads are probably the best call here in Adobe. I mean, do you want this kind of like a million shares have traded so far today? Oh, just over 1 million shares. I mean, markets are okay for a $200 stock. They're not amazing at 30 cents wide. I do a vertical spread.
Ooh.
Got filled right away selling puts, right? I mean, put spread.
I did the 225, 205.
You did it for 330 with a mid price of 319.
Yeah, I don't like that fill either. I'm getting maybe it's a sign the volatility is expanding, but these markets are
No, what it is markets are wide, and you're selling risk.
Yes. So you're getting
volatility
filled
going higher. So, ladies and gentlemen at home, when you have markets like this a little wider, heed my son's warning here and go in above the mid price and work the order down.
Yeah, and sometimes you'll just get 10, 15 cents out of your love puts. If you look at those now, they're 192 at 222.
You the man.
That's a mid price of 210.
You the man.
205, something like that. Amazing. All right, last one here. DIA, okay. Long term, I'm still bullish on the overall market. Feels like a good spot to add some delta. Selling the 30 delta put spreads, maybe $50 wide. Diamond's gotten whacked over the last couple weeks here.
Yep.
I'm going to do a lesser. I like this trade if you're looking for new positions, you're trying to buy the dip, doing it strategically, short some volatility. I've got that kind of already. So I'm going to go with what I did in SPY yesterday, selling some units on the upside, playing for a little bit of a bounce, but not as heavy on the risk to the downside.
Okie dokie.
So I'm going to do the 1x2 crab trade.
All right, my friend.
All right, we're in. I bought the 470 in May, sold 2 of the 480s in April. I did have $5 and change debit.
$5.35. The more you pay for that, the worse it is for you, even though you have positive theta decay in there of almost $9 or $10. So it is and it gives you one long delta, not a huge amount of long.
Yeah, you're short vol.
That is correct. You're short vol. There's your there's your report card. What do you give yourself as a report card? If you had a
it was pretty good. It was okay. On a day like today, it was okay.
Yeah, for a day like today is right. Even the S&Ps without a downtick all morning, all the upticks were last night when we traded up to 66.85. We are on our lows down 1% now. NASDAQ down 317 on its lows. Russell down 35 on its lows. Volatility down 270 and change. I'm sorry. Dow down 270 change is actually the strongest of the group by a 2-to-1 margin or more, but you can see the Dow has been quite weak, weaker than most over this time frame. Volatility 25.15 does not want to die, putting a lot of egg on my face for sure. 25.20, I did say we were going to kind of scare the children to the downside. This is a scare. Maybe 10 more handles on even the S&Ps. And we have the scare in place, but you know what? Don't take my word for it. Take a look at volatility. Make sure volatility comes off of its highs before you think that we get a little footing into this market. Because right now, even with oil basically unchanged, up 33 cents, 34 cents, we haven't had a big move in volatility. We haven't had a big move in oil to the upside. It's definitely been going sideways. Let's not say it's been selling off. The one thing that has been selling off has been volatility. But again, still lofty, right? At 89 now, down $3. Still lofty relative. It's not, back into the 40s, 50s, or 60s. It's still in the flirting with 90 here. So you still have volatility bid, although coming in encouraging for maybe some oil capitulation the oil capitulation of the upside being over, but we'll see. Gold down $16. I guess last night when gold rallied, they probably sold all that, a lot that they needed to raise capital for everything else. And
that was when the smelters liquidated.
Got it. Right. Those are the no. Totally understand. Silver's been weak all day. It's weak by a big margin to gold, down 2.5%+, down almost $2. Let's take a look at the market itself here. Market itself not looking good. SanDisk down 35. You just traded. AppLovin down 12. Meta down 12. TSM down 9. MU even down 10. Trading about $2 off of its lows. That never goes down. BE down $7. It's a big move there. Earnings are coming on 429. Ivy rank of 51, starting to percolate a little bit there. Here's your SPY volatility, flirting with 40, a number you don't usually see in a ETF. So maybe if you want the less volatile product that's even down 1% today, but not down 4, 5, 6% like some of these stocks might be, and you want to go so that has a large implied volatility, SPY, Qs, NASDAQ, the rest of them might be your play to go. Let's see what's moving to the upside before we take a quick break. Not a lot. FedEx for earnings up $6, but it is off of its highs, trade up to $3.80. Now $18 below that. What was once outside the expected move, quickly inside the expected move. And then you got volatility products, which you would imagine the evil empire Goldman Sachs up $1.50 or so, OKLO up $1.50, Qualcomm up. Really few and far in between. Some of the oil related stocks, which have been getting hit as of late, are higher also. All right, son, give me some words of encouragement. What do you think?
We got a break. We got a market measure coming up.
Let's do it. We'll take a quick 90-second break and come back. We got a market measure coming up. Tight-lipped from Nick Batista. Sad.
I need more coffee. We got to get the market measure.
Sad. Market measure next. Nicky, we are back, my son. And you know what that means? Time for a little bit more Tasty Live as we take a look at this market with a market measure. Let's first take a look at the market. Even the S&P is down 63 and change. A NASDAQ down 300. Russell down 41, Dow down 300 and change, and volatility just about 15 cents off of its highs of 25.30. We're 25.20. There you go right now. Let's take a look, because I think this is a precarious place for the market to catch a bid. It has to catch a bid here a little bit, in my opinion, as volatility was just selling off a second ago, as even the S&Ps were doing basically nothing, not going higher, not going lower. Key on volatility, I think.
You don't like it now.
I just bought some E-mini S&Ps. I did not sell the futures. I think the futures are probably a better trade at this moment.
Vol futures I
bought some E-mini S&Ps at 65.95 right here.
Ooh.
I think Vol futures are probably a better sale at 25.20 if you can get it.
You think so?
But I screwed up. I mean, I think so.
All right. Well, market measure. Let's do it.
All right, we'll see.
Yeah, I don't know. Doesn't look good.
Listen. As of right now, let me backtrack here for everybody.
Yeah.
I'm on tilt. Even the S&Ps have not.
See, which is I will say
have not rallied, and volatility has not come in that much.
That's what I was about to say, and I
really should be waiting for volatility to come in by 30, 40, 50 cents before doing anything in volatility or E-mini S&Ps. I'm just trying to be machismo right now. I'll tell you exactly who I am. I don't know if you remember the boxer. I think he was from Panama. No Mas. Who said no Mas? Roberto Duran. Phenomenal boxer, amazing boxer, tough as nails. One of his last fights, he got hit once or twice, and he just said no mas. This was a guy who could take and walked away, turned around, and was out of the fight. I mean, this was a guy who would run through brick walls. He was an amazing champion. He just had enough, and I think I capitulated right there.
So that's how you feel. You feel like you're walking away. That was it.
That's correct.
Ooh, that's scary. Yeah,
I know. I too, because it's my money.
I've been looking at the VIX. The VIX has obviously been perky the whole day. It doesn't look good.
It doesn't. There's not one encouraging thing here. Bitcoin is weak. Bonds are weak. bonds just flirted with 113. I know that's what everybody will talking about. Rates will be increasing, bonds at 113. Now, if they rally, point and a half, that news will go away, right? But I mean, that's what they're going to say now. They're going to say that oil, basically unchanged is bearish for the market at, lofty levels of 95 and change, especially with bonds going down to 113 and change again. Gold is weak. Everybody's selling assets. Silver's weak. There's no argument with that, because that is what you can see across the board. But, every once in a while, you got to say to yourself, I got an opinion that might be the opposite of everybody.
They always say markets don't bottom on Fridays. So you got to be careful.
You're right. You're 100% correct. You're 100% correct. I had my 96 offer in.
There you go.
I'm just kidding. Go ahead.
All right. Market measure.
Mm-hmm.
Let's do it. Oil volatility, though, has not expanded.
No, it hasn't.
Interesting.
Yeah. Yep.
Which is interesting. All right. The 0DTE option markets, and this is sponsored by the SIBO, of course. The 0DTE option market gives traders access to rapid results and liquid prices. So far, our research has avoided making directional assumptions and focused on delta neutral approaches to selling 0DTE. But as the market has climbed higher and higher, it is natural to wonder what happens if we decide to pick a side.
Yeah.
Today, let's crunch some data on how different approaches to selling 0DTE SPX puts have performed.
Okie dokie.
Let's do it. Certainly been good outside of the last couple weeks here, months. So we've got 2.5 years of data here. We consider the results of selling one put spread every day with an at-the-money short strike. Consider a range of widths. So that's what we're going to be looking at here. Trades were closed if they reached 10% of the max profit. And then examine the total number of winning trades and total profits and losses and the maximum drawdowns, the largest amount someone could have lost, which is the largest amount someone could have lost if they did this every day starting at the unluckiest time. So when you look at the max drawdown, it's going to be more than the width of the spread because it's cumulative. It's like a period of time where you had the biggest drawdown before getting to a winning stretch.
Yeah.
So it's your max drawdown through this period. And we looked at this looking for 25% of the max profit instead of 10%. So those are the two metrics that we're going to look at here.
All right, let's take a look at it.
Cool.
And we all hate max drawdowns, right?
Of course. I would like to avoid those, generally speaking. And so the way you can kind of read the max drawdowns is like looking at the 30-point wide. Mm-hmm. Essentially, you had 3 in a row that were probably close to 4, actually, because you're collecting some premium here. But you had 4 in a row was your max drawdown. That was like kind of your worst case scenario. That's why the risk is $9,000 in terms of your max drawdown, as opposed to a 30-point wide spread that can only go to $30 minus the credit. So it tells you that 3 to 4 occurrences in a row is basically your worst one. In terms of your win percentage, 90 to 91% of the time you're taking profits on these. That's a function of this data set. Again, going to the question that we've gotten a couple times now. Why is Thursday a bad day to do 0DT? I don't know. It just happened to be a small data set, and that's the worst day. Same thing here. We could redo this study in 5 years, and this could be a totally different story. It's just the way that the market has moved. You can see across the board positive P&Ls, and your max drawdown was a handful of days in a row here.
Yeah. Okay. Well, right now, let's put it in perspective with how you're doing. You're down around 70 cents on your trade.
Damn.
Not max yet, but you're trying.
Yeah, but if you did, so like just looking at the markets here over the last couple of weeks, you probably had 2 occurrences last week, and then maybe 3 occurrences this week that you probably lost on. So it just kind of gives you an idea of like when these are not working. It's when volatility is super high and that, you have kind of the downside move.
Yeah.
So here we're looking at opening at 9 a.m. and then closing at a 10% profit. Again, across the board profitable here on your max drawdowns. You're looking at about 4 to 5 occurrences. So, just keep that in mind is 4 or 5 occurrences. If you can't withstand that, you probably got to adjust what you're doing here with these trades.
Yep. I don't know what to say here.
No, there's nothing more. It's just, that's just the stats. So now we're looking at opened at the open, closing for 25% of the max profit. So again, very high probability. Your P&L is increasing, your average P&L, because you are taking more profits. But again, max drawdowns, they're staying pretty high here. I think across the board, just from my experience with SPX trades, I've been happy that in general that I'm taking smaller profits.
Yeah.
10, 15%, that's good for me. Unless this is like your core trade, maybe you can do this a little bit differently. But for me, that's kind of what I'm looking at.
Okie dokie. I agree.
And then here, so opened at 9 a.m. So we've looked at the open and then 30 minutes after the open. This is closed at 25% of the max profit. Again, value is going up for P&L. Max drawdown actually tightens up a little bit because you're taking a little bit more profit. And again, these trade like 10 when you're doing one side, the 10% versus 15% versus 20 to 25% of the max profit, they're all going to be basically the same because you're probably having that same, like the 10% probably closes you out at 9 a.m. and then the 20% close you out at 9:15. It's kind of that same sort of move when you're talking about those smaller differences. So again, got to be careful with the max drawdowns.
Totally agree, son. Totally agree. But how do you watch out for the max draw? I mean, you set that on entry, right?
I don't mean you can control that. I just mean that if you are.
What you have to think is it's not as easy as what sometimes we show on the show, taking a quick dollar in 15, 20 minutes or holding something that goes to almost a full loss and the market, with high implied volatility like you have now, 25-20, we're going to have a little bit of two-sided action, although it doesn't seem like so far
not today.
So far today, right? I mean, we were down only 15 on the E-mini S&Ps near the opening there, or right after the opening. We're down 60 right now. Volatility 25.15, so about 15 points, 15 cents off of its highs. How do you do this? You got to set it on entry. What you should be taking away from this whole thing is you got to expect it sometimes. Now, you should only expect it a handful of times. So if you see it happening more than a handful of times, you got to think about one or two things. Volatility was low and expanding and continuing to expand, or your strikes are too tight.
Yes.
That's the two. That's the two.
Yeah.
Because the math is the math. Go ahead.
Good point. So over the duration of the study, SPX has gone from 3,800 to 6,600. Can you believe that's the range that we've had over the last 2.5 years?
No, I would not have. I could remember if I think about it, but no, I would not.
It's pretty incredible.
It is. It really is. And where are we sitting? It's 6,600 or so. SPX is going to be lower. SPX is sitting at 6,550.
Right there. Sticking to defined risk helps traders manage some of these, even though you will have large drawdowns, higher profit targets. We're able to take home more profit overall, but that results in more exposure to drawdowns. Obviously, if you're trying to take more profit, you're going to have more risk in general. So that's especially the case with wider spreads. There are not clear differences in results for traders who sold their puts between the open and 9 a.m. I think this is kind of concurrent with what Kai has been doing on Mondays. There's not a huge difference between that 30-minute window. Sometimes one is better than the other, but the times where the other is better than the other, evens out. You're going to have one, if you have 10 occurrences, one day it would be, 5 of those, it would be better to do at 8:30. 5 of those, it would be better to do at 9. It evens out over the long run. So you would have to be a pick and choosing better than a coin flip, which is probably
correct.
hard.
That is correct.
So even narrowing our trading all the way down to SPX 0-day credit put spreads leaves a wide range to explore. In coming weeks, we will experiment with short strike placement, trade management, and rolling. We got more coming your way with 0DT.
We do. So
today, Junior.
Like I told you, I'm on tilt, son.
I know it's okay. Well, you got 10 handles. 15 handles, maybe.
10 handles right now. I was down around 5 handles on them, so you would well inside the range. Volatility 25.05, a lot more encouraging as it backed off a little bit off its highs of 25.30. You mean the S&Ps really haven't moved that much. 5 handles from a vol contraction of around 15 to 20 cents. Bonds are 112.31. Bonds continue to go lower. Let's see if bonds going lower has still the negative effect on the E-mini S&Ps. Oil /CL up 30 cents, 25 and change. IV rank of 66 continues to go lower as volatility goes lower. Oil has not contracted. It's been staying sideways. Let's paint the obvious picture here. We can think that oil is going lower because volatility is going lower, but so far it's been going absolutely sideways. You say markets don't make lows on Fridays.
That's what they say. I can't take credit for that.
That is what they say in a bull market. If we had a 5-year, 10-year, 1-year bear market, they'd be saying they don't make highs.
Yeah,
Friday.
That's true.
It's just the way it is. Let's take a quick 90-second break. I had a good statistic here on how.
Oh, you got your Taiwanese sources sending us some good stuff. I love it.
Yeah, I can't find it. Maybe I'll find it on this break for you.
Yeah.
About the amount of volume that's been trading. But anyway, we'll take.
It doesn't seem like it's that high.
You know what? I haven't looked at E-mini S&Ps volume on the close. We should look at that. If you look at the E-mini S&Ps, and again, it's just more banter, right? E-mini S&Ps 600,000 have traded, and it's the first hour between friends that Yeah, you need your little
395. We got it.
Are only down 51. I say only down.
Look at that.
Because I'm long them. You got filled at 395. You need a little bit of a rally on your 0-day trade to book that profit. I like your 0-day trade better than my scalp. So I haven't scalped them yet. Of my buy of E-mini S&Ps, even though my E-mini S&Ps have had less movement in them and more positive right now. Your trade was better. My Taiwanese sources just told me 1.7 million SPUs traded yesterday. We're on a pace right now to be at that or more, but that's decent sized volume.
Yeah, but you got it's expiration. I mean,
yep.
You got to expect to have a little bit more volatility here.
You got to expect the unexpected.
Yeah. Yes.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming? We got my man Q from Tasty
in the house.
World headquarters in the house. We'll be back in 90 seconds with Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
On the subject of bonds, let me now expound. Swoons, they will, nay, must someday turn around. Oh, cursed bonds, will you not soon fall like rain? Quit this parched desert of misery, I can take no more pain. With thy nimble run, I admit I am impressed. But climb no higher, or I shall be depressed. Ye tasty traders, all now hear my plea. This position chafes worse than the bat to me. Markets, this is no time for foolish frivolity. Will ye not cease this fatuous flight to quality? Oh, if I could, I'd wave all my magic wands to sweep away regret from shorting bonds.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Chegou, não quero mais acordar. Como dá pra sonhar o que é impossível saber? Sentir o gosto do sol, andar por cima do céu, fingir que nada mudou depois de ter você. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Deixa eu te ligar, me faz apaixonar, não vejo a hora de te encontrar. Um minuto longe de você, eu já não sei esperar. Madrugada chegou, não quero mais acordar. Madrugada chegou.
What is going on, everybody, and welcome back to Risk and Reward. Today's Friday. We got a little bit more of a downtick today, just been consolidating a little bit. We'll catch up on all these metals, the oil, and any other headlines. But before we do that, Brother Gus, how are we doing today?
Doing good. Always doing good. I have the sweat of a lifetime going on right now in my portfolio that I'm excited to talk about here in a second. But yeah, we're sliding a little bit. I must admit, I did get even shorter oil yesterday. I really feel like this bubble is going to pop here pretty soon. Bubble isn't the right word, obviously. It's a substantiated move as we've covered before, but I feel like we're going to see a little bit of a slide in oil here sometime soon. So I am getting increasingly speculative on the short side with oil.
Yeah, I know we got a little bit more volatility in there. I know I got a little bit of short delta on in there too. I'm hoping we get some headlines this weekend that can kind of help some of the oil news kind of roll over a little bit. I think whenever oil's kind of active and still putting in higher ticks to the upside, it lets us know like the story, if you will, is like kind of in play. So I'm curious to see if you'll get any more headlines coming this weekend while the market's closed. I know they've been doing that to us the last couple of weekends. So we'll see what we get. What's going on, Robert? What's going on, Ramsey? What's going on, E-Media? What's going on, guys? What are you guys looking at? What are you guys trading? What are you guys mostly managing today? Does Tasty Trade mean Tasty Trade? They don't make you do. Does TT mean Tasty Trade? Yeah, that's the acronym, right, Gus? Whenever we see TT, usually that's a reference to Tasty Trade. Yeah.
Yeah. Internally, sometimes we use it to refer to TikTok, but externally, I believe Tasty Trade is always what we're referring to there. 100%. Money wandering with a always nice wonderful pun as we talk about with this guy. This guy's the wordplay machine. Don't be too crude, Gus. I'm in fact quite the opposite of crude, I suppose. I don't know exactly what the opposite would be there. Not to present another vocabulary question or anything, but I am whatever the opposite of crude is with how aggressively I'm fading oil right now.
Light sweet. Right, light sweet crude.
Light sweet, yes.
Crude.
I'm in fact, I guess, dark and sour is the situation right now for as it pertains to my portfolio.
With that being said, we can dive straight into the Tasty Trade platform. We'll take a look at a couple of the things that we got going on over here, and then Gus, let us know what's top of mind too. But I mean, as we get into things, market is kind of sliding lower today. Interestingly enough, we're almost near the November 21st low that we put in, or we've just barely scraped it, I guess. We just barely poked through it. Now we're trading above it. So, I mean, any levels sustained beneath here, I think things might get a little bit dicey. But I'm a little surprised to not see any type of, I guess, meaningful relief rally, this week at all for the most part. So I know sometimes we kind of see a little bit of a power hour kind of rally into the last hour before market close. And I know it's Friday right now, so I don't know if we'll get that, but things sliding to the downside just a little bit, and that means volatility has expanded. So premium positions are still on the board. Premiums are elevated a little bit today. And as we can see, volatility tends to cluster, and this definitely looks like a little bit of a cluster of volatility over the last couple of weeks here, guys.
Yeah, I'm also surprised we didn't get any sort of relief rally. We sort of got a little bit of a fake out type move yesterday. Yeah. Funny, it was sort of like when we got the oil dump fake out where I was able to exit my first wave of oil shorts where there was a misappropriation of a quote that happened, is my understanding. Trump said something like, we're not going to put any troops on the ground or any more troops on the ground. And then the news just took that and ran with it. But then the full quote there was, we're not going to put any more troops on the ground, and if we were, I wouldn't tell you about it anyway, which is basically just what he says about everything. So I suppose that overnight, the market picked up on the fact that wasn't quite the full story. We've gone back to dumping, as you said, testing those November lows. I don't know that I necessarily think that the bottom is in here, but I am getting increasingly more excited to get some long delta on as we test these lows, because whenever things conclude and there's a little bit more certainty and less turmoil going on in the Middle East, I think we'll be right back at the highs.
Yeah. And to the point that you made too, I know when it comes down with the headlines, we see a lot of reactions to full headlines, incomplete headlines. We typically just see an emotional reaction sometimes. And I think it was Denzel Washington that said one time, at this point, it's not even necessarily who's right or what is that correct. It's just more so what information hits the public first. And I think we start to get a lot of reactions, and we see the effects of that in the market. And it's crazy that I can move a lot of these underlyings, even if it's for just a quick moment, and then reprices or whatever it is. So
yeah, David, to answer your question, what's your price target for oil with your shorts? Don't see oil going back to pre-war prices for at least the next 30 days. I honestly don't disagree with you there. I've given myself enough room on these contracts. USO is the vehicle that I've chosen, and I would say I'm roughly looking for under 100 on USO. I have 3 naked puts on at staggered expiration dates, 60 days apart. So the first of those is, I believe, 57 DTE right now. Let me find this. too many positions as always. Constant struggle for me. Yes, 57 DTE. Am I stupid? Here it is. 56 DTE. So I have a May 15th expiration at 85 strike. I have a July 17th expiration at 119 strike, and then a December 18th expiration at the 65 strike. So those strikes are $10 apart, and then each trade is basically doubling the length of the one before. So giving myself plenty of room there, plenty of time horizon, and really just looking for the gamma play here, because I think that whenever we do finally get a little bit of certainty and that news comes through, we'll see oil just crater immediately on that day. And when that volatility comes through and these put side premiums get super juiced, that's when I'm looking to make an exit. So I don't have a super distinct specific price target in mind. Just looking for the dump, looking for the giant red candle. If we get below 100, that would be great. If we do, I will certainly liquidate all three. If we do not, and it's just a big gap down to like the 105 level on USO or something like that, I would maybe take off the first two and leave the longest dated one on as a runner as we begin to work out and hope that we take the stairs down a little bit more. But yeah, just looking for those with the naked puts. I'm just looking for those downside premiums to get juice whenever the dump inevitably comes through.
Yeah, I mean, in my situation here, I know we have one put on USO. It's a little bit different on my end. I know we have 7 days left to expiration, so our time window is a little bit shorter. So we're going to need to pull back a little bit sooner for the sake of the expiration of this position at least. But I mean, I'm kind of hoping the same thing. I hope we get a little bit of a turnaround. I mean, this put is down a little bit on the position. Maybe it's down nearly 25 to 30%. But since it's a cheaper put as well, I don't mind kind of carrying this one over into the weekend. But similar thoughts over there on that end. USO being the main vehicle to get some exposure to the oil market. We did a little bit in
Wandering said huge round top forming. Asked Tim Knight, and I had to read that 3 times because I kept reading it as top round. I'm thinking in stake terms over here, but yeah, it definitely does look that way on the broader market. That is correct analysis. Top round, great for sous vide. If you guys are looking for a way to cook that, make it a little bit more tender. Good way to spice up a pretty cheap cut of meat there.
When I seen this too,
what are your ideas on SPX 0 DTE trades? Great to make $50 when you win often. But when you lose so big. Takes weeks to get even. So like you're just asking for broader opinions. Personally, I almost never trade 0 DTE. I would say I could count on one hand how many times I've placed 0 DTE trades in the last year, and really it might only be like 2. It's very seldom that I get involved in that capacity, and if I do, it's usually a neutral play on a Friday or something, and not even necessarily always on SPX. But if you have a neutral day in a normal environment when you're not expecting any news to come through, the only type of 0 DTE thing I'll throw on is something like a Iron Condor 2 hours from close, with a pretty disproportionate risk profile, and I mean disproportionate on the risk side, high risk to low reward. But under certain conditions, that can be a viable strategy. Personally, I don't attack the 0 DTE stuff very much. My average DTE is something like 60 on any given trade, I would say.
Got you. Average, what are your ideas on the SPX 0 DTE trades? I mean, I kind of take more so the perspective from buying them. I know we kind of always talk about them from the perspective of selling the 0 DTEs, but I don't know. Personally, I found them to be really useful for directional trades if it's a very short time window, and very directional trades come from, just paying a debit for them. So on the sell side, I think they can be kind of difficult. I almost feel they're a little bit easier to be directional with, but for the most part, I would say like maybe 10% or 20% of the directional trades come from the 0 DTEs, usually utilizing the futures, but it can be difficult to manage the risk on the 0 DTEs, depending on the tools at your fingertips, and it's really going to depend on how quick you can get in and out of a trade. And I think it can be more difficult to do that with options contracts. So they're really nice on the return on capital. They're cheap, right, if you're trading directionally, but having the physical and manual ability to get out of those whenever you need to on a short time frame can be difficult with options.
Yes, and obviously, yeah, gotta proceed with caution. And I mean, I think ultimately you put it well. It's nice if you're winning those scalps, but if you guess wrong, it can be incredibly consequential. So yeah, it's the good old picking up pennies in front of a steamroller analogy that we love so much in the option space. Baker, yeah, Iran said this morning that a shipping lane is open, that a couple tankers from India did pass the strait. Yeah, I've been seeing those types of stories break over the last week. I know Ilya's been covering that a lot in a more macro context, but yeah, India and I believe China was able to put some ships through the strait as well, and it is just U.S. and Israeli ships that they're stopping as of right now is the provisional story. But yeah, I think as long as and as David alluded to here, there is, as long as there are headlines that there is a closure in any capacity, I think we will see things stay elevated. But my whole angle is that whenever the headline comes through that they are going to start letting U.S. and Israeli ships through again, all of a sudden oil just craters, and that's when I'll be looking to make my exit and hopefully be laughing to the bank and not crying to the credit bureau, if you know what I'm saying.
Oh yeah, we'll see what we get. The volatility's there. Again, I know the metals positions are still working out pretty well. We're getting a little bit, we tried to rally a little bit, but it's not holding most of its gain for the most part. I'm wondering if this is going to be it for the metals. I'm wondering if now we're going to start seeing more legs to the downside, finally getting out of that range that we were stuck in for the last 30 days. So we'll see what we get on that end. I know Bitcoin and some of the crypto markets, they tried to recover for a little bit, but still struggling here as we're pulling back down to 70,000, 69-ish thousand area over here on some of the cryptos.
Yeah, I'm feeling okay in the crypto space as long as we kind of continue to hold 70 as a support on Bitcoin here. I think that when you have this sort of drawdown, and I mean, really just this last year has been like the least excitement I've ever seen about Bitcoin. It seems like, especially now and over the last few months, people are really accepting that this might be our new reality with Bitcoin, that it's not just a up forever sort of asset. So I do think that as, that excitement starts to dwindle, as people start to accept reality here, it will begin moving more like a traditional company, how we expect a stock of something to move. So I do think it'll take some stairs back up to get back to previous levels. But as long as we can hold this good support at 70, I'm feeling okay. I feel like that's the first stair step, so to speak, and then hopefully we'll get another one to 75 and start to establish that level as well.
Yeah. Let me know what else is top of mind while we're on the Tasty Trade platform. Any other assets top of mind before we shift gears here to TradingView? I know we have
NIO. NIO is my big sweat here. NIO. I alluded to this on the show earlier this week. This thing is just coming right down to the wire on me. I have expiring today. I'm a short call vertical, long the 6, short the 550. So I need this to close under $5.50 today. I'm unable to get it out because the 6 call. I'm unable to get out of it because the 6 call has now become worthless. So I simply there's no liquidity there. So I simply must hold this thing until expiration, and it is as close as can be. I thought that this was going to be dead in the water, and I was going to be waking up this morning and looking to make an exit on it, but then immediately we ripped down, and it was at 560, and I'm like, oh, can we do this? And it's at 555, and I'm thinking we might get below 550 here, and now it's at 549. So we are just barely hanging on these NIO calls, and this has panned out pretty much exactly as I had hoped it would if we can hold below 550 through the end of the day today. But yeah, really sweating this one. It's been bouncing back and forth between 549 and 551. There it goes, ticking back up to 550 right now as I speak. So yeah, it's this is a scary spot, but hopefully we can close 1 cent lower than where we're at right now, and I can escape out of here with a max profit and not get assigned 500 short shares at $5.50, which obviously if that happened and we're at 551, that's not really the end of the world, but I would like to not have to deal with it.
No, 100%. It was pretty quiet, the last 7-8 days. Now we're getting more volatility kicking back in here. So we'll see what we get.
Yeah, it took a big leg up, nice. and yeah, my initial thesis with the trade was just that I felt like the leg up was a little bit too much, and we were going to give about half of those gains back. I was very aggressive. This was like a 10 DTE trade when I put it on. I was aggressive with that time horizon, thinking that if we got it, it would be sort of the dolphin dive, the opposite of the dead cat bounce type move that Errol and I have so creatively coined, a dolphin dive, and that does seem like what we're going to be getting just a little bit here. But yeah, it's sketchy. I did not expect it to make another 50 cents to the upside before that pullback started to come, so that sort of skewed my time horizon there a little bit. And like on Wednesday this week, I thought this thing was dead in the water, but I decided to continue holding, and it looks like we might be able to pull a rabbit out of a hat.
Yeah, we might be able to get it. I know volatility's up on the day, volume's up on the day, 30 million shares traded on the day, so it has it in it. If this is going to make a move to the upside, it might be coming soon. Has the volatility.
And yes, KT, bought puts to short USO. Yes, looking for downside volatility and premium expansion on those. But anyway, that's all that I have in the Tasty Trade platform. If we want to hop over,
yeah, we can go jump over to the TradingView platform on this end over here. Yeah, I was kind of eyeing some of the oil product yesterday as well. Really not trying to get too involved on the futures contracts, but it's still a really attractive trade. I know we're kind of looking at the options in USO and in some of the oil products to get some exposure, but depending where USO ends up, again, like we kind of mentioned yesterday, I think it could kind of play out very similarly to how, some of the metals are kind of playing out now. It's just more so going to be a matter of being patient and, having enough time, and then also seeing if we could pick our spots without putting on too much risk. Let's see what we have over here. So over here on NASDAQ, we had a little bit more volatility coming into today. We had this level of value that we were trading off of. Initially, I was looking to get long. I had a long bias, not necessarily because the short opportunity wasn't valid, especially because we had the weekly swing low right beneath there. So we could have made a justification for getting short. Also, the risk to reward is there. So whether you're getting long here or short here, you can kind of see where you can line up that risk to reward depending on which side you do choose. But with that being said, I think with the market selling off so much, taking out new swing lows, putting in a new day low, especially heading into the end of this week, it was really difficult to not get long. It was really difficult to continue to get short into that continuation to these other swing lows that we could potentially target, like the weekly swing low that we ran all the way to shortly after. So the trades were set up really well, managed the risk really well. The risk to reward was in our favor. The bias got in the way a little bit, but the trade was lined up. And then whenever you miss the move, you kind of just miss a move and kind of sit on your hands to see what the market might offer you next. But the volatility was there. I've just been pretty surprised and pretty impressed how far this market can continue to sell off to the upside, especially after recouping and, even reestablishing certain levels to the upside again, like the massive rally that we had gotten yesterday. It's crazy that the market's giving back so much in such a short time frame. 6570-ish coming. We'll take a look at ES right now. I think Robert in chat, I've seen him speak about the auctions quite often on ES specifically. But I haven't been looking at the auction levels on ES. Let's not neglect this one too much. It's a great product too. It just moves a little differently. It's a great product.
Yeah, I've been thinking about you this week as the sell-off continues, because I know it's not your ideal environment to trade in with your style. You like to have some some solid levels established, and we've had anything but in the last week as we do these little fake outs and then just move back to the lows and establish these new levels. I know it's not super conducive to success for you.
Yeah, no, the opportunities will be there, but I definitely have a bias towards mean reversion trades, because I know for the most part, the trades you're going to be taking in the market is usually going to be a mean reversion based type trade or a continuation. And I have an extreme tendency to prefer mean reversion. And I usually just have to sit on my hands whenever we get the continuation. But funny enough, I know a handful of people that easily just trade the continuations in the market and they love it. So it's kind of funny how our personality types really do bleed through on what we have a tendency to do or perceive the market through.
Yeah, I'm definitely a reversal type person as well. Even in the longer term, sort of context that I trade in, our time horizons are different. But I do like I usually like looking for bounces or just reversal spots in general rather than trying to trade continuations. Anybody who's been watching this show for a little while knows that I'm pretty scared anytime something's riven to want to get long into that or vice versa. I instead greatly prefer to look for the spot where those runs may end, and we might give a little bit back or the other side.
100%. Completely. Absorption above 65.90. I haven't been looking at the order flow on ES, but I was looking at the order flow earlier today on NASDAQ. And the levels that we had absorption on, where the sellers were getting absorbed yesterday on NASDAQ, was the same level that completely blew through today with more aggressive sellers stepping in the same exact price level. So I haven't been looking at ES at all, but I know we had spotted a little bit more on NASDAQ yesterday. We'll have to circle back.
Yeah, David's saying he's like the opposite. He prefers to follow the trend than trying to time the reversals with future scalping. Yeah, and that's totally valid. Obviously, everybody should just do whatever works for them. That's the beauty of this business is you can just find what works for you and do it, and it might be totally different from something that works for somebody else. And I'm not completely anti-continuation, and especially in a scalping context. There's definitely I think continuations might be a little bit easier to pick up on. But yeah, when you're looking at things in a longer term time frame, like I usually am, it's like a continuation for me is like, oh man, this thing has been ripping for 20 days. Do I think that it is going to continue to rip for another 30 days? And I feel like it gets a little bit harder to be confident in those sorts of spots. Yeah. But I've definitely left some profits on the table with that. I was scared to get long silver the entire run up that we were having at the end of last year. And in fact, tried to short it unsuccessfully a few times. So yeah, sometimes you take some punches if you're not willing to play those continuations either.
No, 100%. And I mean, it is funny too, because when we think about it, literally, I think maybe every strategy under the sun, for the most part, can probably fit under that mean reversion category or the trend continuation category, because the market can only do two things. The market can only reverse or continue. So any strategy is going to fit in between one of those. And yeah, I don't know what it is. I know like the continuation type moves in the market tend to have better risk to reward, but are less probable. Breakouts happen less often, and then we get the continuation after the breakout. But most times it can be really difficult to get super tight risk on continuation type moves. So sometimes you might be able to catch a further run, like to your point. Sometimes it can be easy to sell a little too soon, and the risk to reward is so much more favorable. But then it's like when you got to size in lower on trades that have more profit but less risk on the table, or more risk on the table. So I don't know. They both definitely have their strengths and weaknesses, in terms of which feels a little bit more comfortable.
Yeah, absolutely. Did Ivy drop with the lower price? I'm not sure. We just had a quick look at VIX. I am still short VIX, much to my dismay.
Let's double check that real quick as we're on here. Let's see. VIX hasn't had too much of an uptick. We're on the hourly chart right now, so each candlestick just represents 1 hour, and we're almost flat on the hourly chart on VIX. So we haven't really moved much over the last 60 minutes.
Yeah, I've got 59 days left on my VIX shorts. I really, as I step back and kind of look at my, portfolio as a whole right now, I noticed that pretty much everything I have is on the basis that this conflict ends in the next 60 days. Like almost everything is on that exact same time horizon. It's all roughly 60 days, and if we can get some stability going in the next 60 days, I will be a very happy camper. But if not, some management will need to be done 30 days from now.
We'll see what they give us. Agree. When trends / breakouts, you have to accept multiple knife cuts before getting that full move. Yeah, 100%. And I rather take multiple paper cuts to be able to size in more rather than having one shot with the wider risk. And I mean, the math works out the same, but it is funny depending on what you prefer. I mean, the math can crunch out to pretty much be the same. But the tranche size of 2 MES up to a full yes, eating 50 points with 2 MES is worth to get to 50 to 100 points run with 4 to 10 MES. Yeah, exactly. Kind of that math that we're kind of touching on right there.
Basically the same thing you were just saying. Yeah, paper cuts versus getting shot. And it basically just works out the same. Yeah.
100%.
I like that both mindset can be profitable. I want to learn to mix them together. Yeah, Stan, that's really the superpower, is if you can mix them both together. And honestly, I think that if you talk to anybody of any level, they probably struggle a little more with one than the other. It's very tough to achieve the ability to perfectly mix the two together.
Yeah.
Need a study on this. Need a study on early childhood development and then your trading tendencies later in life. I want to know what causes this.
Yeah, we need to. I think it is funny because I think it really is just that fear and greed, But for the most part, I think what would be easier to be able to flip-flop biases. Like I know a lot of the times, like I know some of the trades we had taken this week, we will look for long opportunities near our value area low, and then sometimes we'll flip the bias and get short. But when we really think about it, I think by just kind of accepting the random nature of the market, it can be easier to catch both sides of the market. And I think like that's that internal thing that we struggle with, like internally, whenever we're executing and trying to pull the trigger and trying to get long or trying to get short or whatever the case might be. But I think by really focusing on that, where is the best risk to reward, it makes it easier to be able to just like, let me just get long. Let me just get short. The risk to reward is favorable. And then kind of we'll see what happens. But definitely it's such an internal struggle, internal battle. But I know we're coming to a close here.
Yeah, we are. I do have to draw to a close here. Stan, I have a buddy that loves 52-week lows and has been really successful. Yeah, I really like the 52-week lows as well. That's a watch list I check out very frequently in the Tasty platform. Is the 52-week near lows. That's how I've stumbled into a lot of positions that I have, particularly on a lot of the smaller names in the portfolio. It's just these, not penny stocks, but medium float stocks that take giant gaps down but are fundamentally sound. Getting involved with those things in like a 3-month sort of time frame and just looking for small recoveries. If you can do that in mass, that can be a viable strategy for sure. But
100%.
Yeah, I know that's about all the time we got.
Yeah, I know that is all we have. I know the last question that we had seen here is, are trends and breakouts part of technical analysis? I mean, it can be. The way that I look at it is almost, it's like we know the market kind of moves through like price discovery, and then I think whenever we lay the candlesticks on top, we then call it technical analysis, but really it's just, at the end of the day, the flow of orders. And I think there's really just two types of behaviors we typically see: range-bound behavior and then price discovery. The market is always just going sideways or moving in one direction. So I don't know. I think it really depends on how you want to conceptualize that. But with that being said, I think that's going to be it. I think that's it, top of mind. Anything else on your end, Gus?
Nope, nothing for me.
Cool. We'll see what we get. Have a good weekend, guys. We'll manage these positions. Be sure to stay tuned for more segments coming on next. And we'll see you guys next time. Peace.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This was awesome. Not a paid, you're not getting paid for this advertisement.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Madrugada chegou. Não quero mais, não quero mais, não quero mais. Não quero mais acordar, não quero mais. Não quero mais. Madrugada chegou. Madrugada chegou. Madrugada. feeding my ego, watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what would love do? What would love do? Love will love you. What would love do? Love will love you, love you. What would love do? Love will love you. What would love me? Love will love me. Love will love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human.
We're back. It's Friday, March 20th, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, it's a sea of red out there today.
Yeah. It seems like the inflation narrative has taken a sort of life onto its own, almost as if the market is saying, you know what, it doesn't really matter whether crude oil keeps going up or doesn't. It's done. The damage is there. Central banks have moved. We're going to have higher interest rates. Go ahead and price that out across the board. The bonds are absolutely screaming lower. But the most interesting thing is that through all of it, crude oil is stuck in a narrow little range, about a $9 range, and is meandering there for a few days. Almost as if nobody even really cares, because it's already a fait accompli that this has already occurred.
Yeah, we had a window with which we could reverse or at least contain the damage. Containment has now failed.
Yeah.
Perhaps the view is being vindicated in time, but I was joking that maybe the reason why oil vol's coming in is because no one's uncertain about the future.
That's
we
right.
all are more certain that oil prices will just be staying up moving forward. And you're starting to filter through across a broad variety of asset classes still. The bonds are trading heavy. The metals are trading heavy. They tried to bounce back earlier, could not. And oil, you mentioned pressing the top side of the range. Brent futures near 110. CL up over 98 at points during the day. The dollar here strong. So the liquidity reach in the market persists. It's more of the pre-weekend de-risking that we've seen over the past few weeks. This is now the third weekend that we've been going into with the war, Ilya. Mm-hmm. And it feels like a very familiar Friday of price action where stocks are down, bonds are down, oil is up, and the dollar is moving higher here. So we can go to the charts here, Ryan, and get into the slides. We do need to go into the calendar for next week, Ilya, where, this week there wasn't that much to work with. Next week, you could argue there's not much to work with. Of course, we do have our top event, which is oil still. This will be a running gag here moving forward. I hope people like the joke. We're doing it 2 weeks in a row on a Friday, Ilya, which brings us to our actual calendar, which is actually uninspiring.
No, this week at least we had, and it was clearly impactful.
Central banks.
That's the thing. Look at the price action now. It's everything to do with those central banks. This week was a week in two parts. The one before the marathon and the one after. And over about 24 hours there, this untethering between crude oil and central banks occurred. It is as if the markets no longer need crude oil to drive the inflation into rates, into risk aversion story. And it's because every single one of those central banks, of course, we knew the RBA was going to be hawkish. They were hawkish to begin with. So that wasn't the surprise. The big change was Europe. Europe now is a completely different monetary policy landscape. vastly than it was 48 hours ago.
Yeah.
I mean, the Bank of England is a case in point. They were expected to cut by 0.5% this year. They are now expected to hike by that much. The ECB was expected to do nothing. They're expected to hike by 50 basis points. All rate cuts priced into Fed funds futures for the Fed, gone for this year. No more Fed action this year. And the markets were convinced in 50 basis points even just weeks ago. So,
Ilya, not for nothing. CME Fed Watch tool right now is giving you a 41% chance of a rate hike by October this year.
And there we go. There we go. We are almost 50-50 to a hike, everybody. So is it any wonder that we're seeing what we're seeing? And next week, to your point, I guess the PMIs are something interesting because they're going to feed into more of what is going on here around the stage setting for all of this, right? Because a big part of how much of a problem is how much of a problem did we have before this? An interesting chart I looked at from OECD data. As of January, we went from, let's call it, at the end of last year and toward the middle of last year, no OECD countries with inflation rising. By January, 50% of OECD countries had inflation rise. So the question is,
central banks are hiking, and all the central banks that are RBA.
We heard it from the Fed in January, right? We read the minutes. Yep. We know where they were. They were saying, hey, we know you all think that it's cuts that we're doing, but we gave you the cuts. What can we do about demographics in the labor market? Not a whole lot. So here's some perfunctory cuts just to make sure we stay credible. And otherwise, no, we're looking at inflation. Have a nice day.
And you had Waller today throwing the towel on his rate cut bias. So did Bowman, noting how the recent shift in oil prices has them back to neutral for the foreseeable future.
It's good to see you, Chris Waller. Welcome back.
Well, he's no longer auditioning for Fed chair. Oh, yeah. Where is the market today? Stocks have dropped. Let's start there. 65.88 within the last 15 minutes. We did just hit session lows, 15 minutes, excuse me. This is a 1 minute chart within the last 5 minutes. We've hit session lows at 65.83. We're continuing to jostle along here right now, Ilya. A breakdown, even if we go down to something like a 5 minute chart just here, you could see how once we started to bust through the levels around 66.40 or so, overnight into the morning hours, breakdown, bounce back to former intra-day resistance turn or support, rather support turn resistance.
Yeah.
Lows move up into that former swing area, right? Market then sells off again and hits a new low. It's an ugly tape. It's an ugly tape on decent sized volumes, 1.14 million contracts traded, which good so far, good participation for this time of the day. The rounding top that we've now been watching and trading and eyeing continues to take shape, Ilya. Below 66.40 or so. That means the lows that we had at the end of November are cleared out. And the market is clearly, in my view, in the throes of a downside continuation effort that may be on day two, following yesterday's little defense.
Yeah.
But the momentum profile here just stinks, man. Stochastics just fell into oversold condition. This is a strong bearish momentum market. The pitch of the moving average is all turning more negative to signify a steeper rate of loss. Still, there's no reason to be a bull on this tape. There's nothing here to hang your hat on. And I know we've been chided, both you and I, for not being too bullish here the past few days. But when you just look at the way the price action is unfolding, I'm trying to struggle to find a reason why we should be dipping our toes in on the long side right now still.
I mean, why in the world would you want to catch this falling knife? On the 8-hour chart here, which is a good chart, I think, for my kind of approach of looking for medium-term breakdowns, this is a break that's already occurred. I mean, this is about as clear of a sell as it gets in my book. Now, I'm already short. In fact, I've already added into this move on the break near 6,800. So now I have to think about, do I want to add more? So I was already short from the tops near 7,000. Of course, we've talked about this. I've been attempting to hammer those October highs. Basically, we stuck there for months, so I had to roll a bunch of times. But thankfully, it swung lower enough times to be able to do it in a profitable way, kind of picking up pennies in front of the steamroller. But the latest exposure, I already added around 6,800. Now I have to decide, and I think I'm probably going to try to size it up imminently here, to add into my put verticals. But if I was looking at this with fresh eyes and I had no exposure at all, I would be selling this right now.
Yeah, I mean, again, for the folks out there that don't like that, do the inverse test to hold yourself accountable. This would look like a major bottom.
Mm-hmm.
It's bad across the board today. Telecom, which had been holding up here, we were talking about places to look in the market where there was leadership still. Telecom's down 4.12%. That's notable because it had been the leader to the upside. It had closed at a new all-time high yesterday, and that is completely erased. Even the semiconductors, which have been holding up a little bit better, even after Micron's earnings, those are starting to look a little bit more slippery, and a good reason to keep an eye on that chart. Uptrend from the April, the November, the early March swing low. That's starting to break. And Ilya, I know you're not a diagonal guy, so if this was a head and shoulders pattern, left shoulder, higher head, lower right shoulder, beautifully clean. Where does the rebound come into? Talk about a rolling top.
Yeah.
We break down through the 50-day, through the 1 week, through the 1 month. As we bounce back into it, it's now become resistance instead of a support envelope. It's now a resistance envelope here in recent sessions. The cornerstones, the pillars of the market that have held this thing up, they're breaking down. They're not looking that healthy here as we go into another weekend. You look at a MAG 7 ETF, for example, further underscoring the damage technically that's building up right now.
Yeah.
And why I'm still short vol, so to speak, and it's the IVRs and the S&P are still in the high 30s, so that's not terrible. And with the short strikes near 6,200, I'm not that spooked at the moment. But you're looking at the broader market, and directionally, if you're playing this, if you're not playing it for weaker stock prices at present time, you are trying to catch a falling knife with little rhyme or reason, as I think both of us are concerned.
Yeah. I mean, I think you got to really ask yourself what you want out of whatever exercise in hero ball you're trying to achieve here. And really ask yourself, why do you do this? Why do you participate in markets? Do you participate in markets to be right? Or do you participate in markets to make money? I was wrong about the stock market almost all of last year. Basically everything from February's meltdown, which I made money in, into March and April. Of course, I was short. I was looking for that to come back way too long. I was taking small, risk-defined positions at extremes where I could get 2-to-1 risk reward or better. And the moment that they didn't work to the tune of 1 to 1.5% of equity, I cut them. And I traded other things because being wrong is fine. Losing money is not fine.
The job is to make money, not be right. If you're right and you happen to make money, it's a good benefit, but I'd rather be wrong and make money.
Yes.
Right. So
yes,
that's what pays the bills here. So
that's what we're doing here.
Ilya, 2 days ago, we were noting how this rebound back into the former, neckline, so to speak, it gave you that bearish outside engulfing bar / key reversal. We had moved above the prior session high. We closed below the prior session low. It comes as a rejection of the 1 month. It gets you back below the 1 week. Momentum here is just so firm, and volatility is starting to expand once more. So you are getting, I wouldn't say panic conditions yet, but we are getting flush conditions in play now that we're seeing the chickens come home to roost on the supply chain issues, that no matter what the Trump administration does moving forward, we will have a problem. The war could end today. We are going to have a problem in the economy for the next few months with higher prices in a whole host of issues. And so the labor market, which was already struggling, is out. The only question is, Ilya, and this is the big question. and I hate to sound callous like this, as consumers, we are going to struggle. Recessions in the United States are not caused by consumers struggling. They're caused by declines in business investment. So the question is whether or not the supply chain crisis that we're facing now is simply something that rolls into higher prices, or it leads into something worse. For the United States, at least, we're probably just looking at higher prices right now, given the way our economy is situated. Asia probably is thinking more recession and significant demand destruction over there. But this is still very much a 2022 situation, Ilya. Like, what worked in 2022 for you as a trader? I think that's the question you as an audience member need to be asking yourself. What worked for you? What didn't work for you? If it didn't work for you, don't do it. If it worked for you, do it. You know what worked for me, Ilya, in 2022? Long commodities, short tech. Pummeling ARC, long oil, long gas, long metals, long wheat. Commodities up. Long duration tech down.
Yeah. I mean,
higher for longer. That's the higher for longer playbook.
That's the higher for longer playbook. Let's just remember why we're making this parallel. What was 2022 about? It was about the Fed aggressively raising interest rates. What are we seeing in the bond market right now that the stock market is responding to with such negativity? An aggressive rise in interest rates. That's what this boils down to. I know I am constantly banging on about the only thing that matters is the cost of money, but the only thing that matters is the cost of money. That's the first question you answer before you go and say, where should I put money at risk?
It's something that you say?
I think I may have mentioned it once or twice. And so the thing that, as ever, we have to watch here is interest rates. And we just heard all of the world's central banks tell you what their bias on interest rates is. Certainly the most liquid currency central banks. You've just heard from the BOJ, the ECB, the BOE, the RBA, the SNB, and of course the Fed. And all of them told you exactly the same thing. We don't know how sticky this inflation is going to be. We're concerned about it. Now, is there probably an overreaction here? Who knows?
Yeah. Of
Maybe.
Course. Markets always get too excited and run too high, and they always get too down and run too low.
Right.
And you mean revert over time.
So
but
maybe
there's going to be panic.
When gold started to bottom a little bit overnight, I covered my futures because I thought, well, you know what? That was a big crescendo narrative. And they ran up a little bit higher, then they failed. They came back in. I sold again. And that's going to be a thing that happens in this kind of an environment. You can't really tell where momentum exhausts just because it's gone far in a direction. So that can't be the barometer. It can't be like, oh, this has gone so far, it couldn't possibly go any further. Yes, it could.
Well, the demand destructions here, especially in Asia, Egypt is now doing curfews at 9 p.m. to conserve fuel.
Mm-hmm.
Schools in Pakistan are being closed to conserve energy. Philippines has instituted a 4-day work week.
It's the global equivalent of running out to buy out the toilet paper at Walmart.
I saw an awesome tweet yesterday. 2 weeks at home to stop the spread. Just 2 weeks at home, Ilya, we can stop oil from spreading higher. We can close the WTI Brent spread to the downside. We just got to kill global demand. Listen, didn't we get oil negative for 2 weeks in April 25?
We did. Storage costs got so high that the thing inverted.
So maybe that's
fun with derivatives, folks.
Maybe we just need a good pandemic. Okay, so EEM I bring up here on the screen. It's not a futures ticker, obviously, but EEM sitting at the highs that you had back in 2007 post global financial crisis.
Yes.
Steady march higher in all throughout the 2025 calendar year, basically. It may be putting in a major top down here, which thinking about the cascading effects of something like EEM breaking down, which EEM, that's that trend line going back to the 2007 high marked off there. Oh yeah, this is like really teetering all of a sudden. Yes. That's really teetering. So keeping that in mind, are we going to be looking at bigger problems over the next intermediate period in this market? Yeah, I'm willing to pay for a little bit of downside convexity here too. So like a $52, I'll just get long a $52 put in EEM. In fact, those are so cheap that I'll do 5.
This is the interesting thing. So I was talking with Todd Horwitz over at Bubba Trading earlier today, and he was pointing out, look at the oil futures. Clearly, there's cheaper oil down curve than there is currently. So this is a fear trade. This is risk premium in the near-term contracts. And we were looking at CLZ6, and it's like $77. So you've got an almost $20 spread between where you are now and even just the end of the year, right? And of course, central banks are now expected to be much more hawkish through the end of the year. So the market is saying
the hikes, man.
Right. So the market is basically saying oil could come down and you're going to have a rates problem anyway, as though the market is saying one of two things. And one is frankly scarier than the other. The first one, we're going to have an inflation problem for a while because this stuff is sticky now. It's out into the price of stuff. It's going to wash out for longer than you thought. But so crude itself can fall, but the inflationary impetus is now in the economy, and it's going to take some time to wash out now. That's the mild version. Can I guess the aggressive one? Yeah.
I think I know how you think.
Yeah.
If this is a short-term supply shock, by the time the Fed changes monetary policy to address it, it takes way too long, 12 to 18 months for monetary policy to filter through to the system.
Yeah.
So if the market is then pricing in higher probabilities of rate hikes, it's acknowledging the fact that those hikes, even with a 12 to 18 month delay, will be necessary to arrest the inflation problem that is now in inning number 1.
Could be nightmare scenario, which dovetails with what oil might be telling you. If oil is telling you that if the futures are $20 cheaper at the end of the year than they are now, what's the market saying? It's saying, well, you know what? You keep doing this, you're going to have demand destruction and a recession.
Almost there. We're almost there. We have to wait for bonds to turn the corner. Once bonds turn the corner, then we know that we're in demand destruction.
Take a look at ZN here and tell me that's not some sort of a corner turning situation.
Oh no. We have a we've crossed the Rubicon. And again, something happened in the last few days, right?
Yeah.
Something happened in the last few days where you saw the market start to freak out. Last week, it was the futures curve, the shape of oil shifting, where backwardation was ending. And it was like that monkey paw curls reason. I want backwardation to end. Okay, so front month contract is not coming down. It's because the rest of the curve is getting bid up. That's why the futures curve is getting flatter. Wrong reason, folks. That's why you pay attention to the shape of these futures curves, because they tell a story unto itself. A market pricing in a higher degree of certainty of a prolonged supply issue here. So Ilya, we got to get to the trades here in equities. What are some things that are doing? By and large, still directionally neutral on the longer term horizon, the 41, the 63, 62, short put spreads, fine. Would I put this on again now? Yes, but I'd still want to go wider. I'd want to take advantage of the fact that the market's pricing out a move potentially in the next 41 or so days down to 6,000, 60.50. And we could easily take advantage of the fact that you still think that there's a chance we're going to 7,200 anytime soon. Hold on a second. 7,100 short call spread here. All right, that's not going to pay you a ton, but we can start thinking about what a market looks like. The most recent pivot high here running into the 1 month, the 50, we can trail over the 50 here. So 68.75, 6,900. to maybe start building into a new short position. And hey, that's closer to 2.5 to 1, 3 to 1 risk to reward at a near 70% probability of profit. So scaling up shorts is still feasible. We did something a little outside of our comfort zone, which needing to do because this is an uncomfortable time a week and a half ago when the market was getting into the 6,800 area. Just, Ilya, did this look like this was something where we could return back to the lows? My assessment was yes, which is why we went inside the 21 days and purchased the 66.25, 65.75 long put spread here. It is at 0 days to expiration, so it is time to monetize this. I could stick around for a few more points. There's no reason to be greedy and risk a late day rally into the close and cut the gains down. So we're going to take this off, as it were, and look to redeploy. Please get filled and redeploy capital elsewhere in the market to the downside. But likewise with the Russell then, the Russell here, we've been trading on the short side here. Thank you. The short 2,700, 2,750, which again, the risk to reward's not fantastic right now, but would I do it again? We have that 50-day, that 1 month moving average starting to dip below the swing lows you have in February. The 2,600 area looks like a ceiling.
You're getting there where a couple days ago you had a kind of closing low, March 16th, and now it looks like you're about to close through it. It's a little bit dicey because you have some levels here along the way, but
yes,
even down to 243 initially, there's something there. But if you crack that, then it's good night nurse. So maybe you start small and you look for that break to scale in, or maybe if you can structure it such that the risk reward is undeniable, you just play for that level is going to break.
If we're treating the swing lows in February and the 2150-day envelope as resistance here, Ilya, going up into the RTY M6 contract, what are we looking at? 2550, 2600 short put spread, short call spread. Risking 3 to make 2 at a 65% probability of profit. Yes, let's add that in. So directionally short stocks right now. There's good reason. The technicals are there. The fundamental story's there. A lot of just late cycle type of trading situations when you're looking at how the market's behaving. I mean, what else can we say? The hikes are more likely than the cuts moving forward, and that's not where we were a month ago. And we have an embedded.
That's not where we were
problem.
A week ago.
A week ago, and you know what? Perhaps this is a lesson. The market was holding up going into the Fed meeting. It's like people were praying for Powell, the high priest.
We talked about this, right? We talked about this on first call. Why are the markets up? Why do they suddenly believe that oil is going to come off? It's not because they suddenly believe oil is going to come off. It's because they're ready to hear that because they have event risk coming up. They got to manage the book.
Ilya, the fact that the market rallied yesterday on Netanyahu being like, yeah, my bad. We didn't consult with Trump on attacking this Iranian gas field. Oops.
Yeah. Sorry. That was our own thing.
But like that shouldn't be a headline that sparks the market rally.
To me, it was substantive that he came out and basically came out on the side of defining the goals of the war as degrading the missiles and the nuclear capacity. I thought the most interesting part of that press conference, I watched the whole thing. I thought the most interesting part was when he was repeatedly asked, do you want regime change? And he goes, yeah, but we'll see. In other words, he made it clear that regime change is not a military objective for this campaign. That's not what they're looking for. That's what they hope happens, but that's not what victory is defined by. And so I think the markets took a little bit of heart there, but I mean, clearly they needed to hear something in the context of the event risk to justify moving the book. And you saw that already from Sunday into Monday, because all of a sudden Iran's foreign minister comes out and goes, the strait's not closed. It's only closed to enemy ships. The rest of you go ahead. And the market said, wait a minute, the strait's not closed. Forgetting that at the same time, that same regime is saying, we're not bombing our Arab country neighbors. while they're bombing their Arab country neighbors. So
that is part of the problem.
Right. So the market got its headline, and then 20 to 24 hours later, they're like, wait a minute. Yeah, the strait's closed.
Stocks meandering near session lows, Ilya. Directionally, this thing looks like a dog. And one of the reasons, of course, you mentioned is because bonds keep dropping, yields keep going up. There is a new rate regime in town. The last few days have officially confirmed it. So let's trim some hedges around here. Ilya, we were looking at something like in the ZNM6 contract. I'm in here with this short put spread. There's still some time. How does that chart look today? Do we feel good about that chart today? No, we feel like garbage with that chart today. The range has been broken. There is no reason to be in this. We take good with the bad, good trade there being hedged for equities going lower. But then it means that the bond position doesn't work out. Everything is moving in lockstep. So 35 days, we don't need to wait until 21 to call this one off. And we have to be nimble and willing to adjust our POV in this environment. But Ilya, we haven't looked at this from the yield side. We keep looking at it from the note side of the equation right now. It's starting to feel like there has been a more meaningful turn in rates here, where it looked like maybe we were bottoming out in rates. And now it feels like maybe we're finding continuation higher. That's not something we want to talk about, but we're finding continuation higher in yields. And the broader scope means that how much higher could interest rates go? I mean, I know this is a rates chart, but let's just pretend no ticker, nothing on the y-axis, nothing on the x-axis. Bottom left to top right, this looks a lot like a flag.
Yep.
Okay. So a bull flag in yields, a bear flag in notes, a bear flag in bonds. That is really concerning for a large number of assets. Are we prepared to go back to 7.5%, 8% mortgages? What is that going to do to the economy?
Yeah.
It's a good question.
Yeah. Well, I mean, this is the nature of the beast here now, right? The conversation that we've been having for past year really has been the markets look at the Fed and go, listen, we have an assortment of things here. We've got the tariffs. We've got maybe this AI thing is at the same time overcooked on the build out and underpriced for it might eat other industries. So we were all happy about everything here. Maybe this is not as happy as we thought in two different ways. We also have, on top of all of that, a situation now that could happen militarily. And all of it threatens China's access to oil, and they're the biggest importer. So won't you please give us some rate cuts? Not because there is a problem, but because we need insurance against all of this risk. And the Fed said, listen, we got a dual mandate over here. It's inflation and employment. Buying you insurance is not part of our dual mandate. Sorry. When we can justify it with real data, we'll squeeze off some cuts. And we got that when the markets started to tighten up at the end of 2024. We got it when the labor market got a little soggy at the end of last year. And otherwise, the Fed has been hands off. This is what the markets were afraid of. That what would happen is something untoward would shake the thing and rates would go higher or be higher than is tolerable for all the risks now buffeting the markets writ large, which is exactly where we are.
Volatility has jumped through the roof here in notes and bonds. There has been a regime shift.
Yes.
That's all there's to it. You could see the market a few days ago was trying to cycle through, okay, we're off the yearly lows. Let's see where this settles. With every passing day, with every well that is shut in, you are extending the reach of this crisis further and deeper out in time. It builds, and it's not a linear relationship. It's not like, well, for every day that we're closed, it's going to take another day to open. No, it's like for every day we're closed, add another 2 on. And in a month from now, every additional day is going to create like another 3 days of time to get back open. And and 2 months from now, it's going to be like another week to get back open for every additional day. It just compounds and compounds and compounds and compounds and compounds. So treasuries here have not turned the corner to suggest the inflation concern, the liquidity reach is over in the market yet. They are still signaling that people are worried about inflation. They're worried about the pass-through on oil, and they need more cash. Strong dollar, weaker stocks, weaker crypto, weaker metals. It's all part of the same story that this is continuing to evolve in a very alarming fashion. So Ilya, with another new low here in gold for today, with potential close at 45.74, with silver now below 70 again. Copper obliterated again, bouncing against that 5 and falling in a potential significant topping pattern right now. If copper didn't break down 2 days ago, you wouldn't be able to say there's a growth issue going on in the market right now. I know it's unsexy to say be defensive, raise cash, be careful. The macro flows in the future space are just, this is not good.
No, it's not good. It's not good. Now, is it likely that at some point you hit a sort of exhaustion thing and the market unclenches, even though we might be looking at regime change? Of course.
Sure.
Rallies in down markets are notoriously violent. So, yes. Is it possible that gold, of all things, looks at this ultimately and says, I wasn't really struck by rates in the dollar all through 2025. I was a deglobalization vehicle, and this makes that worse. And go back to that dynamic. It's why, while I've re-entered short the futures this morning, I covered them overnight. I let the market kind of shake out in European hours and early US, and then I sold them again because it seems to have shaken out to the downside. But I still am short the puts 56 days out. I'm still short a put vertical 56 days out because I'm looking for vol to come in over time, and I'm looking for there to be a kind of re-engagement of this is a non-sovereign value vehicle type of story, in at least in gold. Silver, I'm not so confident in. It's more of a sentiment-heavy type of thing.
Oh, yeah. I'm just trying to square up a potential trade here in copper because copper volatility is running up, and we are close to midpoints of recent trading ranges. I mean, going back to the washout lows after the tariffs were put on, put off, last summer with copper, all that nonsense. Yes. We do see the run up to the highs again here in January. So topping, yes, but copper also has been a little bit less sensitive than gold and silver have. And so while there are probably concerns about growth right now, demand destruction is being priced in. The closures of these schools, the limited work weeks, the breakdown industrials, telecom falling off, semiconductors falling off. I mean, all the chips are there. We don't need to make that case. The price action speaks for itself.
Yeah. I mean,
but if playing directionally neutral,
yeah,
there's something to do. It's not, I don't love the outcomes if we want to go north of the recent highs or lows that can give you a price. Risking 7 to make 1, 6 to make 1. I don't know if that's worth it. So, I mean, I'm going to be looking for an opportunity to buy gold, buy silver, but we are in the throes of a liquidity crunch, and liquidity crunch is at the start of any crisis. GFC, COVID, Ilya. Gold and silver didn't go up during the liquidity crunch start of the cycle. It was only once the liquidity crunch phase died down.
Yeah.
Then people go, oh, where should I put my money? Oh, I should put it in the place that's going to benefit from all of the money printing they're about to do to dig us out of this hole.
Yeah.
Before the next hole.
Well, there's always a hole. That's the nature of the beast.
There's always a hole. That's the nature of the beast. That's quite a quote, Mr. Spivak. Production team, clip it. Okay, so we haven't spent much time.
There is always a hole.
let's go over to, there's nothing to do in gold and silver here. It's all the same trade. It's oil right now. Gold, silver, oil have basically been moving tick for tick. As oil goes up, gold and silver are weighed down. We can just keep a 5-minute chart as we're at 97.5 here. It's a 65.9 IVR. That perhaps is the most frustrating thing about this whole situation. The fact that oil vol is still going down while price is going up, because it means that we're probably setting in a higher floor for oil prices for a foreseeable future. Ilya, what's the play here going into the weekend? It feels like tensions are running high right now. Do we look for a dip to buy oil on the other side of a market open on Sunday like we've done for the past few weeks?
I think the clearest thing on the board here is to look at the bonds, which are unmistakably breaking, and which are unmistakably breaking despite the fact that oil is still in a range. So I think when you look at the bonds, what you're seeing is the untethering, as we were talking about at the top of the show, of the story from immediate swings in oil over to the central banks have already said, and the change is in. And there's no walking back yields now. So now, in order for the yields to come in, and this is your risk on this idea, in order for yields to come in now, you need a recession. And crude oil might be telling you that there is that if you look at the later delivery months. But we don't know. And no one knows. And it's impossible to tell. Moreover, it's not necessarily a given that a recession is good or bad for this asset or that, depending on context and how policy is positioned. But given what you've just heard from the Fed and all these other central banks for how focused they are on inflation, they're probably going to be late to any kind of a recession response. They're going to wait to really see the growth collapse. So in the meantime, there's a clean breakout. And you can buy naked puts right now, and they're cheap. Never mind verticals. But you look at the bonds here, and you can size up bearish exposure, buying downside, so buying puts. The vol is not so crazy. And that's a trade that's sitting right there, and it hasn't priced anybody out yet. I just added more.
Depending upon where you look on the curve, you're getting a different story. You can see at the front month here, given some of the headlines, more tightness.
Yes.
CLZ6 is actually down a touch today, although it's worth noting that in the past few days, it's really jumped considerably, more so than the front of the curve. It's up over 10%. So over the past, was it the 20th now?
It's converging in the wrong direction, as it were.
Exactly. That's that shape of the curve is getting flatter out of backwardation, but in the worst way possible. Today, it's a little bit more backwardated, but oil prices are staying up. And that is the main driver of the market. Oil vol's coming in, but prices are staying up. Ilya, if stocks are sell the rip right now, then we are definitely in buy the dip mode here in oil still. And even if it's not buy the dip, maybe it's sell the dip, because if the floor in oil is going to be elevated, right? Vol's coming in, but oil prices aren't breaking lower. That tells me the market's of mind that the floor has been risen, and we don't worry about dropping back into the 70s, folks. We don't need a price in that sort of price action.
Well, and because the market seemed to have unlinked near-term oil swings from the bonds, you don't necessarily get a fix to the situation if near-term oil unclenches, because all of a sudden you, put a Marine detachment on Karg Island or some such thing. I'm not sure that would even work.
Ilya, if you're going to do the Karg Island invasion, do you do it during the middle of the week, or do you do it on the weekend so that the market by Sunday open has a chance to digest the headlines and find its footing to see where the dust is settled? We're going to take Karg Island. It's going to be tonight and tomorrow.
I mean, I think the MO for this administration and the way it does big things is it does them with the markets closed.
Haven't they? We said this after Maduro when the Friday is February 27th.
It's everything. It's the tariffs. It's everything. They Friday, like February to do 27th, things with the markets closed.
We called the episode The War Trade Part 4 because it's like, okay, we're going to another weekend. If you look at when they did the Maduro stuff, it was over the weekend. When you look at the Soleimani stuff, it was over a weekend. Trump likes to do the big foreign policy geopolitical moves on the weekends when the markets are closed so that we all don't panic, because seeing these headlines imagine if you were sitting here on a Tuesday, morning and you wake up, it's like the US has bombed Tehran with Israel and the Ayatollah is dead. Like the market that day would be nuts. Absolutely nuts. Okay, so CLK6, I still think, Ilya, we get dips, we sell puts, we get dips, we buy calls. I'm in at 27 days. I've been selling puts, which are now increasingly within the 1 standard deviation move. We talk about the floor rising here. A few sessions ago, Ilya, even when oil was at 96, 97, 98, the 1 standard deviation move for out 27, 28, 30 days was like down to $60. The contraction in vol shows the 1 standard deviation move is now about like $73.25.
Yeah.
The floor is rising right now.
Yeah.
Short-term CLK contract. You're not getting paid anymore for selling these puts. The market's of mind that this is done. You said at the start of the show, this is done. So that's the way to treat this. We don't need to worry about oil going to 110, 120 to make money on having a bullish perspective. We could take the wedding crashers point of view. It's not that you're going to go up. It's just that you're not going to go down anymore. So provided opportunities on pullbacks to sell puts, that's my view. We get a little bit of long,
just a little something
for some convexity like we did before on the last call spread. We do that too. But we got to just trade in and out on a short-term basis. So keep working it. No reason to think this is over yet at all.
No, there is no reason to think that this is over yet.
We get a pullback on the other side of the weekend like we have the last few weeks. Monday, the market opens lower. It trades higher overnight. Oil prices come in. I'm buying that dip. So we've taken profit on the short S&P, the long oil positions in the past 2 days. Waiting to see what happens on the other side of the weekend and then reestablish, because that's been the market cadence that's been reliable. So if stocks drop, bonds drop, metals drop, FX drops versus the dollar, because we do see a US dollar here that's getting a little bit firmer here on the other side of the central bank decisions from yesterday. It was a bad day for the dollar overall, as we have a significant BOE and ECB repricing towards more hikes. Yeah. And those hikes are built in. Like the market learned the lesson from 22. The Europe, the Eastern European, the Middle Eastern born inflation is going to impact Europe more than North America. And so the BOE went from having a cut on the board to 2 hikes on the board. The ECB, similar situation. The Fed is no longer the least dovish of the major central banks. It's now the least hawkish.
Yes.
Which is an odd. Yes. It's odd.
It's so very odd.
It does tell you something, though, Ilya, that on the other side of whatever liquidity reach this is, what happened in 22 to the dollar once we got through the bad part of the market around Russia's invasion of Ukraine? The dollar ran up for a few months there, but when equity markets finally bottomed out, and note these things go hand in hand, once the dollar finished rallying, that's when stocks bottomed in October. So that's right. The oil and the dollar. I mean, we have our line here at like 100 in the market. It's pretty clearly a line of interest in Dixie. Okay. This is the weekly chart going back 20 years. If you start trading more through 100 in Dixie, then you got a bigger issue on your hand and more confidence that this is a 22-like market where you're going to see the run up in commodities, the crush in long duration equity names, the software of the world, the AIs of the world, quantum computing. I mean, all that stuff is, if it's something Kathy Wood would buy in ARK's fund, then it's probably going to be something that's a little bit more sensitive if rates are getting squeezed to the upside as energy prices are embedded at a higher level.
I mean, that's right. And whether they're embedded at a higher level or whether what you're looking at here is the impact of the knock-on consequences, those knock-on consequences are inflation. I mean, take the case of Europe. The amount of European oil supply that flows through Hormuz is minuscule. Overwhelmingly, what flows through Hormuz is bound where it matters. China, Japan, India, Korea, rest of Asia. And that's just all Hormuz traffic. That's not even just oil. But here's the thing. What all of this is doing, among other things, is it's locking up natural gas. And Europeans have driven down their inventories to the weakest levels since 2022. Recall what happened then. That was the Russia-Ukraine war, where they couldn't get gas from Russia because they had to cut Russia off. And it took a while there, and there was a lot of concern about, are they going to have enough inventory? Is it going to be freezing in winter in Europe? Right? They don't use natural gas that way, but nevertheless, that was the concern. And so when you got now to these lows in inventories, what are you going to see over the summer? Once the winter is over here in earnest in Europe, and you no longer need heating. The Europeans are going to go out and they're going to squeeze the market because there's a bunch of nat gas. Never mind that it's bound for Europe or not. It was probably bound for Asia. But now the Europeans are going to come into this market that doesn't have this nat gas that was supposed to go to Asia, and they're going to try to refill their inventories. What's that going to do to the now diminished supply? It's going to draw it down and drive up the price. That's inflation.
Ilya, you and I have been rather bearish recently on everything going on in the world. It's rare that we find ourselves on the same side here, but the dollar is probably one place as we look at fresh lows here in S&P 6566.
Man, I'm happy I added. I sold more. I mean, frankly, at the top of the show here, I sold more.
Yeah, and so the Russell's down 2.3%. We added the short leg was popped on here today. Russell was actually filled. I got to get out of bonds and notes.
Yeah, here
don't
we go.
want anything that's not
the third leg here now in the money.
Well, there's a familiar cadence in the market right now, which is that at the start of the week, we get it through the weekend. The world didn't end when the markets were closed. There's a relief rally. Then you get to the middle of the week, things peter out. People start looking at the weekend. Do I want to be long stocks and short oil during the market being closed? No. So then there's the de-risking, the pre-weekend de-risking. It's been a familiar cadence. If you've traded through periods of geopolitical risk and war unfolding, it's not unfamiliar. It's very similar to what happened when Israel and Hamas and Gaza started going after each other in October 23, November 24, or November 23. That was like the first 3 or 4 weeks. That's basically what we did, which is 3 or 4 weeks, Ilya. I want to leave everyone with a little bit of a note here because we have to be willing to change our mind on a day-to-day basis, given the information that's in front of us. Something could happen over the weekend where you and I come out on Monday and go, the supply issues are going to be there, the inflation's done, but we've turned the corner, right?
And the price action will tell us that.
And the price action will tell us that. Here is something to keep in mind about the price action, okay? Deutsche Bank is sending around this chart today. They're looking at 30 different geopolitical events, the major ones going back to the 1930s, all right? Typically speaking, if we were to index the start of the Iran strikes to day 0 and how the market has behaved thus far, this dark blue line, it is behaving in line with how markets have performed under the average and median scenarios, again, going back to 1939.
Mm-hmm.
We're approaching the 3-week point. What did we do in the Iraq War, 2003? 15 days in, the market bottoms with a 5.2% loss. 15 days. 15 days is about the amount of time. 3 weeks of trading. 5 days in a trading week. 3 weeks is the amount of time that it typically takes. So if something changed the last 2 days in the market, Ilya, where this is now being priced for a much worse crisis, we will know next week. Next week is really the test for stocks. I mean, this weekend, this washout into the weekend, I don't know if I read too much into it as opposed just like, okay, people are de-risking into the weekend.
Sure.
But if we're really stepping into the next layer,
it's showing some commitment, though, considering where volumes are and the willingness to make key technical breaks on a Friday.
That is true. But if we're going to really This is not like the average crisis. We've not done the washout. Like, this is not the flush. Next week is the week where we really take another leg lower. But you know what, Ilya? If a week from now you and I are on the show, it's March 27th, and the S&P is like at 6,700, we're probably gonna have a different conversation.
Sure,
the contours,
and rightly so.
Ilya, I do see a note from the producers that they want us to wrap up, which I guess that's something we can do. Let's wrap this up. Where is my chart? There it is. Okay, calendar next week for Monday. Over the weekend, Fed Chair Powell, he'll be speaking. Add another little sprinkle in there about what's happening on the inflation front. We may have some new headlines to contend with come First Call Sunday, where you and I will both be. Until then, though, there's much more Tasty Live coming at you. Dr. Jim Schultz is coming up next here with From Theory to Practice. Ilya, you and I will be back in about an hour's time to wind down the trading day on Last Call, 3:30 Eastern, 2:30 Central. So be sure to tune in for that. We'll see everyone in an hour. Good luck trading. You're watching Tasty Live.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade. I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click, from micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Friday edition of what it is we are trying to do. Welcome to the apocalyptic edition of what it is that we are trying to do, man. Thank you guys for being here for quite possibly the final time. And so I thank you guys so much for being a part of the team and being a part of the network. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion. And man, you can celebrate if you're a bear. If you're a bear in pretty much anything, markets, metals, bonds, whatever, that you can certainly celebrate. You can commiserate if you are a bull, but I can assure you it will be a good time had by most for the final time. So Ryan, go ahead and bring us into the market here. Whew, man, yowzes. EME S&Ps down 91. If you get squeamish easily or you are easily startled, I would look away at this very moment. NASDAQ down 438. 440. You got the boomers down 450. You got the Russell 2000 futures index down 56. You got bonds down almost 2 points. You got notes down 21 ticks. You got oil up another couple bucks. You got UB40s even down. The Shifties down $50. You got the Hunt Brothers down a couple of dollars. Man, it is not good out there. Volatility futures up a little over $1. And then you've got the spot volatility. The old VIX has got to be up. It's got to be up a ton, I would imagine, on a day like today. Yeah, up $3 today, up to over 27. And so that might be the high of the day. Is that the high of the day from a volatility standpoint? I think it might be. Yeah, hold on. Yeah, the high of the day. Yeah, I mean, we're right there on the highs, man. 27.34 is your high volatility tick, and we are at 27.18. And so look out below. Whew, man, like we thought we had them yesterday. You guys saw on the show yesterday, they rallied them hard. Like, Netanyahu was out talking, the war is over, but apparently it has only now just begun. And so it's not good at it's not good out there. It's not good out there at all. If we look at the market, pretty much on the lows of the day, I think. Yeah, it doesn't get much lower than that. Yikes. Look at that thing. So down to, the lows are, the lows are right there. I mean, it was 65, 62 on the lows. I think that just happened like a minute or two ago. And so you've got EMI S&Ps hugging the lows. You got the NASDAQ hugging the lows. You got the NASDAQ all the way down to 24,130. The low is 24,114. Got the Russell 2000, I think, hugging the lows. Yep, right there on the lows. The low for the Russell 2000 is 2452. It's currently at 2454. And so, man, that is some nasty, nasty stuff out there. So, that is your market commentary. It's not going to help you very much, but man, it is not getting any better in the portfolio. Take a look at what is going on for us here today. Yikes. P&L day, not looking good. P&L open, looking even worse. And so here's the situation where the P&L day getting hit. P&L day bros got a little something in the old ammunition tank there. P&L open, not looking so good. P&L open bros got a little something in the ammunition tank as well. And so on a day like today, what do? Well, we're going to go through each position. I'm going to tell you exactly what I'm going to do with each position. And then I don't think we're going to allocate any new capital these days because we don't have that much capital left to allocate. And so I'll probably leave a little bit of buffer on the sidelines just in case the weekend risk takes us down coming into Monday. But remember, on a day like today, what do? To the best of your ability. And I know it can be difficult. I know it can be hard. You get emotionally charged up. We all do. I mean, you do, I do, everybody does. Business as usual. To the best of your ability, it's got to be BAU. Now, the only way you could possibly execute a BAU strategy is if your position sizing is in check on entry. Like the only way you could have any chance at actually operating objectively and doing the things that you should do in this scenario in terms of adjusting or not adjusting or what have you. The only way you can do that is if your position size is in check. The only way you can do that is if you have small enough position sizing on entry to where you're like, okay, like this stings a lot, but here's what I need to do to move forward. Like, here's the next step, kind of going down the pathway forward through the forest. And so, thankfully for us, I mean, obviously we're getting crushed today, and it's not amazing. The position size is in check across the board, I think. I mean, we'll go through each one, and we'll take a look at each one of these guys individually, but pretty much across the board, we're not overexposed. We're not overexposed, at the position level. We're not overexposed at the portfolio level. And so, thinking about things in those terms, it can make it a lot more... I mean, I hate to use the word palatable because if you are a bull, I mean, today is not super palatable. Today is not tasting too great. Neither did yesterday. Neither did the day before that. I mean, it's been a couple of weeks now, I think, of just straight. I mean, we're not talking albacore tuna with sweetened applesauce. We're talking chunk light with unsweetened applesauce. Chunk light in water with unsweetened applesauce. That's what's got to go down the gullet here today. So let's go through a couple of positions, then I'll see where you guys are. Maybe you guys can cheer me up. Maybe you guys can, I see you guys. Oh, FN Trades is making me laugh. BAU, buy it all up. Yeah, I don't know about all that, man. You probably should, though. I mean, just based on, isn't it Warren Buffett? You got to be greedy when people are fearful. Like, you got to be greedy when people are fearful. What do you think they are right now? Like, we're almost 7% off of all-time highs, right? I mean, blood is in the streets, right? I mean, I can see the four horsemen of the apocalypse in the distance on the horizon. I just don't know how much worse it could get. And by that, I mean, it could go down a couple hundred more points without too much difficulty, I think. But yeah, BAU is not buying it all up, but maybe it should be. BAU is business as usual. But maybe you guys could cheer me up, man. I see you guys in the house. I appreciate you guys so much. Ordenu's here. Man, Point B is here. Man, look at Blue Collar Options in the house. iPod Touch is here. My man, iPod Touch. There you go. Sam L is here. Finn West is here. Ranch is here. Man, good stuff. Jared Kramer is here. Let's get to as many of you guys as we can. First and foremost, though, EME S&P is almost down 100. And so let's go through this guy kind of top down, and let's kind of at least, I mean, we got plenty of time. Let's go through at least each position just briefly. Some we'll spend more time on than others, but let me at least give you guys kind of the state of the union for each position that we have on. So oil, this is our inverted triangle. Obviously, we're getting hurt. Obviously, on a day like today where oil is up, we're getting beaten up pretty badly. But I still want to stay a little bit bearish in oil. And again, this is the beauty of EME S&Ps are now down 100. Well, 99 and a quarter, so it's basically there. This is the beauty of being small on position size. This is the beauty of being small on entry to where, it stings and it even stinks. But if you want to stay in the trade and you want to maintain that directional bias, you can, because you have the position sizing, in check and controlled on entry. If you get into a trade where you're over leveraged and you're oversized, of course it's amazing when it works. Of course you're the smartest trader that's ever, grabbed a mouse when everything is going perfectly. But what happens when it doesn't? Which it inevitably will not at times. What are you going to do when things turn around? Like, what's going to be the move when all of a sudden it's not working so well anymore? And so that's why staying consistent, same trade size from one trade to the next when you're going good, when you're going bad, kind of through, the sunny days, through the stormy days. I think that's the only way you give you a chance. You give yourself a chance at being consistent in the end. So for MCL, I'm not going to do anything. I'm going to sit tight and, just give the P&L Open Bros a little something to chew on this weekend. I mean, they've got plenty to chew on. And they're probably thinking, Jim, we've actually got too much to chew on. We're having a difficult time figuring out what to chew on first. But there's a little more for you for the weekend. And so MCL, there's our MCL commentary. MES, so this is interesting. Because for MES, so we did the adjustment yesterday, right? I mean, you could go back, you could check the tapes. If I bring up my chains here really quick, you can see that, we sold this call on 3/19. And I'm no Julia Spina, and calendar math can be a little tricky live in the moment, but I'm pretty sure that was yesterday. Well, we sold this call for 32 points yesterday. Look at where it is today, even with the market down 102. Like, even with the market down 102, you've got this call has only come in by 6 points. And so this actually highlights one of the difficulties with short calls as a strategy, and even short call spreads for the defined risk version of the strategy. When you get the delta move that you want, like when you actually get, the market or the asset coming down, which is not what I want here, by the way, but for this side of the strategy, that's what would benefit the short call. When the market actually does come off a little bit, you can find it really difficult to get paid. You can find yourself in a spot, which is exactly where I am with this short call in MES. You can find yourself where it's like, man, the market's coming down and the market's coming in, and all of a sudden I'm just not getting paid on the strategy. Like, what is going on? Like, what gives? Well, remember, when it comes to your option P&L on any given position, it's one of three things. It's direction, it's time, and it's volatility. It's going to be those are your primary moves. I know there's a little bit of dividends in there. I know there's a little bit of interest rate in there for my row scalpers that might be watching the show today. Welcome aboard. I know there's only a couple of you out there. So if one of you have landed on this show, that's pretty remarkable in its own right. But Delta, Theta, Vega, those are going to be your three primary movers. So on a day like today where the market's down big, I mean, EME S&P is down 101, you're going to have a huge expansion of volatility. We saw that when we looked at the market commentary to kick off today's show. You got volatility futures are up, spot volatility is up, like volatility is on the rise. Well, that hurts all short options. Like all short options are going to get hurt in that scenario. Like all short options are going to get, beaten up from rising volatility, the short puts and the short calls. Well, the short calls are not going to get beaten up as badly as the short puts because that's a bearish delta play. Like that's actually a short delta position. So from a delta standpoint, the market going down is good for the short call. But from a volatility standpoint, volatility expanding is not good for the short call. And so when you look at a short call and you have a big down day, in the market, and you're like, man, why didn't I make any money? Like, why am I not more profitable on either that position if it's just a short call, or that side of the position if it's a bigger strategy like a strangle like we have on here? It's oftentimes because of rising volatility. It's oftentimes going to be because of volatility expansion, and that's exactly what's happening today. And so, it can be great for controlling directional bias, and it can be great for kind of balancing your deltas, but you have to understand, like, there's a gotcha around the corner right alongside every single gimme that is out there. So there's MES. Now, MNQ, we just did this guy yesterday, right? We did this one yesterday, I think, right? Let me see here. When did we do? Yeah, 319. There it is right there. So we did this trade yesterday. And of course, I wish we hadn't. Of course, I wish we had maybe waited until today to do the strategy, because you can see we're already down almost a couple hundred points on the MNQ short put. And so we're still out of the money, which, believe it or not, that kind of means we're not going to do anything. That means we're going to sit tight. We're going to stew in the bathtub of filth and just give this guy a chance to maybe get a little bit of recovery going into next week. Although obviously it doesn't look super promising at this point, but it never does. I mean, that's kind of the way that it works. But for MNQ, as hard as it is to do, I think we do nothing. As hard as it is to sit tight and do nothing, I think we do nothing. I think that is the move, because again, remember, if you sell out of the money premium and it's still out of the money, in my opinion, it's working. Now you may look at that and you may say, Jim, you're crazy. You may have just clicked on this randomly saying, this cat is crazy. How can this be working? You're hemorrhaging cash. Not only on that position, but all the others that I see in your portfolio. And you, sir or madam, are correct. But when it comes to an out of the money position, you need to remember that that's the track that it's on. The track that it is on is finishing out of the money. The track that it is on is, expiring out of the money, and we're going to manage it early, and we're going to do all kinds of different things along the way and what have you. But just understanding that, okay, this is the pathway that it is on forward through the forest, where if it stays on this path, then I'm going to hit whatever profit target I have. I'm going to hit whatever profit objective I might have for the position. And that's important to remember. And so for now, we sit tight. Now, it's quickly approaching the strike while we're on air here. So it might hit the strike while we're live. And if it does, then we'll obviously deal with that at that time. But that's MNQ. So AMD, we're getting hurt on AMD. AMD was interesting yesterday. It actually was a bright spot in an otherwise pretty dark and gloomy type of day in the market yesterday. But today, we're not so lucky. AMD down $6. Now, this is our, we have kind of resigned ourselves to the do nothing strategy on this position as well. And I think we're going to stick with that. As difficult as it is to do, again, it's just basically the equivalent of 100 shares in AMD. 100 shares in a $200 stock is essentially your, $20,000 of notional, $10,000 buying power, effectively, when it comes to if I were to hold the stock. The short put is not nearly as much buying power, and so that's obviously going to be a positive thing. But for AMD, I think we're going to sit tight, and we're not going to do anything. And famous last words, of course. So that's AMD. And then Dell. Man, look at Dell. This is crazy stuff. So Dell is like legitimately a flight to quality. Like, look at this. I mean, it's pretty amazing, really. Dell up $5 today. That is some pretty remarkable stuff on a day when everything is just getting punished. Like, everything is just getting taken out to the woodshed. Dell is up 3.5%. And so I don't know what's going on the Dell front. I'm not sure what's happening from a firm specific standpoint, but something must be going on with Dell there. That's some pretty wild stuff. And so Dell, I mean, we're right there at about our break even point on the upside. So let's give it a little bit of time to maybe cool off. Maybe we'll get a little reversal of fortunes next week where the market's actually up and Dell is actually down, because apparently it has a negative correlation with the overall market right now, which it doesn't really make a ton of sense to me. But a lot of times these moves really don't. They always do after the fact, of course. Ex post, it's all clear and it's all obvious. But in the moment, man, it's just not that clear and obvious. So Disney, we have a long put vertical spread on. And this one's actually working a little bit, but we're not quite at our profit target yet. In fact, we got a little ways to go. It is giving us a little bit of downside bearish delta, which is good, obviously, since we're mostly positive delta across the rest of the board. So I'm going to leave this guy on as a little bit of a, man, I hesitate to even call this really a hedge, because it's not really a hedge. It's just a tiny, tiny little bearish position. But we'll leave this guy on just to give us a little bit of a, diversification against the otherwise bullish delta. And so Home Depot, obviously we're getting hurt on Home Depot. This is no different though than, look at that. Oh, wow. We got a sign on Home Depot. I did not even know that. Well, look at that. Okay. All right. Okay. All right. So we're assigned on Home Depot. So this is really interesting. So whenever you are, so look at what happened. If you guys have been following the show, I didn't even know that. Like this is great. A teachable moment. It found us. We didn't find the teachable moment. It found us. And so when you get assigned on a vertical spread, which is exactly what happened to me here. So when you get assigned on one leg of a vertical spread, it's very helpful to remember that if you stay in the newly assigned position, which I'm probably not going to do that because I don't want to chew up all my buying power holding a $300 stock. And so I'm probably just going to close the position, and I'm going to do it right now with you guys here live on the show. So you can see when you get assigned, the unwind is usually just a couple of clicks. And we're talking about 1, maybe 2 clicks max to get out of this trade. But understand, the risk dynamics of the position are no different than they were prior to getting assigned. And so remember, like now, let me grab a different color. Let's get our glacier freeze here. You know, I've got my 100 shares on, right? Prior to this assignment, which must have happened yesterday after the bell, I was short a deep in the money put, right? I was short a deep in the money put and a deep I was short a deep in the money. Hold on. I had a deep in the money short put, and I had a deep in the money long put. I mean, obviously my vertical spread was totally underwater and, you know, things of that nature. So when you are assigned on a vertical spread, you're going to be assigned on the short leg, not the long leg, because the long leg, that's going to be up to you to do the assigning. You're not going to be, you know, the short leg is going to be assigned to you. And that's exactly what happened with us right here in this Home Depot position. So with Home Depot, we're in a situation where the risk dynamics of the position are no different than what they were. So the risk dynamics of the position are unchanged from what they were prior to getting assigned on the position. So if I go in here and I close out of the trade, you guys are going to see that. So we were assigned at, let me bring up my history tab. Let me think. Was I short of I think I was short of 375, if I'm not mistaken. This will be good because you guys will see how the risk dynamics. So the most I could lose on the short vertical spread was essentially the width of the spread minus whatever I sold it for. So the width of the spread, $10 in this case, which is what I had prior to this, minus whatever credit I brought in on order entry. That was my maximum loss. So if I look at my change here, you can see that I did this trade for 376. So I did the trade for 376. So that means my maximum loss is going to be 10 minus 376, which is 624. So my maximum loss on the trade is $6.24. That is my worst case scenario. Now you're going to see when I go through the unwind of the shares and the put after being assigned, I'm essentially going to converge on that maximum loss. I may be a little bit off because of bid-ask spread differentials and slippage and things of that nature, but it shouldn't be too far off of kind of the maximum loss that I anticipated that I would have with the short put spread. So $10 minus 376 is 624. So let's go ahead and let's see here. If I go in here and I do, wow, look at gold down 91. Wow, look at that. Silver. Hold on. Silver's down. Silver down almost $3 now. Yikes, man. It's getting, EME S&P's down 106. Yikes, iPod Touch nailed it. But let's go in here. Let's close out of Home Depot, and then we'll see where the dust settles. So I'm going to close out of my shares first because that's going to relieve all the buying power. You can see I pick up about $3,000 in buying power. So let's go ahead and we'll close out of the shares. So, okay, so we got filled on that 320.53. And then let's close out of our long put. So you could do these in the same click most likely, but I'm going to go ahead and do them individually just so you see kind of the two different parts. I actually pick up more buying power on the put than I did the shares. Okay, so 43.90. So let's go into, let's see here. Let's see if can we do this live on the show? I think we can. Let me go to my history tab. Actually, I don't need the history tab. Let me go to the chains. Yeah, it's 375, right? Yeah, okay. So this is the option that I was assigned on. I could go into the history tab and it would show that, but just to make things a bit more efficient with our time, I'm not going to do that right now. So the 375 put is what I got assigned on. So I essentially bought Home Depot for 375. So keep that in mind as we work out the rest of these numbers. So if I go to, I'm actually going to go to my activity tab because I think it'll be a little bit cleaner because I can just filter by Home Depot and it will kind of show me all the different elements of this position. So this guy, right? I don't need this trade. This is a separate trade. So what I want to look at is, this is my original credit that I collected. This is what I essentially sold the stock for. And this is what I got out of my put for. And remember, I bought the shares for 375. So what were my total credits collected? So it's going to be 376 plus 320.53 plus 43.90. And let's see if we can do that. Let's see. 376 plus 320.53 is what? 324. Let me think here. 324.29. I think that's right. 324.29 plus 43.90. Man, all the technology at our disposal, like just all the technological advancements that are right there for the taking. And look at us with the Final Jeopardy pen. Like, look at us just using and dancing with who brung us with the Final Jeopardy pen. So 324.29 plus 43.90 is going to be what? That's going to be 367. That's 368.19, I think. So I think this is, I think that's right. 368.19. Okay, so 368.19. Now we bought the shares for 375. Right? So if I take, this was my purchase price minus everything I collected along the way, and what do you get? You get less than $7. Right? It's like 6 something. And so remember, my maximum loss on the trade was $10. And so looking at this, did I do the math right on that? 43. Yeah, I mean, it looks right. I mean, that's pretty wild that we actually lost, that we actually saved that much off of maximum loss. Huh. Interesting. I was expecting it to be closer to 10. I think maybe I made a math mistake somewhere there. But anyway, this is the process that you would follow to figure out, what is my basis on an assignment? And I'm only about a 40 delta that I did this right, but I don't want to spend too much more time on this. But this is the basic idea. Maybe we'll look at that on Monday in a bit more detail. I got kind of surprised that we got assigned on Home Depot. Not that it wasn't a possibility. It's always a possibility when you have short options just in general, and especially in the money short options. Like when you have in the money short options, it's always, a significant possibility. But then down the rest of the list, I mean, IWM, this is the do nothing strategy. I mean, believe it or not, the stock's down $6 today. It's getting hammered, but it's between our strikes, so we sit tight, we do nothing. Lululemon, that's going out to pasture. Micron's going out to pasture. I mean, unfortunately, those guys were the expected move butterflies that we did for earnings. We did Lulu a couple days ago. We did Micron from Wednesday, and those guys didn't work out. We played Lulu to the downside and Micron to the upside, and we were over 2 on those two guys. And then Meta, I mean, this is a defined risk strategy, so this is the beauty of defined risk. On a day like today, your maximum loss scenario, your worst case outcome. That's really helpful. That's really beneficial on a day like today when it appears that there is no bottom in sight. And so that is, so for Meta, we obviously are not going to do anything. And then Starbucks is getting hit pretty hard today. And then, of course, Snapchat down 12 cents. And that's how you know it's really bad when Snapchat is even down 12 cents. And so those are my thoughts on the positions kind of going down the whole running the gamut on the portfolio. And I mean, I wish we had brighter things to say, and I wish things were working out better, but this is just the way it goes, man. This is 100% the way that it goes. And so let's see here. Let's see. We got CTW Buy Homes is in the house. We got, let's see, FN Trades. Let me try to find a surprise and delight. I see Blue Collar Options trolling me. Trolling everybody, man. Look at that. So Blue Collar Options, my bodybuilding trophies are actually not fake. They're not very good, and most of them are around last place, don't get me wrong, but they're definitely real. But I appreciate you there, Blue Collar Options. Thanks for giving us the watch time and popping in. Hey, man, even hit us with a like and hit us with a subscribe, even though you don't want to do it, right? Even though you're doing it from a trolling standpoint and from a trolling nature, do it anyway. That would be really, really helpful. And so let's see. Can I find a surprise and delight? I don't know if I can. Let me see here. Well, Rodrigo says, Dr. Jim, why are there so many order types? I only use limit orders to get the exact price that I want. Yeah, there aren't that many order types. You've basically got, like, if I go into, it depends on whether or not you're buying stock or whether or not you are, doing options, of course. But if you go in here, like if I do, if I go into Meta and I go to buy the stock, then you're in a situation where, my order type is going to be limit. limit market and then stop market and stop limit. Now, typically stop markets and stop limits, I mean, those are going to be scenarios where, you're looking to, cut losses on a position that you already have on or something of that nature. And so those aren't typically trade entry type of things. Those are going to be more closely aligned with positions that you already have on. And so that's what, a stop market means, here's the price that I want the stop to get triggered. And then once it gets triggered, just get me out at whatever price is there. And so that's a stop market. And then a stop limit is going to be a situation where, here's the price where we get triggered. And then once that price gets hit or once that level gets triggered, like I want to be out at that level. Like I want to be out at that level and nothing. I don't want a worse fill than that. Like I want to be out at that level. So that's, for the different, I think for options, it's just market and limit. You can't even do stop orders on options, I don't believe. Let me go into, if I go to Meta, just picking whatever stock I happen to have up here on the screen here. If I go to Meta and I sell a 545 put, oh no, it's the same. Wow, you can do stop orders on options. I didn't know that. I kind of thought it was really only market orders and limit orders on options. Okay, interesting. And so, so it's the same. I mean, the same rules apply there, Rodrigo. And so, And so I appreciate you, my friend. Hopefully that helps a little bit. Let me see if I can surprise and delay. Can I surprise and delay somebody else? Marching Walker says, Dr. Jim, please get short the market to save us with the inverse magic. I can't, man. My hands are tied. Like we're super bullish delta across the board. And that's kind of the nature of negative gamma. Like that's kind of the nature of the beast when it comes to, negative gamma and, things of that nature. And so, I can't, my hands are tied to the upside and there's not much that I can do. And so, but let's see, Rodrigo, I got Rodrigo. Let's see. Yeah, there's iPod Touch in the house. iPod Touch, man. You nailed it, my friend. And so nicely done. Very, very nicely done. Gold down 123. Man, I mean, so Dell is obviously a flight to quality, but when the actual flights to quality aren't flights to quality, that's not good, man. Bonds down 2 points, gold down 120, silver's probably getting crushed too. And so, man, this is not good. This is not good at all. But all right, let's go back to the beginning. Where are we at on the beginning? Let's see where you guys are at. So let's go to the very beginning. I see iPod Touch is in the house. What's going on there, iPod Touch? I appreciate you. Point B is in the house. What's up there, Point B? Let's see. Dr. Jim is here. You know what they say. In theory, the market makes sense. In practice, we call Dr. Jim. Let's get into it. I don't know if you want to be doing that these days, man, because I'm not doing very well myself. I mean, this is a pretty nasty day, as you guys can see. And so, but that's the way it goes. You got to take it in stride, right? I mean, this is just, this is kind of what you're signing up for when it comes to, selling premium and obviously giving your losers duration. I mean, even if you're cutting losers at 2x, 3x, what have you, like that's going to be pretty painful in its own right. Right. I mean, obviously, having some type of loss management strategy makes sense on the front end. Like, you've got to figure out what is my loss management strategy going to be? Like, am I going to be okay with no predefined exit point? That's generally my preferred strategy. Or do I want to cut it at 2x or 3x or what have you? And so kind of figure those things out beforehand, and it can be really, really helpful in terms of, when, it's all kind of, coming at you at once on a market like today. That way you have some clarity of thought. That way you kind of understand, all right, this is what I'm going to try to do. And this is what I'm kind of trying to go after here. And so, but yes, you are right there, Point B. You are 100% right. So, Samuel, just want to say thank you for everything that you do, man. I appreciate you so much. Guiding us through these crazy markets between the master classes and the B- jokes. You're definitely underappreciated, but not by us, man. I appreciate you so much. So thank you very much, my friend. I am so appreciative of you guys. And we couldn't do what we do without you guys. Like, it really, truly is because of you guys that we can even do what we do. So thank you guys so much for being a part of my show, being a part of the network. And so it means the world to me that you get so much value from the show. So thank you there, Samuel. I appreciate you. You are certainly part of the core position. You're in the inner circle. You're in the inside of the inner circle of the core position. And so I thank you very much there, my friend. And so let's see. Oh, Sam L says, Doc, branding is done. Barrel of pain trade powered by oil bro prime. That's hard to say. That's a tongue twister for sure. And so, yes, we're looking for a name for the local oil bros. I know. I don't know that we're going to go with that because that is really, really hard to say. But maybe we will. I don't know. And so let's see. Orgenu's in the house. Hello, Dr. Jim. Yesterday, you changed a short put into a short strangle. How do you choose which position to change? After you change it, do you roll it together or do you close the short call? Okay, very, very good question. And, generally speaking, right, like the short put again, the do nothing strategy, in my opinion, is incredibly powerful with something like a short put. Like, it's incredibly powerful. And you see me lean on that all the time with the short put, and that's by design, right? But if you want to control your directional bias, and if you want to kind of take some of your directional exposure off the table, then a natural thing to do with a short put is to add a short call. And that's exactly what we did yesterday with MES. And so again, I mean, we highlighted earlier how the short call is not really helping us as much as we would have liked on a day like today because volatility is expanding so much. But still, it does allow us to balance out the directional bias a little bit. It does allow us to now have premium working for us on both sides of the market, which also can be a very favorable thing. And so in terms of deciding what to do, like, so now I'm going to trade it like a strangle. So now I'm going to trade this guy like a strangle where I'm in the money on the put side. And so the same way that I would maybe treat or handle a strangle on entry that went in the money on one side, I'm going to do the same thing now for MES. And so even though I've essentially legged into the strangle, like, that's how I'm viewing it now. Like, now they're a package. Now they're kind of together, you know, for the sole purpose of trying to keep us above zero, essentially. And so that is the combined objective of the two options, and we'll see if they can do it. I kind of have my doubts, but thank you there, Org Danu. Danish Dynamite, the apocalypse has arrived. Yes, it has, my friend. Where is iPod Touch at? He is here. He is in the chat, and he is taking his victory laps as he should, because that was quite a call there, my friend. Sam L. Algo note, Doc's input equals higher probability of not doing something stupid. Yeah, maybe so. Although, I mean, as you've seen live on the show many, many times, maybe it's a do as I say, not as I do type of thing. Like, maybe this should kind of be like, all right, like, here's what I think you should do, but don't look at the man behind the curtain that's doing X, Y, and Z, because you may not want to do those things. And so there might be a little bit of that going on, of course. But blue collar options in the house. What's going on? My troll brother in the house. What's up, my man? I get it. Fade the trades. That's correct. But it makes me wonder how they're actually doing on the P&L. And nobody ever shows the P&L. Man, I always show the P&L. Whenever somebody asks me, I will show you. And I'm going to show you right now. We're getting crushed today. But we had a really good year last year. I mean, it evens out. And so you can see, I mean, today we're getting absolutely blasted. Getting totally blasted. But this is what you sign up for. And again, from a compliance standpoint, I'm not really doing this all the time. We really kind of can't. But if you guys ask me, I will show you. I will show you. I'm not hiding behind anything. And so there you go. And you can even see we're long a good bit of delta. We got a ton of theta working in the portfolio. And so, I mean, that's that. And, just like I said last year, we had a great year, right? But again, that's, the purpose of this show is for instruction. The purpose of the show is for education. I'm only trading live on the show. I'm not trading in the mornings. I'm not trading around Fed announcements. I'm not trading around binary events and CPIs and earnings. And, well, I am doing some earnings, obviously, but you guys get the picture, right? And so when I'm doing great, like, don't put too much stock in that. And then when I'm getting hammered, like on a day like today, hopefully you give me a little bit of grace. I mean, you might not blue collar because, you're kind of trolling us up here, but, hopefully other people will. But I appreciate you, man. And so iPod Touch, yep, iPod Touch is right here. Thank you, my friend, for making your presence known. That is some good stuff. Lobo Doe's in the house. How do I? Oh man, you got me. Oh man, some levity on a day like today. Lobo Doe's, this is it. Lobo Doe says, how do I sell options for income in a down market? Man, let me count the ways. Right? Oh, man, that was well done, my friend. Well done, my friend. Yeah, I don't know, man. The selling options for income bros, they might want to take a long weekend. They may want to take a couple weeks off, given these last couple of weeks. Again, you will not find a bigger proponent of selling premium than yours truly. You won't find one. You won't find anyone that is shouting the benefits and the merits of short premium as a foundational element of your portfolio more than I do. But still, right? Can't sell options for income. Right now, I know that there are traders out there that do it full time. That's not actually what I'm talking about. The problem that I have, and I'm not going to go too far down this road because I do want to get to a few more questions. But the problem I have with that is the connotation that's being linked up there and being synced with is this idea that it's like this regular stable thing. You just punch the clock and then boom, there's your paycheck. Like you just show up on the job site and then boom, you get paid every 2 weeks. Like, man, selling options is not like that, as you can see, from a day like today. And so, yeah, you got me there, Lobo Does. I wasn't ready for that at all. So Fred Johnson says, Dr. Jim, we have nothing but questions. I know, my friend. I wish I had more answers for you. I wish you had a longer show. We're actually almost done. But hopefully you're surviving out there, Fred. And again, days like today, unfortunately, days like today expose you. Like, unfortunately, days like today, they really make you, they really force you to come to grips with, am I really small enough? Is my position sizing where I really want it to be? And so, days like today kind of make you answer that question, whether you want to or not. And so, you can use this as a learning experience. I mean, hopefully, if you're a little bit too big, you, Fred, or anyone else for that matter, if you are a little bit too big, hopefully it's not too crazy big that you've done like really, really significant damage to your portfolio. Maybe it's just you're a little bit too big and you're like, all right, I need to probably start to rein this in a little bit so that I can better handle situations like this. Obviously that is going to, the good days are not going to be as great, right? And the bountiful periods are not going to be as bountiful. The harvests are not going to be as plentiful, but you're going to be better positioned, to kind of handle days like today. And so those are my thoughts when it comes to that. And so, so let's see here. iPod Touch, Dr. Jimmy, let's revisit last 3 weeks. Number 1, market hated being above 6,900. That's true. Number 2, market being above 6,800. Okay, now the market hates being above 6,700. 3 points make a trend. Denial is not just a river. That is correct, my friend. As I said before, you nailed it. You absolutely nailed it. And so well done there, iPod Touch. Very, very nice job. And so point B is in the house. Give me that trade. Dr. Jim on the dance floor again, marinating in the data while the Bears are still trying to find the beat. Oh, no, they found it. They found the beat for sure. There's no doubt about that. Because this is some crazy stuff out there, man. Some absolutely crazy stuff. And so let's see. Blue Collar Options wants to see the P and all the people on the show. There you go. Boom. Gave it to you. Got it. Done. Next question. And so Ordenu, I think the Gym Nation needs an hour-long seminar about futures and options on futures. I don't know. We need something, man. I think I need something. And so everybody needs a little something on a day like today. But yeah, we'll do, futures options. Especially the futures options part of that. That's all obviously. We do it all the time on the show. And so, I can sense that there might be a calculated risk coming up soon on futures options at some point in the somewhat near future, because we do use them so often and they are so buying power friendly. Like they are so favorable from a buying power standpoint that, that can be really, really, really good. And so let's see. Ranch is in the house. Hello, Dr. Jim. Question, I sold a put spread in Micron, 405, 410, that's 21 days to go. It's a red scratch. What if instead of closing it, I rolled it to 35 days to go at the same strikes, or maybe leave it on for a Monday pop? Well, this is your call. So a couple things. Number 1 is define risk, right? So whether you roll it or you don't roll it is not as critical as it might be for something that is undefined risk. So let's make sure we understand that, at first glance. But then number 2, if you can roll it for a credit, then that certainly is something to consider. Like if you can roll it out and give yourself more time and you can do so while reducing your basis along the way, that's definitely something to consider. And so I would certainly, give that some serious consideration, for just extending the duration and giving yourself a little bit more time, to do exactly that. And then as far as, waiting for Monday and waiting for the pop, that's going to be your call. Generally speaking, around 21 days is when we look to roll the positions, even the defined risk guys, because, we want to give more duration. We want to get more time. And that's the game that we want to play. We're not necessarily trying to get the exact moves on the exact days or things like that. And so I would probably roll it if you can for a credit. But if you can't, then, that makes sense. It would make sense to just sit tight. And so Finwest, good morning, Dr. Jim. What's going on there, Finwest? Dr. Jim, happy to be with you. Man, thank you so much for being here, my friend. I appreciate you so much. iPod Touch, 1,500 tech. Now that is a capitulation reading. Is it really? Yeah, the tick. Okay, well then that's good. That's good news, right? I think that might be some good news going into the weekend, potentially. And so, yeah, let's see kind of what happens over the weekend. And so, the last couple of weekends have been a little crazy when it comes to, news coming out and different things happening. And so, man, I don't know their iPod Touch. Hopefully you are right and we get a little bit of relief going into next week. Blue Collar Options, loads of real readers. There you go. Show their P&L on YouTube. Man, good for them. Good for them. And so Jared Kramer for the algo. The market is so something. This is a family show, so I'm going to leave that part out. But I appreciate you there, Jared Kramer. And so does the algo. So thank you, my friend. Sam, have a great weekend, Doc. I'm off today. Invited to a stand-up comedy. Peace, guys and gals. Man, have fun. I really hope you have a good time there, Samo. And yeah, enjoy the weekend. Hopefully the market didn't do too much damage to your mental capital or your emotional capital for that matter. Let's see. Griffin Jones is in the house. Griffin Jones scalped some CL0 DTE. It was awesome. Nice job, my friend. Man, Shooter McGavin in the house. Man, look at Shooter McGavin in the house. Scalping some CL in this market. Whoo, baby, that's some serious business, man. That is 100% some serious business. So nice job, my friend. That is some definitely serious business. I still see Ramsey's in the house. Hello, Doc. Are we crashing? What do you think? I mean, I think we're overdue for a bounce. I really do, and a significant bounce for that matter. Now, I mean, nobody knows, but I just know that generally speaking, when it feels like there is no way out, like that's like almost, I mean, I hate to say this, when it feels like there's no way out, that has proven to be a good spot to, kind of take the other side of the way the market is going. And so I'll just say that. And so going into next week, and this essentially cements that we're going 200 to 300 points lower, I would feel more comfortable being long than being short at these levels. And so that's, those are my overall thoughts. Take them for what they are worth, which it might not be very much. And so let's see, Mr. Pillows. I needed a break from the doom and gloom duo. Ooh, yeah. But they were right, man. You got to give them their flowers, right? I mean, they nailed it. They 100% nailed it. And so that's that. Man, look at Steve Aguilera. I see you guys. Patrick is here. Man, I see all you guys in the house. Man, Trader Nate is here. Joel James is here. Junior Mack is here. Man, I appreciate you guys so much, but I got to go and get you guys to Tim. E-Media is here. Man, I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
I'll just wait here until you ask. Forgiving me, forgiving you. We're all learning to live in truth. All I can do is what will love do? What will love do? Love will love you. What will love do? Love will love you. Love will love you. Love you. What will love do? Love will love you. What will love be? Love will love me. Love will love you. Love you. What will love do? Love you. Love do. What will love do? Love will love you. Love will love you. Love you. What will love do? Love you. Love will love you. Love you. What will love me? Love will love me.
Hello, everybody. Tim Knight here, and it's been quite a week. Feels a bit like Friday the 13th in the fact that we've had this hard sell-off. I hope it's not followed by the same thing we had the Monday following Friday the 13th. This is a tough one because we've been selling off quite hard on Wednesday and today, and it's really tough to know how light to get. Because broadly speaking, this week has been tremendously important. We have completed the top, and we've broken down quite nicely across the board, and it looks better for the bears than ever. But in this market, this is one of those days I wish I had a 5-hour show. But in this market, it's tough because you just get nonsense like we did yesterday, almost exactly 24 hours ago, when just out of the blue, you get a huge rally. And as with the last time it happened, I was, not stuck on the show. That's a nice way to put it. I love doing this show, but I was occupied with the show and couldn't really see what was going on. And I figured they surrendered or something like that. And it was just dumb. It was Netanyahu talking about, we'll open up the Strait of Hormuz. Seriously? You are? Really? People bought stocks based on that? This man saying that he was going to do this thing is just insane. So, but I will say, thanks to BB, I actually bought more puts yesterday on the Spider that expired today. And those worked out. As of now, they're up like 200%. That was my one loony trade that I mentioned. But I'm out of those, obviously. So as I stand here now, 45 bearish positions and a commitment level of about 185%. So it's been a really good week. And like I say, this is just discomforting because the long term is super clear, I think, and the short term is always vacillating and capricious and a little bit scary. So anyway, try not to overthink this too much. I do have charts for you, and we're going to go at a brisk pace. But yeah, it's been a very pivotal week. So here's the ES. This rectangle I've been pointing out as the top is doing a yeoman's job. And here's the thing, and here's why I'm tying myself in knots right now. We are getting very, very close to what could be an important support level. This had been resistance until it burst through here in September, and then we fell hard, it was support. We fell hard, it was support. We've been falling hard here for months, weeks and weeks and weeks, maybe a month or two. And again, we're getting close to that level. In point of fact, we have fallen 5,000 Dow points since Ms. Pam Bondi was shrieking at Congress. So, boy, that was quite the ringing the bell moment, wasn't it? Yeah, I think henceforth all Pam Bondi hearings should have a big marquee of the Dow's present price level behind her, updating in real time. That'd be a nice. But she asked, why not satisfy her? Let's give her the Dow behind. We can just put it right behind her. Also, the net change since the last time she did her hearing. So yeah, thanks PB. UVIX volatility. This, good God Almighty, I hate how it does. UVIX. Come on, there we are. That's having a nice little lift, and yeah, like I said. Volatility is on the rise for obvious reasons, and as we approach the weekend, of course, people get a little skittish. And this is the tug of war going on because the fact that trillions of dollars have been laid waste to asset values. President Brainiac is going to be trying to come up with something to say, or maybe even something to do to try to undo the damage for his billionaire friends. So God knows. What's going to happen. For someone like me, who's bearishly positioned, it's hazardous. Such moves, I think, will be fleeting in their effect. We've seen this happen for the 3 weeks that this war has been going on. Weirdly, like the first chunk of the week tends to be like recovery and healing time, and the last chunk of the week tends to be sell-off time. And so there's been, the war's over, we won in the first hour, things are going great, we should have more positive press, CBS should lose its license because they said something I don't like, et cetera, et cetera. And the market rallies, and then people rub their eyes and look around and be like, what am I doing? And then this starts to sell off again. So I think being steadfast is easy to say, not as easy to do. But in this market, when it is, I believe, a bear market now, the right way to go. Small caps, IWM, they were particularly strong yesterday, and they're particularly weak today. Of course, there's our island reversal gap. That started the whole thing. That was the beginning right there, that shooting star in the island reversal gap, and it's just been getting pounded away. And then the cubes are also down. Everything's down. It's just a sea of red out there, except for oil, of course. The cubes, all right, and let's just pause for a moment here. Let's just really emphasize this. The cubes are at crucial support. And we are right at the cusp of what could be a tremendous breakdown on Monday. Now, I have been tempted, but I've refrained from buying QID or SQQQ. These are leveraged bearish instruments against the NASDAQ. They've been doing great. And so, shame on me a little bit. I mean, I say shame on me. I've got 45 bearish positions, but still, those have been doing very well because it's just the NASDAQ hasn't to date completed the pattern, but boy, is it getting close. Speaking of, here are those items there. These are the ETFs. So here's QID, which is the ultra short, and it is breaking out beautifully. Were this just a plain old stock, this would be a very appealing bullish pattern because we've broken out above what's been a range since last year. And the SQQQ, which is the triple bearish, I believe, is blasting ahead over 6% today. And it's also burst forth above its own consolidation zone, its own range, the trading range it's been in. So, that there can't be many of you out there, honestly. I've got one bottle of middling bourbon out of the whole thing. And, so I guess people still don't believe that the market's going to fall. But it's falling. And, out of 10,000 people, one of them is going to be a bear because what's everybody else do? It's passive investing, 401ks and just Vanguard funds and all the rest of it's just kind of this continuous dumping into equities. So there's not many of us out there, hardly any. We could probably fit in a bus. But if there is anybody else out there, congratulations for the rare time that the market kind of comes to its senses and so, oh my God, look, we're plunging again. New lows for the day. It's just so dumb what happened yesterday, that spike. Just so dumb. What on earth? What on earth were people thinking? That this guy whose track record is spotty was going to just declare that the street would be open and things would just be peaches and cream at that point. Thank goodness I bought those puts. I mean, it was not an easy choice, but it just felt like the right thing to do. It's not just the U.S., of course. Country funds are falling hard. Here's Canada, for example. Here's EWC, and threw a price line down on the gap that happened between Wednesday and Thursday. Clean little top there. Failure of the Liberation Day trend line. All kinds of good stuff going on. EWZ, Brazil. This one tumbling in spite of oil strength, because Brazil, the biggest component of this is PBR, which is oil-based. But in spite of that, it's just been weeks of lower lows and lower highs. Micron, this had a tremendous report on Wednesday afternoon. after the close, and I shorted it on Thursday, and that's going well. It is closing at the lows of the week and down almost $26 right now. So I think the semiconductor bull market is also done, and Micron kind of put a bow on it. And so, we have SMH, for example. Okay. Chart. I want a chart. I don't want to trade. SMH, please. So SMH had been in an uptrend for the longest time, and it's failing nicely. And it also is not quite complete with this pattern, but I've got to tell you, this could be one of the most terrific bearish patterns this year, if and when it completes. Basically failing below that rectangle there would be marvelous to the downside. My own put ownership is SOXL. I've got a whole bunch of these. And this is the triple leveraged. I think it's triple. You'd think I would know, but I don't. But SOXL is down today over 10%. And so I've got a bunch of puts on those as well. Goodness, time is fleeting, isn't it? XLC, just want to mention in passing, this is the, I think, communications sector. And it's completed a very nice head and shoulders top as well. Again, a 5-hour show today would be really good, but because there's so much to talk about. SMCI is an amazing story. You may recall SMCI 2 years ago. This was the hottest thing in the world. Everybody was crazy about SMCI. It went up hundreds and hundreds and hundreds of %, and everyone was talking about it, and so much so that they threw the gates open and welcomed it into the hallowed halls of the S&P 500. That was about the peak. It's kind of like the cover curse. It has lost over 80%, I believe, of its value since then. And today it's getting blasted by about 33% because their president was, smuggling NVIDIA products into China, which you'd think he would find an assistant to do, but apparently he was using a blow dryer to weaken the labels and peel them off. It's like comic. But yeah, SMCI is getting just absolutely torn to ribbons. 1 minute left. Okay. I'm going to put on my sneakers and jump over all the short positions I was going to talk about. Come to slope. If you want to see those, I always talk about those. What shall we do to wrap things up? Let's just touch on Bitcoin real quick. Bitcoin's not down too much. Bitcoin's down just a little bit. And just to be clear on this, crypto weakness would throw fuel on the fire of the equity bear market. I'm not quite sure why Bitcoin's fairly robust right now, because it's only down 0.77%, which is a strong day for Bitcoin. But just keep an eye on that. If we start to see Bitcoin start to really sink into the lower into the 60,000s, even the mid 60,000s, that would be a big help to equity weakness. But we'll just kind of end where we began, which is the S&P 500. We started with the ES futures, and now we're just looking at the plain old SPY. This is down quite hard. We are ending at multi-month lows, many months actually. We're basically trading now where we were trading back in September, amazingly. So I got to tell you, I'm worried. I'm worried about a big bounce on Monday. So you wouldn't be crazy to take profits and just say thank you very much and get on out. I might lighten up some here and there, but I think that's a short-term disposition. I do believe that on a longer-term basis, measured in weeks and months, that we've got a good top on our hands. So I hope you've had a good week. Have a good weekend. I'll see you here on Monday. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
All right, so the X date on a stock, what does that mean?
The X date for a stock refers to the X dividend date, which refers to the dividend of that stock. So if you have a short in the money call and the extrinsic value is less than the implied dividend, then you would be at heightened assignment risk. So the X dividend date is something you want to make sure that you are aware of so that you can either roll or close that position to avoid that extra assignment risk. What does it mean when you hear the term pin risk?
So pin risk refers to options that are usually on a round number and the risk of a pin at the end of the day or the end of the expiration for that underlying. So this typically is applied to SPX or very liquid underlyings that have monthly or weekly expirations where the stock price or the ETF price or the index price is right at an even number where a lot of volume and open interest is.
Ilya, we're back. We're here for the final 30 minutes of the trading day, final 30 minutes of the trading week. This is Last Call. You're watching Tasty Live. I'm your host, Chris Vecchio. He's your co-host, Ilya Spivak. Ilya, it's getting ugly out there as the market is in sell mode as we get ready for another weekend where we can't manage our risk and pay attention to headlines out of the Middle East. S&P 500, might as well turn to the charts right away, Ryan. 65.42 here on the screen, 117 points lower, 1.75% and sitting at session lows. The NASDAQ off 2.2% right now. Well, that's the not the NASDAQ, that's the Dow. That's the NASDAQ, 24,042. Breaking to fresh lows for 2026. You have your Dow Jones at fresh lows for the year, and then the Russell not quite at fresh lows for the year, but certainly for the day and for the week. 2441. Your leader, you're a loser to the downside. 2.8% lower here on the screen. Ilya, it's again a bad day in part because the market is repricing inflation risk here with Treasury yields blowing up to the upside right now. 10-year yields jumped from 4.25 up to 4.3, nearly 9% right now. We can take a look at the long end of the curve with ZB and 114 near 115 yesterday, now down to 112.5. The dollar keeps running. The volatility keeps expanding. Oil prices are staying sticky here. CL up at 98.47 as we head into the weekend. We'll do a sector breakdown, but it's not really much of anything to write home to mom about. I'll tell you that because most of it is red, as it were. And you're seeing some of the bigger names that have been holding this market up in your telecom, in your semiconductor space, go by the wayside. So telecom, which had been up at an all-time high yesterday, is down 5.43% today.
Yeah.
Ilya, I'm going to take a breather here. The market is looking increasingly unglued and washing out as we head into I suppose another important weekend right now as it pertains to this war effort with Iran.
Well, now you look at this and you go, okay, couple things. Number one is this weekend risk, and are we going to unclench when we come back, assuming nothing god awful happens? Maybe. But what does unclenching mean? We've crossed some big levels here. Does that mean that this is a blow-off bottom? Nothing indicates it. Maybe it is, but nothing indicates it here. We have perhaps what is the most troubling part of all. that all of this is happening while crude oil is not really going there.
Yeah.
All of this was driven by crude oil. That was the story. That we're going to get an inflationary impetus and that's going to hamper rates. I was talking about it before there was an Iran war because crude oil had already started creeping higher. And of course, as it did, so did break-even rates, the implied inflation expectations in the bond market. And you could see where things were starting to steer, but it was oil-driven. You had to have oil go up in order for that dynamic to be there. And of course, once the war started, boy, did oil go up. What's happening here suggests it is a done deal that this inflation is now a longer-term problem in the system and that rates are now going to be biased against holding it. So that now the problem for central banks is, oh no, everything we've been doing since 2022 might get derailed here. Get the interest rates shield ready. We're going to have to fight inflation.
Well, you have a headline here crossing the wires, by the way, into the close as S&P now down 2%. Trump administration has made detailed preparations for deploying U.S. ground forces into Iran, which, Ilya, we noted on Futures Power Hour earlier, there is reason for legitimate concern about weekend risk here. The administration over the past several months has had a proclivity to do the big foreign policy things on the weekend, including the arrest of Nicolas Maduro in Venezuela, the initial strikes against Iran that ultimately decapitated the regime, at least temporarily, with the death of the Ayatollah. So you have a market here. People are just throwing things overboard right now as we head into a weekend where do you really want to be holding the bag on what could be the escalation of even a greater disruption come Monday? But your observation about oil not going anywhere and the markets then freaking out over the past few sessions, that perhaps is the most significant observation about how collectively everyone has now understood that something has changed. Yes. It's not just about the oil. It's not just about oil going up to 98 to 100. It's about the supply chain risk, the physical disruption, the molecules have stopped moving. Not just for energy, but for so many things. I just think right now, if you're a trader here, and we always talk about, volatility is low, keep your powder dry as vol expands, start to deploy capital right now. Yes, of course. But directional beta to the upside here is akin to catching a falling knife in this environment. So if it's risk defined, if it's looking to say directionally neutral, I understand that on a long enough duration basis so you don't get caught in a washout. But for the life of me, I've seen people say, I'm going to get long here, going to get long here, going to get long here. And I, as a technician, first and foremost, looking at the chart, show me where the momentum has any signs of positivity and recovery right now. And then we can start talking about getting long. But until then, stay away from the long side as far as I'm concerned. 44.2 IVR, highs of the day.
UGA is the gasoline ETF. And when you look at it, you get a very different story than what you see in oil. The two really don't track each other like that. And so you start to see what's going on. The uncertainty of the environment is creating premium, right? So even if crude isn't more disrupted today than it was yesterday or the day before, which kind of explains why it's sitting here, right? It's found a level. Is it more disrupted? No. But now you start looking downwind and you go, but gasoline continues to blow out. Why? All of the strain going on in the Gulf means refiners are not going to have stuff. So demand for refined things is going to be more vigorous. There's going to be more price competition. Same thing with anything refined out of gas. And so you look at all of this and you go, right, the reason this is still an inflation story, even though oil itself isn't moving, is the market has heard the central banks and sniffed out that this is a knock-on spiral that's not going to filter out of the whole of the economy now for months and quarters, which is why suddenly all these central banks are looking at an about-face on policy. I mean, in Europe, very dramatically so.
It's really interesting to see what's holding up and what's not holding up in this market. We've seen that the airlines have been hit particularly hard today, down 5.1%. We can go to Jets as the ETF to kind of do a catch-all, down 3.12, and the lowest levels that we've seen since the end of November here. Ilya, some of the fertilizer companies are holding up a little bit better than others. IPI is up about 0.5%. CF Industrials 0.3%. Mosaic's having a rough recession, down 9.3%. Yikes. Overall, though, there's not really much to hang your hat on in the market right now. It's a defensive posture. It's staying defensive. The only things that are up are XOP, XLE, and IYE, the energy ETFs. Which
natural gas is not a thing that I'm going to trade, but looking at it is interesting. And I'm looking at this as well as at UNG. There's a good amount of vol, and it's weird that this thing is standing still. It feels like if you were trading for vol expansion in a directionally agnostic kind of way, and you gave yourself enough time, this thing is probably going to break out somewhere.
It's probably going to break out somewhere. Where does it break out to, though? Natural gas, you'd think, would be doing a little bit better in this environment. I mean, there's no liquefied. There's the liquefaction storage for natural gas is substantially different than what you're seeing for oil.
Yes.
It's just not as much to the degree. So when you get these supply chain disruptions, it ripples through natural gas just much faster, more violently than it does through CL or even Brent. I'm still short some put spreads in here, which I think is. I know you're going to look at me and go, how many times have you lost money in recent months trading natural gas? What are you doing? What are you doing again?
Put the crack pipe down, sir. Put the crack pipe down.
It was a small position.
I started my observation with natural gas thing. Well, I'm not going to trade it, but just have a look.
There's a case to be made, and I think there's a case to be made when we look at across the energy sector that no matter what happens in the headlines, at least for these front month contracts, the NGK6, the disruption is here. They could turn back on the pipes tomorrow. They're talking about several weeks, 4 weeks at least, to get the pipelines repressurized before they can even be filled again for delivery. So in the life cycle of the NGK6, the CLK6 contract, are we going to return to pre-war levels? I just think it's highly unlikely right now. And I think for the foreseeable future, I mean, the modus operandi, even if on the other side of the weekend is you get another pullback in oil back down towards 92, 93, the recent oscillation low point of the trading range over the past week. It's the 20th, and last Friday's low is 91, and the highs were around 90, 100, and the lows this week were basically the same highs and lows. What if we oscillate lower on the other side of the weekend? Selling put spreads. I mean, you could see me. I've just been peppering these in at various expirations because there's a lot of vol on the board still, and even accounting for a loss of demand, which certainly it looks like there's demand destruction pricing starting to go on in some commodities like copper. Oil should be staying in the 90s, high 80s, low 90s as a floor for the next few weeks, even under the best circumstances. That to me is the safest trade right now. Either short stocks until the momentum breaks or long oil, but those are one and the same. So pick your poison.
Yeah. I mean, the only thing that you have to look at here is if oil is maybe done, then stocks, bonds, that's the same idea. There are some things here that are interesting on the long side, and they envision sort of the world to come in the sense that you see this dislocation now between the impetus from crude and inflation. And you go, right, okay, why is there the disconnect? Because the energy prices are looking baked in. We talked about earlier, there's still much cheaper oil at the outer contracts, but it's converging in the wrong direction. The outer contracts are converging up on where current contracts are. So the market is starting to adjust to more expensive oil for longer. And so you look at something like Brazil, EWZ, there's something interesting here. Now, this is a major oil producer. It is a major linchpin of the U.S.-China war in the sense that it benefits from there being this conflict. It's sitting right on former resistance, become support. And you can set up a vertical here like 90 days out, buying calls back to the highs around 40, 41, and the risk reward is a very comfortable 2-to-1. Now, you're not betting that emerging markets are going to do great. You're betting that Brazil stands to benefit from expensive oil and the US and China not getting along.
Yeah, the emerging markets are looking really difficult all of a sudden, given the fact that so many of these countries, you can pull Brazil out of the equation, but most of these countries are energy importers by a significant degree.
Exactly. You need energy exporters if you're going to be in EMs, because if you're an EM country that's an energy importer, to your point, you're in a world of hurt.
Dollar's stronger. U.S. interest rates are higher. Your dollar-denominated debt is more expensive. Your currency is a lot weaker. The cost of your imports went up, so your terms of trade are eroding. We're getting like all these little pieces of a currency crisis in a lot of corners of the world that will start to percolate. And there are 7 stages to a currency crisis, which we can talk about next week on Futures Power Hour. Unfortunately, not a lot of futures well, at least the majors are not going to be applicable for that. But if you go to the Tasty FX tab, there are a whole lot of the crosses, and a lot of those currencies could be on the chopping block here. So we need to be creative in these market conditions, Ilya, to find the opportunities right now. You and I have been finding opportunities being directionally neutral, if not outright, short deltas in the S&P 500, the NASDAQ, the Russell. Earlier today on Futures Power Hour, I more or less shifted my positioning in the boat a little bit, taking profit on the long put spread that was put on about 10 days ago in ES and layering in a new trade here in the Russell. That to me still makes a good deal of sense. Right? Even though the market's a little bit weaker here, we can go to 2550, 2600. We're still getting near a 2-to-1 within that 60 to 70% probability of profit threshold. If we want to express bearish views, I think being short the call spread here in this very risk-defined fashion is, better than being outright short. If only because if the market does bounce up to the upside, there's probably going to be some vol compression along the way. And if you're short the call spread, you could probably take it off with a little bit less pain if it moves against you. I hate these charts. These are the ugliest looking charts we've had in stocks in at least a year from when they rolled over into the April lows, 2025.
Yeah. I mean, this is not good. This is not good. And it's not good because it's, among other things, happening on a Friday with volume.
Do markets ever find a low on a Friday? Come on, right? Like markets never bottom on Fridays.
Yeah.
When has that ever happened? Near-term target, I mean, the triangle that we had in the S, I'm thinking about 6,400, 6,200.
Well, and by the way, why don't markets bottom on a Friday? It's worthwhile to mention to folks, Europe is closed right now. Asia is closed right now. We're the biggest market. They have not reacted to what we've just done. So when they wake up on Sunday, the first thing they're going to do is go, wait, where did Wall Street close? Sell, sell, sell. And then somewhere around lunchtime in London, where the US comes back on, we'll see if there's follow through. But unless there's some sort of miraculous headline over the weekend, I mean, yesterday, both President Trump and Prime Minister Netanyahu both had similar things to say, in the sense that both of them were trying to play down how long this war is going to last and try to narrow the goals, saying, look, we hope for regime change. We're not going to do it. We're going to try to set the conditions for it, but that's not how we define success here. That was the kind of, if you read between the lines, that's what was being signaled. And so maybe there's some incredible breakthrough over the weekend where not that anything's going to change materially, but we're going to declare that we're done and a great victory has been had.
Oh,
possible.
Trump is actually here. He's on the horn right now. He says, I think we've won, which he follows up with on opening the Strait of Hormuz, quote, you need a lot of help. He says that the Strait of Hormuz
yesterday he said he didn't need any help.
At a certain point, the Strait of Hormuz will open itself up. I don't want to do a ceasefire with Iran. We can have a dialogue with Iran, but I don't want a ceasefire. Maybe that's helpful. 65.45 here. We're a little bit off the lows here. A little bit of a bounce, Ilya. Low is 65.23 right now. If the market wants to give us a bounce going into the weekend, that's fine.
By the way, if you're Iran, you have no incentive to talk to the Americans here, not because you're winning the war, but because you're fighting a different war. You're not going to beat the Americans by military means here. They control the sky. They control the water. It's not the Iranian Navy that's blocking the Strait of Hormuz. All they really have to do is squeeze a drone or two or a missile or two at a commercial vessel, and the insurers won't insure the boats, and the shippers won't go into the strait. So they're just operating on the basis of chaos and fear and just creating FUD. So
late day,
and there's nothing that the U.S. can do about that level of FUD. It's too small.
No, it's almost like I mentioned to you earlier. We can get these comments from more leaders. The market bouncing on Netanyahu's comments yesterday. Like, what was that about? That just shows how fragile and sensitive people are. And he says he doesn't want to ceasefire. He says he wished the UK had offered their help earlier. I don't know. I was born at night, but certainly not last night. I'll tell you, Ilya, I recall him saying distinctly for the UK not to send ships just last week. So,
I mean, just yesterday, he was out there saying they came too late. We don't need anybody. Okay.
I'm looking at 13 days, April 2nd. We probably have a few more days of stress ahead. And then we run into the real issue of getting into the period where we start to run down our munitions. And you get to like full closure of a bunch of wells. I think this time next week, we will be at 13 million barrels per day shut in the Gulf region, which again means months and months and months of energy issues filtering through to other sectors. It's not just energy issues. There's so much more than that. I'm looking at this bounce opportunity to get a little, you want to give me 0.4 of a market that's higher? We can go 13 days out, risk 1 to make 3, a quick little, $350 for 900 trade. I'll take you. Let's see if you want to get filled here. If this market wants to give us opportunities to be short stocks and long oil, fine by me right now. I got to do it.
Yeah. I've just been sizing up a reverse iron condor in Nat Gas and looking at UNG as the vehicle to do it. It's there to be had. You got to get real tight, but 42 days out, 74% probability of profit and risk reward of about almost 1-to-1, a little bit better than 1-to-1.
It's not bad. The tech stocks are turning the corner today, though. This is probably we had the mega cap tech holding up, but supply chain concerns they are not immune from. Helium, to me, is the most interesting part of the story. This has been on our mind the past few sessions, given how much helium comes out of Qatar and how much of it goes to TSM and ultimately on its way to NVIDIA. TSM, for example, starting to creak a little bit more here below the uptrend from last April's lows. You can see the same thing in the semiconductors broadly, potentially carving out a bit of a top right now. The Mag 7 names are being jettisoned thoroughly, down 2.1% in this session right now. I'm trying to be the optimist here in this market because there is going to be a point in time when we get to the washout lows where it's like, okay, now's the time to start bottom picking and deploying capital on the long side. What is that signal? What is that signal that we need to see in markets to say capitulations here? We've had our washout. The kids have been thoroughly scared. We can now start to rebuild. When does that happen? What do we need to see?
I think most importantly, what you need to see here is you need to see the price action give you something other than an elevator down. And it's just not there. At the end of the day, this is now a sentiment thing. And it's moving not because XYZ event has occurred at the margin. I think you need the price action to respond. If the price action is ignoring news and moving where it wants to go, what does it matter what the news is? That interconnection or disconnect between the news and the price action is in fact a fantastic signal onto itself. That's something I watch very, very closely. How does the market contextualize the news? What is the price action response to the news?
Mm-hmm.
So, for example, when the Fed was relatively feisty, but then the Europeans were feistier, the dollar fell. So I looked at it and I'm like, okay, I get why this is happening. Yield spreads have been suddenly ratcheted against the dollar, but this is a risk-off market. If it hasn't broken down, wait a minute. And sure enough, we hold the uptrend in the dollar. So it's contextual. It's not absolute. This is, I think, what people oftentimes get wrong about the way they use macro, frankly, is they look at macro and go, well, no variable would have predicted blah, blah, blah. Let's look at 10 years back test. Well, that's just complete nonsense because without context, it doesn't matter. Macro doesn't work in a way that's the same every time. It's not a machine. Economics is a psychological science and a social science. So you look at this and you go, okay, let's look at the price action. Forget the news. If the price action is telling you something is different, then you look at the news and go, the market has become receptive to this rather than that. What does it mean that the market is receptive? And you can extrapolate from there.
Ilya, we have a minute or so left in the trading day. 65.60 here on ES, 101 points lower, 1.53% to the downside. NASDAQ off 2%, the Russell off 2.4% here. Your worst performing sector on the day, that's going to remain your telecom stocks, XTL. You also have your utilities down here. 185 right now. The Mag 7 names are getting slammed. NVIDIA down 3.25%. Micron off another, was it 4.8% right now? The markets are moving on the headlines, Ilya. For those that are pushing through trades at the last minute, it's risk defined. This is not the time to be naked long or short anything. Even if you're trading this bearish, the market is moving very fast. It is certainly in a more defensive posture. It is certainly trading like liquidations in certain sectors to raise cash and capital are on the menu. It's going to be a busy weekend, Ilya. And I think all eyes are going to be on IG's weekend Wall Street, weekend oil, weekend gold. I know that for the next 2 days, I'm going to be sitting around panicking. Just kidding. I'll be sitting around waiting for the market to reopen on Sunday night. I think we're going to have an enormous open Sunday night if any of the headlines today are indication. And we'll see if this was a flush, if this was the panic. First call on Sunday night, 5:55 Eastern, 4:55 Central. You and I will be back to pick up the baton right where we're leaving it off. So we're going to take a quick, we'll call it 49 hour, 55-minute break. It's been a tough week. I'm right there with you. I have not had fun, Ilya. I think you've had a little bit more fun than I have.
I've had tons of fun.
Not having a great time out there, but we're going to be here with you either way. So we'll see everyone after a weekend. Hopefully you can de-stress, catch you on first call on Sunday night. I've been Chris. He's been Ilya. Good luck trading. You've watched Tasty Live.
Have a good weekend, everybody.
know it, can you feel it?